Good morning. Good morning.
Or the other scenario, which I think has started being introduced, which is the concept of, in my scenario, I didn't mention a hike once, right? We haven't used the word hike. Yeah, that's because that's not gonna happen. Right. Yeah. But I think that's the other like ultimate fair case scenario, I guess. But it doesn't really. It's not gonna happen. It doesn't really even make sense to me, right? No. So like, because inflation goes up, but then again, you go back to the recession point, right? So it's like, how can they really hike into that? Well, because again, like Kevin Warsh is he'll be the chair of the committee most likely, but you have to have a certain number of votes amongst the committee. Even though he may not get all the cuts he might want, certainly his existence as the next Fed chair is going to take off the idea that we are not going to look through some inflation shock for a rate cut. Yeah, I mean, that's why it's not happening. Yeah, I mean, even if you look at the existing Fed members, none of them is so concerned about inflation. Yeah, at this point. Yeah. So, I mean, unless Miles talked me into it. We need 125 basis point cut for stocks to do it. I love what I love about this.
All right. Let's get ready for the opening bell.
Like we're getting it's like a flashback to me in time.
I haven't written this book. Maybe I won't write it.
Yeah, maybe I will. I'm just saying in theory.
This is the experience everyone should get. Go back to that.
I like it.
All right, what do we got? We got a minute and a half here.
Oh, it's not enough time to talk about sports betting. I just wanted for Dave to talk about sports betting. Kate Coppins, who is a well-known reporter for The Atlantic, who also happens to be a Mormon, got dispensation, sort of, reluctant dispensation from his bishop to engage in a gambling experiment on behalf of The Atlantic, where they staked him. He was still going to collect some of the profits, of which there were negative profits. And reading this, I'm already very skeptical of sports betting and prediction markets and their effect on society, and this made me even more so. And here is Jack Schaefer, sports fan.
Sports fan, and right in the peak demo of people that sports gamble and prediction.
And how much do you gamble? Do you gamble a lot on?
Occasionally.
Yeah.
Like $10. I know I have. Yeah. I think the patrons who win the Super Bowl for $10.
But most of the sports betting platforms make most of their money from 10% of the gamblers, who are the people who are all in it, and probably not all in a terribly healthy way.
Yeah. I just I'm not. We have 30 seconds, so we can't do the good or bad for society thing. But I'm not really there. There's a lot of stuff that's bad for society. The economy's growing. There's going to be more things that come up that are bad for society, right? This is how economies work as they grow over time. We get more money. Self-responsibility. Yeah. Yeah, you know. Social media is bad for you too. It's addictive. Don't want your kids on it. Sure. Yeah, that's great. Yeah,
that's just personal, just libertarianism. That's what we're doing.
All right. We got 5 minutes to go. 5 minutes to go. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It is Tuesday, the 17th of March. I was just talking to David this morning about Marty Zweig's buy signals. Not quite there yet, but we're headed in that direction. Okay, the last signal we had was in 2025. That was right after the tariffs. Okay, the rule is a move below that green line, 0.40, back up to 0.62 within 10 trading days is a buy signal. This will automatically trigger. That will automatically trigger. I didn't draw that on the screen. So that happened within 10 trading days after the tariffs. So we have a war out of the blue. Stocks drop below that level. Now we have to count. This is day 2, I believe. We'll say day 1. We'll say day 1. So today's Tuesday. Well, we'll go easier on Monday. So we can count it after next week. If by Monday, 2 weeks from now, we have this up to 0.62 or sooner, that would be a buy signal. What happens is you compare the number of stocks traded during this period versus the New York Stock Exchange total. And this usually identifies institutions when they're buying because of the size and the volume. All right, so we're watching for this to trigger again.
If you feel held back by the weight of navigating financial decisions, we can give you the tools to help you break free from what's slowing you down. Credit Karma gives you personalized guidance to improve your credit, savings, taxes, and more, so you can find your way to money. Intuit Credit Karma. Karma you can count on.
One app, every market view. This is Kraken. Over 11,000 US stocks and ETFs and over 300 crypto assets together.
All right, we got 2 minutes to go. 2 minutes to go. All right, we're about to open here. Less than a minute to go. Okay, futures are rising. 60-minute buy signal, 5, 15, 30, 60-minute buy signals on the futures. Okay, we are open. Profit taking. We're seeing some profit taking.
Extreme high took alert plus 800.
Okay, people taking profits. Okay, watching the New York FANG components. All right. Nice rally so far. There goes Robinhood. Bitcoin back into yesterday's price action. It was above almost 75,000. I think I did move above 75,000 last night, Bitcoin. So we'll see if we get a follow through on the bounce.
despite the funding $1 trillion headline loan, some of this was expected by the street, and the revenue growth rate from 2026 to 2027 for NVIDIA is flat.
Extreme high tick alert.
Anything flat as it pertains to NVIDIA, like nothing at all. You're also probably wondering if the next move in the market following last year about $100 a barrel is the ongoing war in Iran. I don't have a precise answer on this disclosure, but I will say this.
All right, we're watching profit taking, Amazon, Google, Meta holding a bid. Some profit taking, Apple, NVIDIA, Microsoft, Amazon, Google, Meta, Snowflake. All right, there goes the S&P. Spiders are on the move. NIMO went from minus 87 to minus 13.
Extreme high tick alert.
Okay, Breath is in favor of the bulls. Okay, everything is starting to line up now. Okay, nice rally. TSSI is higher. TSSI. Bitcoin. Bitcoin getting a bounce, getting a bid. Bitcoin.
Extreme high tick alert.
Extreme high tick. All right, so we got a little profit taking into that last 1 minute candle. Okay, looking pretty good so far. Okay, stocks that are up this morning, Dow Jones. We got the banks following through, Goldman Sachs following through. These will stay in the top 10 usually. All right, looking pretty good here so far. American Express coming off the low. IBM. All right, IBM looks pretty good for a buy. Stop underneath 248.
pointed out is that Meta seeing a 30% increase in their output because of these AI agents that they initially put into place here. And so they noted that with that
Hi, Tickler plus
layoff that's
800.
going to be on the table, not confirmed by Meta just yet, that can mean reinvestment in Meta's
All right, IBM looks good. NVIDIA, a little profit taking, did drop off. Apple's starting to go now. Apple going. Apple's strength. Let's keep an eye on Apple. Okay, my son's looking at this one too. 60-minute buy signal. Looking for this to turn back up. Looking pretty good, Apple. Okay, looks pretty good.
Not to be a jerk there, but isn't this an amazing moment for some of these big companies? They're seeing accelerated top lines because of all things AI, and they get to fire people with thousands to free up their cash flows or improve their margins. This is a perfect investment case, though. Besides, I also been in some of this problem, the dark universal, right? When it comes to layoff, you look at how many of they've actually hired over the last 3-4 years. Because I think it's a balance.
Okay, Tesla's off a bit. Apple's starting to move. Apple. See if we can't keep going here. Apple. All right. Apple trying to turn. SPY at the highs for now. Apple. Just be careful for any kind of profit taking. We need to see a follow through here with the futures. Up 44 handles. All right, we're starting to follow through. S&P futures starting to follow through. Okay. Okay, Microsoft looking for the follow through. For those of you trading Microsoft, I'm just listening to Dan Ives talking about the bottoming in the software trade. Okay, here's Microsoft still squeezing. IGV did fade last week. Now we're putting in a higher low. IGV.
Look, I can't wait for the next consumer confidence report. I think it's going to be so telling. We saw in the most recent one that these higher prices just a couple weeks after the war have already started to impact consumers. We get the Macy's earnings out, I believe, tomorrow too. It's not looking good for the consumer this spring. It's off the joke.
Okay, Tesla on the move. Tesla.
Consumer sentiment report just out last Friday morning. That was preliminary data. The final report will be out later this month. But we're already seeing that impact.
Meta.
On the way that Americans feel about the economy, particularly the impact that higher gas prices have about their ability to go and spend. And so many sources that I've been speaking with over the past few days have largely told me that the first thing to go, similar to what we have been seeing, is that discretionary spending. And that can mean bad news for players like Macy's potentially, or players like Nike, Dick's.
Okay, the New York Fangs, Apple, everything's going now.
Toys, anything that are like nice to have but not need to have. And this will just reaffirm
Okay, looking good.
focusing in on those essential goods, and essentially that all swings back to maybe Walmart continuing to do well as well.
Dan, last words here. You think robot guy? We heard Jensen talking about robots, and I've seen so many aggressive growth projections for humanoid robots. I mean, are you gonna have one in your house? I think Ned and Brooke may get one. Maybe I will get one eventually. But are you big on these things? And are all these robots gonna be powered by NVIDIA chips?
I think humanoid robots, I think I'll have one probably in the next 2-3 years. I think you're going to have one too, Charles. I've told you that. Like, I think this is, when you think about what's happening in physical AI, robotics, it's the next frontier. But it speaks to NVIDIA.
Robinhood looks good. Most stocks are higher. Okay, shorts covering. Palantir going. Watch Palantir. Palantir starting to go. Six-day consolidation. Okay, Palantir with a 6-day consolidation. Looking for that to follow through. Palantir. There it goes, Palantir. Okay, you can see the consolidation over here. This is getting ready to go.
Gift doesn't say I get you. Etsy. Yeah, it's been great. I saved hundreds when I switched to Progressive.
Molly Burke is passive progressive.
That's so great. Maybe even diabetes on that.
Molly doesn't have progressive and takes it out on those who do.
Because I make one.
I can handle my plan online or on the phone, whatever's easiest.
Sienna, she can be laid back. Let's eat, girls. I'm so happy to blow all your savings upgrading to a better room. Oh, look, they do have rooms with balconies.
Don't be passive progressive.
Lucky.
Switch to get good coverage and savings for yourself. High electric bill.
All right, looking for a follow through.
Call Air Mechanical. We provide installation of Amana heating and cooling units, repairs, and 24-hour emergency service.
Let Air Mechanical help get the monkey off your back. Call us today.
When allergies throw a sucker punch, the power of Claritin D punches back harder. Get fast, powerful relief of your worst symptoms, like nasal congestion. Claritin clears.
Jen amaba sus Game Hibiscus Hula Flakes, hasta que Brad se mudó y trajo algunos productos nuevos e interesantes. Y descubrieron que cuando se trata de mezclar aromas, ellos no solo se entendían bien, eran la pareja perfecta.
Okay, looking for a follow through in Palantir.
Mezcla y combina felizmente con Game.
When creating a home, you want everything to be just right. Whether it's our stylish bed.
Okay, looking for a move above 155 here on Palantir, 155. Palantir.
My wedding is coming up, and I want to feel fabulous. The new Weight Watchers app gave me a healthy, personalized plan that worked for me. I look in the mirror.
All right, look for a move to the 160 call wall.
Mixbook makes it easy to design a photo book you'll love. Just upload your photos, and Mixbook helps you pick the best ones. No design experience needed. No frustration. Turn your memories into something you'll love. Visit Mixbook.com.
All right, here we go. Thanks, Money, for the updates.
U.S. housing market is, for lack of better words, all up in that. Mortgage rates have come off the highs, but housing affordability remains a challenge for would-be buyers. That's if someone could actually go out there and find a home in the supply-short market. When I want to know anything about housing, I drop a line to the Property Brothers, Drew and Jonathan Scott. They have their pulse on all things housing, from hot markets to hot remodeling trends. They stopped by Yahoo Finance HQ earlier this morning for a chat.
You know, it's a time where Jonathan and I, you know, our faces are fading fast. So we're like, as many shows as possible. Yeah. So we've done over 1,000 renovations. We've done what 600, 650 episodes of our shows. But Property is under pressure is a whole other level because it's so relatable. The housing crisis and the pressure everyone is under when it comes to finding a home that actually works for your family. And we're kind of showing it almost doc style, where a lot of the stuff that used to happen off camera, behind the scenes, we're just showing it. You see everything. You see the crew. You see like last minute, you know, butting of heads. You see everything, and the stories as well. See, I get emotional. I see. The stories are so impactful as well and emotionally connecting for the audience too, because there are a lot of things you relate to. For example, our first episode is kind of lost everything in the fires in LA and Eden Fire, and so this is them trying to build back their lives. They literally lost everything of theirs from their home. There are other families that can't afford to live where they work, and so family members have moved together with their kids to have two.
Apple's still going, looking good. Apple.
Every story is very, very unique, but I love it because it's so relatable.
I'm glad you mentioned the housing affordability. I live in Long Island, and there was a house, a tiny house that just sold for $330,000. It has no rooms. It is as you walk in, it's just this blob of a thing. I mean, that's what we're looking here. That's a real crisis.
And I wish people would take it more seriously, because every time, you know, we're talking about affordability, we're talking about the housing shortage, and then a year later, we're talking about it again, except the stats have gotten worse. And so people need to start figuring out at the government level, we need to figure out financing programs that incentivize people to build affordable housing. And then at the everyday level, people need to understand affordable housing is good for the city. We need it. But the NIMBYs are the ones who block a lot of it and say, I don't want another, you know, apartment building, or I don't want to have low.
Okay, New York Fangs, we still need to get NVIDIA. Still need to get NVIDIA to turn the corner.
It's all this in a space where they can live and work in the same community. You look at, you know, the stats. I think that's sorry, I'm getting still my allergies. Excuse me. But the stats are saying like this is, in modern history, this is the worst for affordable housing. This is the worst it's ever been for first-time home buyers. And you see first-time buyers are 25% or less of purchases right now.
Okay, there goes Microsoft. Apple is ripping here. I hope you bought, Antoine. Okay, Microsoft. You're going to wake up pretty soon and realize that the software, that was a bottom.
There's so many houses in the country that the government keeps saying, okay, well, here's how many houses we have. But a huge portion of that is people who own second and third homes, and they just leave these extra houses empty, or these apartments empty. Yeah, sell these things.
All right, looking good. Markets continue to rally.
But that shouldn't come out of the inventory that we need. We're about 4 million houses short in the country from a healthy supply of houses. Yeah, and you look at the every time I'm going to talk, I'm going to clear my voice just for you. No, yes. We need to AI him out. So, you know, more people are renovating right now because they can't afford to get a new place. They couldn't even afford to sell their house to find something new. And so, you know, renovations have gone up, I think it's up 30 or 40% or more. However, with people with their properties that they're owning, I think that the hardest thing, the supply side, rates have come down, which is great. It makes people excited to buy. But if you have no supply, the rate change doesn't make that big a difference. So we need to solve some of these issues. More density.
Looking good, looking good.
The process for getting your permits and getting things in place is a little bit easier. Incentives for developers to do affordable housing is a huge thing. We come from Canada. Great incentives up in Canada that really help developers dive in. Here, we don't have any of that. And also, I think something that would be great is everyone's so scared of AI and what AI is going to do. if AI could shorten the permit timeline, that alone would make AI worth it. You know,
can do everything else.
if everyone wants to join me on my crusade to work with the utilities and the cities to reduce the wait on all of those services, there's so many projects where I have the project either ready to go and we're waiting for 6 months or 8 months or even a year.
Okay, nice little follow. We got a little bit of profit taking here
The only exception
at the moment.
building my fiance's family home in Palisades at Burn, my permit was approved in less than 3 weeks. They're so focused on making sure they can help people build back that they've created pop-up permit offices. But everywhere else, it's either the utilities or it's the cities that are delaying for no real reason.
So if I'm 55 and I want to buy my first house today, what advice would you give me? I'm not 55 to be clear.
I'm
not 55.
Yeah, no, I mean, so it's tough. Again, on property goes under pressure, you see this as well. People are finding creative ways to get into home ownership that they never thought they'd get into before. But I think the main thing is understanding what your needs are if you need to be in a certain area. The tough thing for a lot of families is that they have to be in LA or New York because of family or whatever reason their job. That's the tough thing. The other people that can float and be somewhere else, then go somewhere that's a bit more affordable that you get more bang for your buck and it helps. I know.
All right, so we're starting to get a little profit taking here on this quick pop this morning.
Is there a lot of people out there, even after the fires in LA or just in general affordability, they're taking advantage of homeowners. For example, when the Inflation Reduction Act came in, it had a whole bunch of incentives to help families create a healthier home environment, electrify their home. But a lot of the
All right, looking good so far.
manufacturers of the service. So I should not buy that overpriced tiny home. That $300,000 one-room house, not a good investment. You can move in with us.
I appreciate that. What mistakes you still seeing people make?
So right now, it is very important that people make smart financial decisions when they're buying or renovating a home. And some people will get so emotionally charged that they'll run in a direction, they'll do something that they're never going to recoup that money if they have to sell. There's something. I always say there's
All right.
renovations.
Let's see. Yeah, there goes Tesla continuation. Apple looking very strong. Futures still on a 5, 15, 30, 60-minute buy signal. Tick cumulative. Tick cumulative has crossed up.
Is there somebody that you could live with? Is there somebody that you can get into a place where you each have your own?
I'm not moving back in with my mom. I can't do it, guys. Like, it has not come to that. Oh my God, Jesus, no way. No. So what? If you look at Florida, like, what are the biggest trends you're seeing in the renovation market? Last time we talked, you were talking about how we're gonna have to remodel our homes at some point because of the baby boomers. We're gonna have to add railings in various parts of our home. Is there something else you guys are seeing now? If we do it back.
Okay, this looks good, looking good. This is what we've been looking for the last week or so. Talking people down from the ledge, looking for that opportunity. Speaking of opportunities, let's go see. All right, look at Apple. Okay, there goes Apple. 60-minute buy signal on Apple.
The enjoyable life, the entertainment side of it at home, great. But also, we're seeing a lot of people who are getting a place where they can they'll get a 2-bedroom home, but add a 3rd bedroom. In fact, we have that in one of our episodes as well. We created a bedroom for the kids because they were cramped in their home. So, I think of what's important to you and what you're looking at. I know you don't want to live with mom.
No, hell no.
What else would you squeeze in your house?
I like the Zen room. Yeah, I like the Zen room. Ideally, I walk in, there's a cold plunge, a sauna, and I don't know, maybe a bunch of stuff.
In your kitchen, you want it all in one spot.
Yeah, just all in one.
I want to sit on the toilet, a smart toilet,
Yes.
with my sauna right
Not
there.
going there, guys. Not going there. Since we last spoke, I think you are now on a Canadian hockey team. How is that like different than what you do? I've never been a hockey team.
Yeah, right. Exactly. I mean, it's business is business in many ways, but it is very different.
All right, Apple, nice follow through.
And Michael Bugler and I are owners. He got me into that. We're both from Vancouver, and it's sort of supporting our hometown. We love it. I mean, it's I've always been passionate. Jonathan would make fun of me over the years. I'm such a sport nut, and so to now be a part of owning a franchise is so exciting for me. And these kids, they're one level below pro. I mean, some of them they're going to
All right, looks good.
It's just crazy to me see the talent level that is at that.
I saw a post on X recently, lastly, that they might want to bring back the experts. I mean, who doesn't love the martial arts?
I mean, come on, why not?
Maybe get involved with that.
You know what I want? I want to bring back we won't be bringing back the Grizzlies, but I want an NBA team in Vancouver.
Yes.
As well. So that's I'll rally for that. We get basketball back.
All right, well, good to see you guys as always. Thanks for always making time for me. Good luck on the new show. Love the name. Love what you guys are doing. I love that you're not like renovating homes. You're taking people through the buying process.
You know what I love?
This stuff is hard, man.
Yeah, I love Mom. Say hi to Mom. She got hit hard in this interview. I think Mom's great.
She always watches. She already likes you guys. You don't have to do that, all right? Good to see you guys. I appreciate it. Thank you.
Happy birthday, one of a kind. Snack loving, always elegant. Dog mom to Alfie. With gifts from Etsy.
Gifts and SAG at you, Etsy. It's so much easier to hit a perfect shot when you sit back and just let the plum do the work. I wish I could be here all the time.
Okay, looking good.
Fixing that burst pipe should be all set. Good thing you're protected 24/7 with your home and auto bundle from Progressive.
Oh, sorry. I'm just trying to figure out the right caption to post about this.
Maybe something like, I have protection, just need a lifeguard.
What about that emoji with the shocked face?
Or maybe flooded with emotion.
That's too much. Try it. Tuesdays are cray.
Yeah, technically you're not supposed to everything that happens online.
Okay, let's see what these next dips give us. Give us any opportunities. All right, nice follow through so far. Oracle, let's see, Oracle. Okay, looking for Oracle to build off of this higher low. IBM, also watching IBM. IBM with a higher low. Okay, IBM looks really good here. Okay, you got your stop underneath. IBM, I'm going to buy some IBM here. Okay, stop. IBM. IBM looking good.
We are moving in great stride this March at Seaside Furniture Gallery and Accents with great savings of 15 to 25% off our everyday low price on in-store furniture only. Mattresses and clearance items are excluded. And with our large selection of lamps, pictures, and accessories, you'll save more with 40% off our everyday low price. Hurry in, this great savings sales event ends March 31st. Visit our main showroom in Mattress Gallery in Little River or our coastal home decor Gifts and More store in North Long Beach. We're open 7 days a week. Seaside Furniture Gallery and Accents. Love our customers.
IBM, looking for this to follow through.
To gamers for playing and testing their game. Chess. Read that again. Stop just playing the game and start getting paid for playing.
Okay, software bottom. IBM is most likely going to continue. Let me see what I want to do with IBM. IBM, maybe take the 255, 265, something like that, vertical.
And the NASDAQ composite up about 0.75% as well. As we know, the markets have really been taking their cue from oil prices. Today, oil is up, but stocks are also up. So it's an interesting phenomenon compared to what we've been seeing. That said, oil oil has obviously come way down from the most extreme levels of $100 and more, where we have seen it petrol the past couple of weeks.
All right, so far, all right, futures pulling back a bit.
And if we look at what is
Okay, let's keep an eye on Trace to see how that's doing.
sectors within the S&P 500, this is a 1 month, so we're going to switch on over to today. Energy stocks are helping lead the game.
Okay, hedge flows just turned back down.
The higher oil prices are benefiting one group, but it's a broad-based rally today. It's not just energy pulling us higher.
Okay, we got resistance overhead around 67.70. We're getting rejected at this level, 67.50 for now. Looking for a grind. If you've been reading the Gamma update, we're looking for a grind up to 6,800 by the end of the week into OPEX.
A lot of them bouncing back here. So again, interesting to see this kind of activity. But going back to something else that we are watching closely that's definitely having an effect on the markets, and that's NVIDIA's GTC conference yesterday. What's interesting here from this heat map is that most of the NASDAQ 100 is in the green today. And NVIDIA was in the green yesterday, but not by much, just about 1.5%. Today, the shares are little changed after its highly anticipated GTC conference. It rolled out a number of product updates, and also a very large number, $1 trillion. That's what CEO Jensen Huang says the company's going to generate.
Okay, looking for the follow through.
Between 2025 and 2027. So let's dig more into that specific.
Fly, watch Fly.
Founder and CIO, and Gil Luria, D.A. Davidson, head of technology research. It's good to see both of you guys. And, you know, there were a lot of product announcements, but I want to start with the number.
FLY,
$1 trillion, as I mentioned.
aerospace.
Looking through some of the analyst commentary, it seems
Okay, this is looking good. It's trying to get through this area. Last 3 days, we've tried to get through this area. We had sellers come in. This is FLY, Firefly Aerospace.
Well, thanks for having me, Julie. I think the big thing for people to understand is that the $1 trillion is not their revenue projection or the final number for 26 and 27. That's just what they have in backlog so far. So when you look at the current revenue projections and compare it against the $1 trillion, it's really not a big surprise. But if this is just a starting point with further upside, I think that once people realize that, that's going to drive further upside for the stock.
Is it, Gil? What do you think? I mean, you know, you would think that it would, but it's been awfully hard to move those NVIDIA shares.
Yeah, I think it doesn't matter how high of a number Jensen Huang said yesterday. The market is just not willing.
Firefly, looking for the follow through.
Data center build out will continue into next year. The market is
Okay, NVIDIA is still selling off a bit. Apple flagging. Futures starting to dip and starting to bounce right now. We keep an eye on the hedge flows. We're looking for a hedge flow signal after 10 o'clock.
Belief, and one I think Jensen Huang, of course, would probably push back pretty heavily against. Ivana, you're there at GTC, so you were there as we were getting Jensen rolling out some of these other announcements. I mean, the number probably gets the big headline, but it's really a product conference when all is said and done. And I'm curious, being there, what do you feel like is the most exciting, or what is they're the most buzz around as you talk to people there?
Well, I think there are two things, right? On one hand, you have a lot of new chip announcements as part of the Vera family. I think what we're moving towards is each specific application is going to be optimized on a specific chip. So that was pretty interesting. And then the second thing is the implications that this has for the value chain. I think that's where really we're seeing a lot of the upside. We're going to be at another conference today, OTC, for optical components. We think that the components are really going to drive the next leg of improvement. Whether it's NVIDIA components or some of the competitors, I think companies will be able to choose. But that's where we are really seeing a lot of the big upside numbers.
All right, NVIDIA continues to fade.
NVIDIA, which we believe is going to be more of a compounding story.
Well, just to follow up on that, Ivana, it's interesting because we are seeing, for example, shares of Coherent and Momentum pull back a little bit today because we heard some commentary from Jensen about that copper is still going to be important, right? And those are more optical components providers. Do you think it's going to be sort of an all of the above approach, though, that the demand is so great that
Futures looking for a bounce, see if they get any kind of follow through here. Palantir flagging, stocks are flagging. Okay, let's take a look at some other indicators like junk bonds and see how this is doing. Junk bonds beginning to see buyers coming in. Junk bonds, this looks good. Breath continues from yesterday. Breath continues. Day 2 buy signal.
That NVIDIA is talking about, whether it's Nemo Claw or it's now LPUs, language processing units, is again this maybe quest, whether it's probably explicit, I was going to say implicit or explicit, it is explicit, to try and get its clients very reliant on its full system, right? And so I'm curious what you think of that strategy and how much what we heard yesterday sort of again contributes to that.
Yeah, I think that's exactly right. Up until now, really, NVIDIA's had a very GPU-centric focus, but more of a one-size-fits-all. And now, to build on what Ivana was saying, they're saying, no, there's multiple paths forward. We could use copper, we could use co-packaged optical, more variations on the software. And importantly, I'd say the most important takeaway from yesterday...
Okay, breath looks good. We just need futures to bounce here. Let's see what IWM looks like. IWM coming off the low. Looks pretty good for a long back to the 50-day moving average. I'd give myself at least a week or two. Oracle turning up. Palantir looking for this follow through. FLY continuation.
Critical to that, and that's what they introduced yesterday, was how much more effective they're going to be at inference because of the integration of Grok technology.
Gil, do we know what the margin profile of those kinds of products look like versus the GPUs?
Well, NVIDIA's been able to keep
Firefly trying to go.
70s throughout this cycle with manufacturing delays, with implementation delays, with new product sets. They have all the pricing power, and that means that they're likely to be able to hang on to those level of margins, especially as we are in the aggressive part of the build-out.
Ivana, I want to go back to something that Gil was talking about this belief by the market that we're at peak spend in terms of CapEx. And I'm curious and whether you agree that we still need, or the market needs, whether you guys believe in is one thing,
Let's see.
the market believes in is another thing. And what kind of proof points might be necessary?
Okay, Firefly looking good. Futures looking for a follow through.
Further CapEx increases from the hyperscalers. That's really the key number to watch because they're over 50% of NVIDIA's business. So
Okay, Bitcoin did push above 75,000 last night. We're looking for a follow through in Bitcoin after this early morning dip. Okay, we had a dip this morning. Let's look at the 60-minute. Okay, we want to see this get back above the 20 EMA.
Gil, just sort of more broadly, not just obviously the infrastructure builders like in NVIDIA that have been sort of sideways, right? Although sideways is the best case. A lot of companies in the AI stack have been down. we've talked about this a little bit before, and especially now that there's so much noise from the war, for example, in Iran. What do you think is going to kind of change the narrative, if any, and do you think that's coming anytime soon?
The more we use AI, the more it becomes compelling at the consumer level, at the enterprise level. The more pre-sold these data centers are going to be, the more the big data center companies, Microsoft, Amazon, Google, Meta, will continue.
Okay, futures continue to fade. All right.
And we had breakthroughs with ChatGPT, and ChatGPT got a lot better. And now we've had.
We moved above the London session high. Now we're retracing some of this. Hedge flows continue to drop off again. Okay, stocks are pulling back. Okay, watch Apple. Apple right here, pulling back to the 20 EMA. A buy somewhere around 254 would be good, probably. We'll see where it bounces first.
Thank you so much. Appreciate it. Coming up, a fresh wave of attacks sending oil prices higher. We'll talk about the outlook for the oil markets and for oil stocks next.
Microsoft retracing all of the morning gains. Better entry on the pullback if it does bounce here. Watching Microsoft. Microsoft pulled back. Okay, Microsoft's trying to turn. IBM. All right, it's retracing back into the first candle. Looking for a better entry. Okay, on the retracement, looking for B and C pivots.
There's a rhythm we survive. The kind of quiet that only comes when we're not trying, pushing, fixing, just well playing. Everything feels lighter, simpler. The game finally feels like ours.
All right, Apple continues to pull back. Looking for the follow through. Apple, IBM is almost oversold now. Let's see with Apple. Okay, RSI continues to move lower. Microsoft, same thing. Microsoft pulled all the way back. RSI is now oversold. Wow, that was a big one. Look at that retracement. Doesn't pay to chase. All right, retracing all of the morning gains. Looked really good, trapping a lot of bulls at this point. We'll look for a bounce.
There's a lot to parse through in terms of the headlines, but bottom line, it does not seem like supply constraints created by the Iran war are going to be easing anytime soon.
Absolutely, it's going to be a long-lasting effect, even if the war stops tomorrow.
All right, looking for a bounce.
That are already underway that can't be easily reversed. And not just on oil, but natural gas, fertilizer, all the main commodities that come out of the Middle East.
All right, Microsoft oversold now, looking for a bounce. IBM. Looking for an entry in IBM. Palantir. Focused on price action and RSI. All right, futures continue to sell off here. Futures continue to sell off. Okay. S&P 500 fading. S&P 500 fading. Watching that RSI. Looking for a bounce.
The price will have a first leg that will be fairly quick because the cost of shipping will come down sharply. Once you get the insurance side of the equation fixed, then you get the more security through the region. But the longer term impact, we're talking about.
Okay, let's keep an eye on hedge flows as well. We're looking for a signal. Looking for that hedge flow signal to turn back up.
Putting more barrels out today, and eventually you're going to want to refill those reserves. So that will keep prices higher for longer than they would have had otherwise. The second aspect of this is what I mentioned, the shut-in of the production. The longer it's shut in for, the slower you have to ramp up that production. Oil it can be very delicate. You're trying to balance several below surface, and the longer that well is shut in, the more you have to worry about the degradation of the equipment, of the degradation of the reservoir, and
S&P looking for a bounce.
in a sustainable way. So today, I'd say probably 2 to 3 months to normalize, but the longer it goes.
Watching RSI.
So, Fernando, let's talk about what investors should do with all of this information, right? Because we've already seen energy stocks have just been ripping higher even before this war began. And now the XLE, the energy stock ETF, is up more than 30% just this year. So I know there's sort of a debate about how much further it could go up. What do you think? Do you think that most of the gains are behind us now?
I think there's still gains to be had. We have been advising for folks to go onto higher leverage, the marginal suppliers, so small caps, mid caps, but that have inventory room. So we like Matador, for example, ticker NTDR. And we think there's still some gains left. Always going to look at how the fundamentals are moving on, and also the flows are moving within the broader market. The biggest fear we have here is not that it normalizes tomorrow or the conflict ends tomorrow, as I said, but is that as oil prices remain above $100, as fertilizer production also costs get higher, the consumer itself will get squeezed.
Okay, Palantir looking for a follow through. Palantir.
A couple months out, but that is a serious concern
Palantir bounce.
And we'll keep tracking it so that when it's time to get out of these stocks, because as we've seen with the consumers, and if you look at the retail sector as an example, there isn't
Palantir with a flag.
income there.
Okay, looking for S&P to continue or no.
Widening crack spreads, widening costs for food as well. So those are
S&P watching for the follow through. Firefly continuing on. Firefly. Aerospace finally starting to break through this level. Firefly. Watch Bitcoin too. Bitcoin needs to get above this 20 EMA. Bitcoin. Firefly. Starting to push. Firefly.
And then before I let you go, I want to get one more pick in, and that's Petrobras, the Brazilian oil giant. Why look there and not to say the U.S. majors?
Firefly looking for the follow through.
Big reasons for Petrobras. The first one is it's Brent-based because it sells most of its production offshore. Brent is currently at 102 versus WTI 95, $7 spread there. You're making more money that way. It's also more oil heavy than most of the Permian names today. And then Brazil, because it is a big exporter and can be a substitute for some of what is lost in abroad, it can benefit from the FX as well. The big concern we have is exactly that what I mentioned earlier, is that diesel prices being as high as they are going to hit emerging markets harder. How much a average Brazilian spends on fuel is significantly higher percentage of their income than for an American. And we're already seeing some of that stress, especially on diesel prices in Brazil, something that could ultimately affect Petrobras' ability to capture all of the gains. But in the immediate term, again, the benefits of being a Brent-based, low cost.
Okay, looking for the follow through now.
Producer outweigh it for Petrobras.
Fernando, thanks very much. Appreciate it.
Pleasure.
Coming up, the top analyst calls on Wall Street, and a look at some of today's trending tickers. Stay tuned if you're watching Market Catalyst.
High electric bill? Get the monkey off your back and call Air Mechanical. We provide installation of Amana heating and cooling units, repairs, and 24-hour emergency service.
Let Air Mechanical help get the monkey off your back. Call us today.
Given the performance we've seen as far as the continuation of this rebound in this market,
I'm going to take a 2-minute break. I'll be right back. Watch for this RSI to continue higher.
being lifted, or is that masking what you have been talking about with some of that deterioration in average member drawdown under the surface?
I'm not sure if we're lifting the fog of war, but I think for whatever reason, a day like today is one where investors seem to be focused more on the actual fundamentals sitting under the equity market, because it's a day in stark contrast to what we've seen since the war began. We've got oil prices up, yet the stock market is up. We have bond yields down. We have the dollar down. So everything going in the complete opposite direction relative to an equity market that is up. And I think some of that has to do with some better pre-announcements, earnings now being within our sight. So it may only last a day, but I think that's more of a fundamental focus right now. Let's just look at the underlying fundamentals inside the equity market and sort of push the war concerns aside for the moment.
Okay. And Michelle, how do you think global central banks are likely to address this whole episode this week? I mean, we're going to be hearing obviously from the FOMC tomorrow, but the BOE, the ECB, and the Aussies have gone first with the hike overnight. Just talk us through how important some of the language is going into these central bank meetings.
Yeah, we really have this bonanza of global central bank meetings. We've got 8 developed market central banks meeting. Most of them are going to be on hold for now. As you mentioned, Australia did raise rates a second time overnight. Their economy was overheating before the war, and so what happens in Australia isn't necessarily a sign of what will happen and the rest of the world. But yeah, central banks are really in this tough spot of having to weigh upside risk to inflation and downside risk to growth. So the question is inflation going to be transitory or not? Assuming these higher prices don't spill over into wages, there's the potential that higher inflation may not last if the downside risk to economic growth increase.
No follow through yet.
Listen, you mentioned the fundamentals. Obviously, that is what is driving things right now. And you and I have spoken a lot about the resilience of
Hedge flows, looking for that to turn up.
being underpinned by the earnings.
Still hasn't turned up.
Obviously, corporate earnings have been holding up quite well. I'm just wondering, though, you know, in
Pretty wild swings with hedge flows, right?
this morning, we are getting clear corporate reads now on how this war is potentially impacting some of these companies. I know Delta is a very different story, but I think it just goes to show the divergence between how various sectors are thinking about this. What are you making of some of the wartime?
All right, so no follow through yet. Futures just sitting here.
The bullish view is already embedded in the stock, making it unattractive. There are still 32 buy ratings, 5 over to 1,000.
That's the dream always.
Jensen talking.
And now it's completely open source.
I think you had to give everybody what they wanted.
Jensen talking to Kramer.
I think some took away an incremental notion. I took away an explosive notion and a wonderment notion. That's why I'm glad you're going to stay with me, because we're going to talk a little bit more about not earnings per share, but a new world. A new world that NVIDIA's created, and not just the world that made it so that you have so many millionaires.
You get to see it right here at GTC.
Well, I'm very excited. I know. One last thing I do want to just ask: are we still doing dirty, dangerous, and dull robots? So I don't have to do.
You're gonna do what?
The robots, they do dirty, dangerous, and dull things.
Well, they do things that either we can't do. They do things that we don't want to do, and they can do things all the time.
Well, then are they willing to clean toilets at Denny's?
Nobody can clean toilets at
That was
Denny's
your
better
job.
than I can, but that's that's a gift.
Has there ever been a job that
everybody
you were willing to do?
Everybody's good at something. That's what I was gonna do.
So, I mean, were you happy with yesterday?
Yeah. I'm proud. I'm proud of all the ecosystem partners here. I'm proud of all the announcements that we made. We revolutionized AI factories again, introduced a level of
Apple looking for this bounce to continue. Right now, we're just sitting here.
And then if you add Grok to that 35 times, and so I'm very proud of that. I'm very proud of the fact that all these ecosystem partners here are helping to build this future industrial revolution. The number of companies that are here is incredible. Every single industry is represented, from healthcare to transportation to retail to manufacturing. Right? It's just everybody's here. Large companies. Yeah.
Of Jensen Huang. We're going to have more with you, much more with you. Jensen, the co-founder and CEO of NVIDIA, you have to turn on Mad Money tonight to find out more, but it was explosive, not incremental, and that's why you must watch. Thank you.
Thank you, Jim.
Jim, our thanks to you. We'll be sure to tune in Mad Money tonight, 6 p.m. for more on that chat with Jensen Huang. It is pretty fascinating, guys, this whole inference, the economics of inference and how that's creating a bit of an inflection point, reducing latency. And we've talked about cost per token so many times, David, but a 10x reduction in cost per token is what a lot of people are talking about.
They are. And we talked about it at the beginning of the 9 as well, because that conceivably could be a benefit for the users of those tokens, namely the OpenAIs and Anthropics of the world as well, which are constantly and trying to bring their costs down. And perhaps it also creates more of a moat even against competition from the likes of Alphabet with its TPU, or even Amazon and the Trainium, and some of the efforts that Broadcom is a part of in helping these companies design chips.
I mean, what we just got from Jensen was just pure confident bullishness about where they are and what they're selling, reiterating that last year at this time they were projecting $500 billion with high confidence visibility of Blackwell and Rubin sales, and now with 21 months to go, and he really emphasized this point and why this is such a bullish fact, high confidence visibility of $1 trillion plus of Blackwell
and Reuben chips, and he said the new orders are still coming in. I mean, that is the sort of like overview industry bullishness that we look to Jensen Bond for, and
S&P still looking for the profit taking to dissipate, see if we can follow through and push higher.
but he sort of, you know, didn't give any reason to think that there was anything slowing down. In fact, quite the opposite. He talked about acceleration at a bigger scale.
Let's bring in Bernstein's senior analyst Stacey Razgon, get his reaction and overall to yesterday and that interview. I guess, Stacey, I would love to start off on this idea of the chips that are going to be way more efficient and what that means, and certainly what it means in terms of the competitive side of things with some of the names I just mentioned. Do you buy into that thesis?
I actually do. I think there's 2 points. One is, I think unjustifiably so, NVIDIA has been viewed as an inference loser. Unlike their dominance in training, there's been this view that other players will be better equipped to dominate as inference becomes the driving force. And I have not been a believer in that at all. And I think what he showed us yesterday kind of proved.
Okay, Google trying to break out here. There goes Apple again. Apple on the dip, starting to bounce. Apple. Apple. Okay, you can see Apple's starting to see some buyers right at the 20 EMA. Looking for a follow through. S&P, RSI's grinding a bit higher now after this little dip. Tesla. Tesla coming off the low. Apple. Apple looking pretty good.
To follow up on that, then, if they are going to dominate, does that actually make you think differently about AMD or about some of the other efforts in terms of custom ASICs that are out there?
It's funny, he talked yesterday about that they're a platform company, and it's really right. And you look at everything that they're delivering on the silicon side, GPUs and CPUs and LPUs and DPUs and networking and storage and all this stuff. And on the software side as well, as everything is building up. And I mean, I have the same reaction every time. It's like, how can anybody else really hope to definitively compete with this? I think it's very difficult. And I think my views on that have really changed, especially in the GPU
Apple.
space. I think they're
Nice buy on the dip.
And I think they have been, and I think will continue to be very, very difficult to compete with. It is still their game to lose.
Okay, futures starting to move now. Futures.
I read some, I don't know, I guess disappointment on
Futures are rising now.
one was to copper versus optical or fiber. I wonder if you agree, and if
Apple, that dip got bought. Okay, you see the dip. RSI turned back up. Okay, nice rally on Apple. The New York Fangs are starting to see a little bit of short covering on NVIDIA. Apple about to break out again. Apple. S&P 500. Okay, hedge flow is finally starting to turn. Okay, got resistance overhead. So,
I think they are, yeah.
All right, RSI continues to rise. We got hedge flows turning up. You can see where resistance is overhead.
And they're really working on bringing that capability available to like a
0 day.
customers to try to like drive that dominance. So and frankly, self-driving cars, I mean, we're still early, but it's getting done, and it almost to me feels like a crack problem. Like I was always afraid back in the days to ride in one of these, and I ride Waymo now around all the time. I mean, this is a problem that I think is in some sense been solved, and it's right for ramp and right for adoption. And they should be in a good position, I think, to help stimulate and drive that and make it bigger.
Interesting. Stacy, always appreciate it. Thank you.
Okay, what is looks like some of the metals are okay. USAR is just sitting here at the moment. USAR. Critical metals. CRML. Let's see what that looks like. Critical metals. Okay. And MP materials. Okay, these look okay. Stocks that are moving this morning. Okay, watch IBM. Looking for the follow through in IBM. Okay, IBM. All right, the dip. Looking for the dip to get bought. All right, S&P pulling back now. S&P 500 pulling back. Okay, no follow through yet. No follow through. Rejected at VWAP. So far, rejected at VWAP. All right, let's see. SOC. Offshore. Okay. SOC. Sable offshore. At the 200-day moving average. Stocks that did well yesterday. Just looking at the stocks that did well yesterday. Let's see how they follow through today. Micron breaking higher. Micron. SNDK from the watch list. Okay, starting to grind higher. S&P just dipped. S&P just dipped a little bit. Okay, Apple dipped as well. All right, this isn't easy. Feels like we're transitioning from the bears being in control. The bulls are trying to take it, but the bears still have it. Okay, let's look at junk bonds. Junk bonds. Okay, junk bonds still holding up fairly well. Buyers here are critical. Let's see what the 10-year yield looks like. The 10-year yield. If you're just joining us, I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It is Tuesday, March the 17th. We got a VIX expiration tomorrow and OPEX on Friday for the month. We do have a pullback in 10-year yield. That should be good. What's the U.S. dollar doing? U.S. dollar. Okay, pulling back from 100. More importantly, breadth has been improving. Breadth has been improving. Okay, coming off the lows. This is day 2. We started to hook upward on Friday. So a 3-day reversal off of the lows on Friday. Technically 2 days following through. From the minus 30 zone in the mid caps. Everything else bounced before we got to minus 30. This looking pretty good though. Looking pretty good. Looking for Marty Zweig's buy signal. Okay, this looks like institutions are buying. This is only day 2. We should get to 0.62, that red line, soon. This will be a buy signal. It'll be lagging. The activity that's occurring right now is the buying that's pushing stocks on the New York Stock Exchange, those that are advancing versus the total.
Pakistan denying the accusation, saying it was conducting strikes in the eastern part of the country, but did not hit any civilian sites. In other news, Ukrainian President Volodymyr Zelensky is due in London today for talks with Prime Minister Keir Starmer as the European countries look to keep international focus on the Russian invasion while the war in Iran intensifies. NATO Secretary General is expected to join this meeting as well. And Warner Brothers Discovery CEO David Zaslav could make more than $667.
Okay, S&P is starting to bounce now.
Paramount Skydance. That's according to a new filing. Additionally, he could be reimbursed up to $335 million for a federal golden parachute tax.
Okay, watch your RSI here. Watch your RSI. S&P 500. RSI rising, a higher low now. Looking for this to push higher. Along with hedge flows. Hedge flows are not giving us a confirming signal. Okay, we're starting to bounce. S&P is starting to bounce. Thanks, Nick. Okay, nice pop here, S&P, nice pop. S&P popping back up. If you're trading S&P options, make sure you're keeping an eye on RSI. This is the 1 minute chart right here. The 100 period moving average on the 1 minute chart is upward sloping. So I'm looking for dips to get bought, and I want to coordinate that with RSI. RSI is rising. There goes S&P starting to go now. And Palantir is about to break out. Intraday bullish flag. Palantir looking good. There it goes. Okay, Palantir is starting to break out of its intraday flag, PLTR. Okay, about to go right here, Palantir. IBM is something I'm looking to take a position in. IBM, it's oversold. Can it follow through now? It looks good on the daily and the 60-minute. 60-minute, retracing the morning gains. That's okay. A lot of stocks are doing the same thing, shaking people out. Institutions appear to be buying. If you look at Marty Zweig's buy signal, okay, this is looking pretty good. We're almost at 0.5. That's telling you the breadth that we're seeing. Okay, if you coordinate that with breadth, what we're seeing right now is an opportunity and a confirmation on the recent pullback. All right, so we see this here. Okay, all of these are rising. So if you look at that and then you look at NIMO, Marty Zweig's buy signal, this makes sense. Okay, this makes sense. This is starting to move through this level. So if you look at this, coordinate it with this, it makes a lot of sense. So S&P is a buy signal. Bitcoin is going. There goes Bitcoin.
Really great demand. That's according to the Delta CEO this morning on Squawk Box. Honeywell CEO saying at an industry conference
There you go, Scott.
Lead to a high single-digit hit to the company's first quarter revenue, but he does remain confident in hitting overall 2026 forecasts. And then shares of Nebius Group sliding sharply after announcing plans to raise more than $3 billion in a new debt offering this morning, following the NVIDIA and Meta deals. On Honeywell, guys, the CEO talked about how it's just hard to just tactically ship some of their products. He did call it a transitory, use the T word, issue there. Didn't say it was impacting volumes or demand, but just hard to get around with some of the blockages there, including the Strait of Hormuz.
Yeah, it is good to start getting some guidance, though, as we are in the last days of the quarter. Coming up, Apollo's chief economist, Torsten Slok, will get his take on the market action tied to Iran and why he sees another pause from the Fed tomorrow. Plus, a can't-miss interview with Gary Cohn next hour. He was, of course, director of the National Economic Council during Trump's first term. We're back in just a minute.
Okay, gamma. All right, that looks good. Yeah, I just added a bunch of scripts that I use to put into Gemini for results that are supportive of a follow through here, looking for a follow through S&P. IBM looking for the follow through.
Markets continue to rebound amid developments in the Iran war. Brent crude still sitting above the 100 mark, above 101 right now. Let's bring in Apollo Global Management Chief Economist Torsten Slok as we sit here on day one of a Fed day and try to figure out what kind of economic impact this is going to have and whether inflation is actually going to be the bigger side effect. What do you think at this point?
Well, the problem for them is that core PCE, as we speak, even before Iran began, core PCE was 3.1, and that's not 2. Their target is that it should be 2. We're at 3.1. And if you now begin to add the one big beautiful bill is beginning to kick in, we also have delayed effects of tariffs beginning to kick in. And on top of that, we now also have higher oil prices. It may be smaller in core inflation than headline. The Fed model would say that if you raise oil prices $35 a barrel, core PCE will go up by only by 0.1. So that is a relatively modest impact, but it's enough given the starting point is 3.1% inflation that we are just moving in the wrong direction. And that just makes the meeting tomorrow in particular very complicated.
I know, but the inflation expectations, I showed the 5-year and the 10-year, they're not showing any kind of alarm that this is going to be lasting.
Well, of course, that's why in the near term they have to think about whether they want to categorize this as transitory. Do they want to go back to
I
the
don't think
previous
they'll use that
description?
word again.
No, that's what I mean. That's why it makes it very difficult. We just had 10 members out of the 12 voting members on the FOMC vote that they thought interest rates should not go down. And when you have
Okay, looking for this follow through.
interest rate should be unchanged.
Hedge flows, they need to start rallying.
After last meeting, have actually gone more to the upside.
But you know what else the risk has gone to the upside is the higher unemployment rate.
That's true, but what's also the complication, as usual, there is that immigration restrictions have really, really slowed down. We used to have immigration around 3 million people coming into the country from 2022 to 24. Now the CBO says that has dropped to around 500,000. So if immigration has slowed so much, that's also why we should expect their break even on non-farm payrolls to also be weaker. So that's why the challenge for them is the labor data, is that weak because of weaker labor demand, or is it weak because of actually weaker labor supply? And there's a lot of arguments why it really is labor supply that's driving why non-farm payrolls has been so much weaker.
Getting some relief in shelter, are we not?
That's true. So that's the one good silver lining. The things are putting things down on the inflation front from housing, but all these other components that have been really hibernating a bit in the background, in particular, of course, energy, are now beginning to show more signs of life. That's also, if you look at core goods, ex-autos, that has really started moving up, especially over the last year after the trade war began. So a number of the other components are beginning to move in the opposite direction. So as usual, it is a bit up on the scale for them, thinking about what components are going up, what are going down. But it's very clear that, to Sarah's point, they must also look even at short-term inflation expectations and begin to worry about, we don't want them to go up too much.
When you look at the forward oil curve and you look at December pricing around $75 a barrel, do you think the oil market is gaming this out right?
Well, I do think that we should probably view this as something that is in some form at least more temporary. So from a Fed perspective, it is likely a more transitory stock. It's definitely much more transitory shock relative to AI. Then we can discuss what's going on with software and credit markets. We have now longer periods between recessions, so that we do maybe have some mini cycle in some certain sectors. But those mini cycles can happen like they did with energy, like in 2014, we had commercial real estate in 2022. So yes, there may be episodes in certain sectors where things are taking a little bit of time to work out.
Bitcoin looking for the follow through.
Tailwinds to growth from AI spending, from the industrial renaissance, meaning the political desire to homeshore a lot of production. And we also have really strong tailwinds to growth coming from the One Big Beautiful Bill. The CBO estimates that it will lift GDP growth by almost a full percentage point. So the Fed is set up with high inflation already, now more upside pressure for oil prices, and likely also strong growth over the next several quarters.
Why do you think recessions are happening with less frequency? What's happening?
Well, I think that policymakers have just become much better at managing things.
Okay, RSI is still just kind of grinding along here. We're watching RSI. RSI needs to keep moving higher. Palantir is breaking higher. Palantir.
You mentioned growth from AI, from spending on AI, but how are you viewing the productivity increases potentially as it starts to really embed itself in the enterprise and back to employment, how it's going to ultimately impact it?
Yeah, this is very important. So there's been a number of different papers and seminars more recent on this. If you look back at what was discussed at the seminar at the Brookings last week, where there were 3 experts discussing what's the impact of AI.
Okay, squeezing at the moment, squeezing.
3 of them that so far we're seeing literally zero impact in aggregate. There are certainly something about job openings, there's something about young graduates, but in aggregate, at the macro level for the Fed, I really think that Jay Powell is right when he at the press conferences repeatedly has said, well, there is no sign yet of this in employment, in productivity, and in inflation. So yes, it may be that this will generate huge productivity gains going forward. It may also not be.
It may not be, and this is obviously part of an ongoing conversation.
Okay, Bitcoin, nice bounce in Bitcoin. We're above 75,000 last night. Bitcoin. Bitcoin above that 74 level. We hit, almost hit 76,000, looks like last night. Bitcoin's ready to go.
Last year that some companies were the winners. Now we think other companies are the winners. What are we going to think in 6-12 months' time? It's going to be a very difficult exercise of figuring out who is it that's going to get disrupted and to what degree, and therefore ultimately who will be the big winners, and therefore will we get those productivity gains, David, that we're talking about.
Real quick, where do you see unemployment topping out?
So if you look at the consensus, which is really important about this discussion, the consensus expects unemployment by the end of this year to be 4.2. That means the consensus expects unemployment to come down, we're sitting here worrying about, oh my God, maybe we're all becoming unemployed. And at the same time, all the 60 people who submit the numbers to consensus, they're saying, just like the Fed is saying, you know what, maybe we should
I think
really be
they're
worried.
just late though. I think they just need to catch up.
It could be. So that's question whether the economists are right or the techno-optimists are right. And that's what we're all trying to figure out.
Okay. Economists are usually the right ones.
They are not, or they are.
I appreciate it. Torsten Flock from Apollo.
When we come back, the president hosting the Prime Minister of Ireland at the White House, taking questions from reporters in a moment. We'll get the latest from Washington with Money Movers begins in just a few minutes.
All right, so I'm just waiting for some follow through. Let's see if we can get some kind of follow through here. Futures 5, 30, and 60 are still on buy signals. The 15-minute is still on a sell signal. So you can see that conflicting information. We're looking for a pop through VWAP. S&P 500, watching RSI. RSI just kind of sitting here squiggling back and forth. Looks like it could go either way. Watching hedge flows as well. Hedge flows need to see this turn up. Need to see that purple line turn up. We got resistance overhead. We got longs all in here. All of this red. Dealer is short. Market is long. So you can see purple overhead. Purple is where the resistance is. We don't have any real support below until we get to 6,700 and then 6,650. These are people down here selling premium. The dealer is long. People selling premium down there. That could be supported. We just need to see the follow through. We haven't had a follow through yet. Future's still pulling back. Bitcoin has got a bid. Bitcoin is bid, BITX. Oh, God, I hate these stupid commercials. Games.
To leave everything behind, literally come across the entire world. I think that we download now. Hey you, your show's starting soon, right? Great. That gives you exactly 30 seconds to join the most exciting poker table online.
Looking for a follow through.
Good morning, Tuesday, March 17th, St. Patrick's Day. Morning, we're here on Yahoo Finance. I'm Miles London. That is Julie Hyman. Not wearing green. Not wearing green. And this is Josh Schaefer from Barron's. Yeah, what's your actual title? Newsletter editor. Barron's Investor Circle newsletter editor. Great to see you back on our air. All right, let's start today's proceedings looking back a little bit at what we saw yesterday, and that was from NVIDIA. Jensen Huang getting a big keynote speech at the GTC conference, and the big headline, Julie, very big number, $1 trillion. And
Stands for 1 trillion.
is that the way?
Yeah.
Very
throwback. Sorry.
$1 trillion in AI sales through 2027.
Okay, yeah, there goes Bitcoin. Bitcoin on the move. Bitcoin. Bitcoin is a buy. Get yourself some BITX.
saw one estimate for 970, one for 989. So it's like $1 trillion. Okay, that's great. I mean, Stacey Raskin over Bernstein, who really knows the chip industry really well, he seems to think there's a considerable amount of upside to that trillion. So I guess then, if NVIDIA at some point comes out and says, actually, it's not a trillion, it's $1.5 trillion or something, then everybody will get all excited again, or not.
Yeah.
I mean, I think it's less about the fundamentals of the company, which, yes, $1 trillion is impressive. But, like, is it impressive enough to move the needle is the question.
No, because if you think about $1 trillion is just a big number, and we expect NVIDIA to just beat big number, like we've been doing that narrative for 3 years, right? Yeah. Like, okay, like they're gonna put out this ridiculously large.
Okay, no follow through in S&P yet, but Bitcoin is definitely on the move. Bitcoin.
So they put out this big number, and I think that's what the stock.
There goes Bitcoin. Bitcoin's on the move.
Like it didn't really pop here, right? So I don't think that the trillion number is really what's driving volume, because I don't think AI demand has been the question of the last couple months, right? Is anyone worried that
S&P, no follow through on the RSI signal yet. All right, futures pulling back now. Futures pulling back. That's disappointing. Okay, 36. We're still up 36 handles on the day, but giving back a lot. Market's giving back a lot.
last year, some announcements around that. So we get a whole bunch of product releases here, which is what this is. This is a product event. And Josh, your discussion about how we're managing the story is something Julie and I talked about last week, which was how much is this, like, where are we at in that cycle of Jensen feeling like he needs to talk about the stock or manage this?
All right, we're moving back down through the 100 period moving average, so that's not what we wanted to see. If you're bullish, hedge flows turning back down. Palantir is still pushing higher. So we got some mixed signals here. Individual stocks looking better. Individual stocks looking better. Okay, here we go. Disney off the low. Goldman Sachs off the low. IBM higher lows. Still not quite there at the moment. What's ExxonMobil doing? ExxonMobil continuation. About to make a new all-time high. ExxonMobil, is that right? ExxonMobil. ExxonMobil making new highs. Is that an all-time high? Yes. ExxonMobil making new all-time highs. Okay, S&P continues to move lower.
As well. Okay, yes, the Vera Rubin space module, I guess, is the new thing, but that's not like going to be a huge product for the
Bitcoin following through. Bitcoin.
So, like, maybe NVIDIA, part of NVIDIA's issue stock-wise is they have mapped it out every step of the way very, very clearly, like far out into the future. That's what they do. That's what investors have become accustomed to. So then, if the roadmap is clear, then it becomes harder and harder. To, that.
So I don't want to press on this, but like, does NVIDIA have a stock problem?
Well, okay, so I'm glad you said here. Like, can I show a chart? Okay. So here I have NVIDIA up on the Wi-Fi interactive. Okay, just to like put a fine point on this, I'm going to play Jared Blickgrade, our markets data editor, for a second here. So here's NVIDIA over the past year, and here is where I draw, sort of wiggly lines that are supposed to be straight lines, and show the range that it has been in since last August. The top year was late October, and since then it's down 11.5%. So it depends on what your definition of problem is, right? Like, it depends on,
because I could look at up 50 in a year, and I'm like, it's pretty.
S&P still pulling back.
In Jensen Huang's mind, this ain't a problem, right? It's not a for anyone who got in before here. You know,
Okay, so sector-wise,
all of the spending that they're
sector-wise, we've got transports seeing a lot of activity, transports, energy, retail. Actually, retail coming off the low, right? Retail, a little bounce, a double bottom maybe. Maybe it moves back up into the range. All right, stocks like Walmart trending. Okay, still squeezing. Dollar Tree was active yesterday. Dollar Tree, Doji today. S&P continues to drop off pretty quickly here. All right, futures are dropping pretty fast here. Futures dropping.
And I think it brings us back to the story about, do they have a stock problem? I would say certainly not, but I think that it's just a question on,
All right, ExxonMobil looking for a follow through.
but it brings us to, I think, the general thought around the AI trade, as it were, which is the state of the Mag 7 trade. I think in many ways, NVIDIA remains the perfect avatar for the market because the stock's been flat despite all kinds of problems underneath the surface and stuff happening overhead. But another member of that group is Microsoft, which over appearance is on the cover of this.
Apple pulling back again.
A stock that
Microsoft had a nice morning. Microsoft had a nice start to the morning. That pulled back as well. All of these New York FANGs are pulling back with the indices. Struggling to get a trend and a floor under the markets. Okay. So every time we push higher, you can see yesterday and also on Friday, every attempt to move higher, sellers came in, sold into strength. We're still right above the 200-day. We didn't touch the 200-day per se. So buyers come in early, they sell into strength. We've given back so much of this morning's gains. We're only up 27 handles at this point. Okay, so be careful. Okay, United Airlines with a bounce, UAL. Another day up, United Airlines.
software away, your OpenAI, even just your OpenAI stake would probably take off, right? If that became sort of the dominant theme, maybe Microsoft works in that trade. Or what if software stays and you're buying maybe the best software company in the world, or at least one of the top 3 software companies in the world that is incorporating AI, and it can work that way too, right? So you sort of have 2 ways. You have 2 ways for it to work versus buying an AI chip company. Continue to consume AI.
I mean, I have to admit, when I was reading that, I was like, oh yeah, it was that big of an AI stake, and this is how much it could potentially be worth.
That could work out really well.
Little buffer that you have. But you know, I think we've become increasingly convinced. I don't know. I can't speak for Miles. I've become increasingly convinced that this whole like software is going to get eaten.
Bitcoin pulling back below VWAP. All right, so people chasing, getting stopped out. Hedge flows. Lower highs, lower lows on hedge flows. Got resistance overhead. Hardly any support down below until we get down to 66.50. And that's minimal as well. All right, we're starting to bounce now. All right, stocks that are actually holding up. IBM, looking for that to follow through. IBM, the dip getting bought. IBM.
Where he referred to Joe's software company, which has been the big trade within private equity, within private credit. And that feels like maybe it's not even an AI trade. That's just like hey, this business isn't worth 12, 15 times EBITDA because it works for like 14 different, dental clinics in the Southeast. Like, that's not a 15 times EBITDA company, regardless of whether it's an AI trade, an AI problem for them. Like, that product might be fine, and they might still be able to land and expand, do all the things that a private equity or some kind of private capital buyer is excited about with these software plays. It just isn't worth that. So I feel
Okay, futures trying to bounce here, trying to hold this level. IBM turning up.
why these two things are happening at the same time. Like, why do we have a quote unquote problem with private backed software play, the tiny software plays, and also then say, yeah, but I don't think that we're gonna all of a sudden see Workday displaced. It's kind of it feels like an interesting time.
Well, it's a moat thing, right? Isn't that essentially what you just brought up there? Like, if I only am serving 12 companies, no matter what their size is, in some small region, like, that's just a way less attractive business than Workday, Okta, who has clients all over, right? Like, you have this big moat of companies, and like that kind of became the big question. Like, the security piece was essentially like, okay, we're just gonna like take the wide moat through and throw it out the window. No one cares that everyone has Uber. We're just gonna get rid of Uber. We're gonna get rid of DoorDash. But like, I think that's been the bull case for Okta, for Oracle, etc. Is they do have giant businesses. Maybe they're still not worth what we thought they were worth 3 months ago, right? Maybe the terminal value is a little bit lower, but the terminal value isn't below 20 times next 12 months earnings.
Well, and then I guess so we can work through this here. Maybe the problem then for Joe Software is that if Workday's stock is
Okay, futures continue to drop off here. All right, so be a bit more cautious. All of these pops are getting sold into. Pops are getting sold into. Past 3 trading days, they sold into the highs. We got to see this change and start to see closes in the upper half of the daily range. ExxonMobil trying to make a new high here. ExxonMobil. It's about to break out. ExxonMobil. DTI. DTI. Yeah. Sienna networking, Sienna. Sienna trying to break out, CIEN networking, Sienna, CIEN, Sienna trying to break out. Really like IBM. I like to see a follow through in IBM. Futures turning back up. Pretty choppy price action this morning. S&P. S&P. This needs to start making higher highs and higher lows. Right now it's making lower highs, lower lows, trapping bulls. So I'd be careful. Frustrating. We've been looking for confirmation on these buy signals. Here you are with S&P again. S&P oversold RSI, but it's not able to follow through. We haven't been able to make a higher high. We got these lower highs for now. Okay. So in order for us to be bullish, we need to see a move through this level. RSI is definitely a buy signal, but how far is this going to go? Okay, so watching the S&P 500. Get everybody short, and I'll turn it back up. Let's see what up-down volume looks like. Up-down volume. Okay, it's 2-to-1 on the Qs, 3-to-1 on the SPY, 5-to-1 on the NYSE. Let's go take a look at the NYSE, New York Stock Exchange. Okay, that's pretty much the same thing. New York Stock Exchange coming off the low. 2 days. Okay, looking at that Marty Zweig buy signal. All right, so you can see stocks advancing. Let's go take a look at that actually. New York Stock Exchange. Let's look at the NYSE, number of stocks advancing versus declining, or new highs versus new lows. Okay, we're back above the zero line. That looks good. Advanced declines rising.
So maybe that plays out, right? And you get a cut in the back half of the year, inflation comes down, the labor market pulls up. I think we can all agree that's also still a fine scenario for stocks. But I don't know how likely that scenario is when you already have core PCE perking up in January, then you're waiting for February, then March, you're going to start to get at least some version of an energy shock, right? So if they hold on and don't cut, to me, that tells me the labor market held on in 2026. And that becomes the bigger story. And I think at some point, everyone wants to talk about inflation right now, and I understand why. We're waking up and checking oil prices every morning. I understand like where we're at right now, but like let's not forget that the labor market is on very thin ice here. And so if you're going to cut 2, 3, 4 times, we sure those are good cuts? We want those cuts? I don't think I really want those cuts, and that's probably the only way that you get more than 2 cuts this year is if they're just cutting because the labor market is weak, and that's how you get. Remember, it's going to be the committee here. You're going to talk the whole committee and cut it. Yes.
Right.
Like, we can't just do well, Borch's going to cut because Borch's going to cut. It's not how it works.
Well, and it seems, to your point, it seems less likely now that they'll cut because inflation is allowing
Yeah, like the soft landing.
So, yeah, I mean, yes, maybe. I mean, but is that a good scenario for stocks?
I think it's a fine scenario.
If they're not cutting because the labor market is low. I mean, so Mark Zandy was out with a thread this morning, and I know, economists like to give us percentages of what the potential scenario could be. And he says the economy, there is mounting evidence the economy is struggling, recession risks are high. I love that he says economists will be loath to utter the word recession because they keep getting burned. They keep saying recession's
I think he's right on that.
Now. But he says if oil prices remain elevated for much longer, he's talking about weeks and not months, a recession will be difficult to avoid. So yes, of course, stocks can go up even if there's a recession that's expected. But I'm not sure that.
But in that scenario, okay. So, but that wasn't my scenario, right? So then I agree. That's not good.
So that's
a recession scenario.
Labor market weakening without us going into a recession.
I'm saying labor market just holding on. Yes. Like if you could pick a steady state right now, it would be hopefully to not see 90,000 jobs lost again next month.
2-to-1 up volume on the Qs, 3.5 on the SPY. Surprising, we're just sitting here. Well, we gapped up this morning, so that's a good thing. Bitcoin is bouncing. All right, so my sense of what's going on right now, it's going to take time. Institutions don't want this to rocket back up to the highs. They want to fill positions. That's showing up on a Zweig breadth thrust indicator. We can see more stocks advancing than declining. Okay, so this is really important. This is really important what's going on right now. A lot of people are still thinking very bearish, but what we're seeing is institutions buying. Okay, so that makes sense. New York Stock Exchange advanced declines moving higher. We got more stocks advancing than declining. And if this ratio between the advancing stocks and the total New York Stock Exchange triggers, the Zweig breadth thrust indicator is going to give us a good signal. All right, we'll get one of these spikes like this. Okay, right now we're almost at 50%. You can see right here in the bottom right corner, almost at 50%. And this is day 2. Okay, so if you combine that with the breadth improving, we should get a signal probably, what's today, Tuesday? Probably by Friday, if not sooner, at this rate. What's leading at the moment? Semiconductors. Okay, looking for that to follow through. All right, S&P just rolled over again. Just not giving us a shot. All right, S&P just dropped off here. Again, Looks like they're going to fade this entire move the way this is going.
None of them is so concerned about inflation.
Yeah, at this point,
Yeah. So, I mean, unless we
Miles,
get crazy.
Miles talked me into it. We need one 25 basis point cut for stocks to go up.
I love what I love about this is like Josh has written the story, Miles is editing. Like we're getting like it's like a flashback to me in time.
I haven't written the story. Maybe I won't write it. Maybe I will.
I'm just saying in here.
This is the experience everyone's going to go back to that.
I like it.
All right, what do we got? We got a minute and a half here.
Oh, it's not enough time to talk about sports betting. I've been wanting for days to talk about
I was going to
sports
do a
betting.
minute and a half on it. Go.
McKay Coppins, who is a well-known reporter for The Atlantic, who also happens to be a Mormon, got dispensation, sort of reluctant dispensation, from his bishop to engage in a gambling experiment on behalf of The Atlantic, where they staked him, and he was still going to collect some of the profits, of which there were negative profits. And reading this, like, I'm already very skeptical of sports betting and prediction markets and their effect on society, and this made me even more so. And here is Josh Schaefer, sports fan.
Sports
As
fan.
I think
Sports fan. Right in the peak demo of people that sports gamble and prediction.
And how much do you gamble? Do you gamble a lot on?
Occasionally.
Yeah.
Like $10. $10 hand. You know. Oh, I think the Patriots are going to win the Super Bowl. You put $10.
But most of the sports betting platforms make most of their money from like 10% of the gamblers, who are the people who are all in, and probably not all in a terribly healthy way.
Yeah, I just like, we have 30 seconds, so we can't do this a good or bad for society thing, but like, I'm not really good. There's a lot of stuff that's bad for society. The economy's growing. There's going to be more things that come out that are bad for society, right? This is how economies work as they grow over time. We get more money. Self-responsibility. Yeah, you know. Social media is bad for you too. Don't let your kids on it. Sure. Yeah, that's great. Yeah, no kids.
That's it. Just personal, just libertarianism. That's where we're going.
It's a sprinkle of libertarianism in there. All right. Yeah.
All right, we gotta go.
That's fun.
That was fun. Josh, thank you so much. Nice to see you. Opening Good is next with Brian Tuffy. So Jessica, is there anyone you like?
Like anyone here?
Oh my gosh, let's do Home Court Explorer.
Yes, it helps you shop, quote, and buy the right coverage for you, even if it's not with us.
What do you think of this option? You look so good together.
Don't hate me, I just told them that you're interested.
Oh, you did not.
I know. Let's prank call each other.
That's not how that works, Jamie.
It's so much easier to hit a perfect shot when you sit back and just let it work. I wish I could be here all the time.
We knew our last Verbo was going to be incredible. We didn't know the hot tub was broken. But thanks to Verbo Care and 24/7 live support, they moved us. Better place, better hot tub.
Got any room for dad?
Think again, Bruce.
Teenagers are full of surprises. Verbo is not. If you know, you Verbo.
Safe Flight Repair, Safe Flight Replace. That's rough. At least with Safe Flight, you can get that fixed any way you want.
Anywhere I want.
Any way you want. That's the way you need it. Any way you want.
Schedule a shift fix while I get my hair. Yeah, they can fix my glass while we fish for bass. If you want, they can recalibrate my safety features while I sit at home in my comfy pants.
That one doesn't rhyme, but sure.
Get it fixed any way you want at SafeLife.com. SafeLife Replace.
Love playing games on your phone. Everyone's talking about how much money you can earn playing games on Tester Up. Is it legit? Let's find out. So here's the app. It has tons of cool games. Payout seems pretty generous. Let's try this one. Tester Up pays for the levels you unlock. Yes, legit. I tried 2 other games. Time to cash out. Wow, PayPal payment just arrived. Tester Up is worth the hype. The Tester Up, the games are fun and the cash is real.
All right, looks good. All right, looking for a follow through.
Congratulations, you've reached your goal. Solitaire Grand Harvest features Popeye for a limited time.
All right, SWMR is open, I guess. IPO, SWMR, Swarm, drone manufacturer. All right, SWMR. Do I have it yet? No data yet. All right, so we're just flat going nowhere with a threat of dropping off. Just know that there's an undercurrent of buying. They keep selling into strength, though. I will say that. So short-term futures. No follow through yet, S&P.
Hey, I'm Darman, and welcome to Darman Studios TV, where we produce emotional dramas for the whole family that are meant to uplift and entertain. Each show will follow our relatable characters through hardship and conflict, where there's always a surprising twist and a meaningful life lesson to be learned. No one is going to protect you out here but you. Watch Darman TV for free only on Samsung TV Plus.
Okay, we got Oklo tonight, DocuSign, Lululemon, Macy's tomorrow, General Mills, Five Below. Thursday, we got FedEx and Darden. Market's just sideways at the moment. All the New York Fangs are off the highs of the session. Just like we're waiting for something to happen. What's very evident, despite the advancing stocks beating out decliners, we do see sellers into strength early. This is the third day we've seen this. We get a nice pop in the morning, and then sellers come in, drop it into the lower half of the daily range. We want to see that change.
First, you're probably wondering why Nvidia stock isn't exploding higher after Jensen Huang's highly technical keynote at its GTC conference yesterday. I have that answer, or at least I think I do. Nvidia previously cited about $500 billion of high confidence demand in purchase orders for Blackwell and Rubin chips through 2026. And now
Palantir coming out of a squeeze.
despite the buzzy $1 trillion headline, though, some of this was expected by the street, and the revenue growth rate from 2026 into 2027 for Nvidia could flatten out. Investors don't want anything flat as it pertains to Nvidia, like nothing at all. You're also probably wondering the next move in the market with oil prices plastered above $100 a barrel because of the ongoing war in Iran. I don't have a precise answer on this, full disclosure, but I will say this. The smart money isn't feeling the bullish vibe. BofA's new fund manager survey, love this thing, showed investors raising cash levels and having a way more pessimistic outlook for the economy. So lots going on with this survey, some of it not so hot. Here on the Open Big Roundtable, Dan Ives, Wedbush Securities Managing Director and Global Head of Tech Research, alongside Galfine Singapore's Brooke Palma and Esbray. Good to see you all. Dan, good to see you wearing green. I clearly missed that memo. That's my fault, not yours. You were at GTC. Bring us inside that room. What do you think about what Jensen had to say? Not really seeing the stock, I would say, explode higher after it's been.
Yes, and again, disappointed with no green, but again, it is what it is for you. Look, I think I get what the street in terms of more of a shrug your shoulders in terms of the trillion. I think that's the wrong move. I think the reality is.
There we go. Palantir's on the move. Palantir's on the move.
And that's only
there you go.
Enterprise even gone down the AI path. I think this was really a GTC speech that outlined the product roadmap, not just for NVIDIA, but the AI revolution when it comes to physical AI. I don't see how you walk out of there not forward.
All right, Dan. So if GTC, Jensen's leather coat, or if that's not going to get this stock going, what has to happen? Like, what's the next big catalyst for NVIDIA? Does Jensen need a new red leather jacket?
Yeah, but I think it sticks with black leather jacket. But look, I think it's really about right now. This is an AI industry. I mean, let's call it like it is. In terms of what we see with the software sell up, worries about too big to fail, circular financing, and everything else. I think this is just step by step. You're going to see the monetization is going to start to show up, especially in the March quarter.
Okay, 160.
And what that speaks to, and I started Palantir last week at AI Econ.
Palantir's above 160 now.
And it was a stunning rate in terms of this enterprise demand. And the demand and supply will be in Asia in a few weeks. Right now, it's 12.
160 now.
Dan, who won the conference war? Palantir or NVIDIA over the past 2 weeks?
Well, I think Palantir probably initially won it, but I also think NVIDIA
Above 160.
Success because that bar continues to be so high, which is why I believe this is a stock that should be up, not down. And we say base case $300 in terms of for NVIDIA. I think we're looking at a $6 trillion market cap in 2027, despite this white knuckle period.
And as I just put out a post on X, there's a chart, not to mention a competing firm when our man Dan Ives from Leverage is on. This one came really straight.
Okay, we're above 160. Got a squeeze on Palantir.
We are now starting to see some buying after really a long period of selling.
Right, so perhaps the selling that had been going on with software was overdone, like a lot of analysts had been talking about, that it was really overblown when it came to software.
Okay, Bitcoin pulling back in. All right, it's definitely very choppy today.
That much, maybe it's a good thing. I mean, what Dan was saying is, yes, this stock is basically the highest very bar. It is priced to perfection, and the fact that you saw all of these sort of
Chevron making new highs. Chevron.
during this conference was things that already the street may have known already, but also the fact that we talked about 2027 for Uber. This is very, to me, that's big. And maybe this street need to see all of this playing out over the next year. What Jensen Wang was talking about with Uber and self-driving 2027. That's huge to me.
IBM. Okay, IBM. Okay, just pulling back below VWAP now. IBM.
Let me get over to you. Good note this morning out of folks from Citi pointing to, I think one, they were pointing out that you may not see Meta lay off 20,000 workers, as has been chatted about. But you look at some of the efficiency gains. Meta is
Energy stocks definitely got the bid.
it is mind-blowing. I think, yeah, maybe they will lay off 20,000 people.
Yeah, and what we're hearing from that border
Transports.
of its workforce could be let go. And also
Transports. Let's see. Delta Airlines. UAL. All of these pushing higher. Futures continue to drop off here. No follow through yet. All right, S&P, so much for that. All right, here we go, dropping off. We're going to fill the gap, it looks like.
Reinvesting back into areas that they think that AI could be used to further boost productivity. I know that with the Fed meeting this week, that will also be a key question area as well. Is how has AI led to more productivity gains?
Bitcoin pulling back. Bitcoin pulling back.
Big tech and other players are seeing a boost in momentum there as well.
Not to be a jerk, Dan, but isn't this an amazing moment for some of these big companies? They're seeing accelerated top lines because of all things AI, and they get to fire people in thousands to free up free cash flow to improve their margins. Like, this is a perfect investment case, no?
Yeah, but I also think like some of this is probably the bark's being worse than the bite. You know, when it comes to layoffs, you also look at how many that they've actually hired, you know, over the last, call it 3-4 years. Look, I think it's just balance.
Bitcoin 50% back into yesterday's price action. Bitcoin looked really strong this morning. No follow through yet. Bitcoin pulling back. It is trending. It is trending. So buying the dip is better than buying the rip, obviously. We're just transitioning above this 74,100 pivot. Higher low. Higher high. 9/21 day. This is just the beginning of a potential trend up. You can see the Kirby over here on the left. Things get a little easier in this area. It's a lot more traded up in this area. So this, consequently, this band is much greater resistance.
I think the thing is, look, Anthropic is part of that ghost trade where, you know, in terms of taking over software, taking over cybersecurity, better chance of me playing, you know, 2028 Olympics than that happening.
Oh, you're going to Olympics, man. You're going to.
No, again, you've never seen, you know, on the track. But the point is, if you look, I think it's cybersecurity, that's front and center. CrowdStrike, Palo Alto, Checkpoint. You look at software, I can think ServiceNow, Salesforce is way oversold relative to what I think the opportunity are. And I think we're going to look at that Anthropic event from like 3 weeks ago when they introduced the AI agent. That will be viewed as the bottom in the software trade.
And as I tip my hat to Jensen Huang, not because he looked great to get on stage, he had a lot of cool technical things to show, because he took the attention away from the Federal Reserve meeting, and it could be a challenging meeting for Fed Chair Jerome Powell. He has to acknowledge in his press conference after the decision what is happening with oil prices and inflation. It seems like a lose-lose scenario for him.
Yeah, he has to acknowledge that oil prices could be here at these levels for a while if there's no end in sight. I mean, the duration of what's going on in the
Chevron, the energy stock's doing very well. Again, Chevron breaking out again. ExxonMobil. Energy is definitely the place. Continuation.
Rising oil prices on inflation and how that is going to shape what the Fed does this year. And increasingly, Wall Street is expecting cuts to be later, perhaps, this year, and because of these rising prices.
Look, I can't wait for the next consumer confidence report. I think it's going to be so telling.
ExxonMobil, continuation.
Higher prices just a couple weeks after the war already started to impact consumers. You get the Macy's earnings out, I believe, tomorrow, too. It's not looking good for the consumer this spring, at least off the jump.
Yeah, Brian, it's definitely not good. What we heard in the consumer sentiment report just out.
ExxonMobil still moving higher here.
The final report will be out later this month. But we're already seeing that impact of this war with Iran on the way that Americans feel about the economy, particularly the impact that higher gas prices have about their ability to go and spend. And so many sources that I've been speaking with over the past few days have largely told me that the first thing to go, similar to what we have been seeing, is that discretionary spending. And that can mean bad news for players like Macy's.
All right, all of the New York FANGs are lower at the moment.
Sporting goods in general, apparel, toys, anything that are like nice to have, but not need to have. And this will just reaffirm more consumers.
Bear flag on the S&P.
Essential goods, and essentially that also brings back to maybe Walmart continuing
Briefly looked like the markets were going to continue, and then we just get rolled over. Steamroller. Bear is still in control.
I think humanoid robots. I think I'll have one probably next 2-3 years. I think you're gonna have one too, Sal. I've told you that. Like, I think this is when you think about what's happening.
All right, coming into the lunch hour. Got about 15 minutes to go. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It is March 17th, Tuesday. Watching energy stocks. Energy stocks still have the bid.
Seen some defaults, and some defaults are healthy, but right now the people suffering are the people who were paid to take that risk, the lenders who were compensated for taking that risk. What I'm watching in terms of private credit is contagion risk. When are public credit markets going to move in response to it? When are you going to see a broader risk-off narrative coming from it?
ExxonMobil, continuation. Palantir, back into a squeeze. Palantir. Everything is experiencing gravity, the pull of the S&P, taking everything with it. We gave back like 40 handles already. What's Apache doing? Apache, that's just flattening out at the moment. Devon Energy from the watch list. Devon Energy. Devon continuation. ExxonMobil looking really good though. ExxonMobil coming out of the squeeze. Okay, the obvious institutional buying. ExxonMobil. All right, ExxonMobil making new all-time highs. Chevron did it last week. Chevron continuation, new all-time highs. Energy very strong. S&P trying to bounce right now. S&P is trying to bounce. Okay, we got a doji on the daily S&P. We're above 6750 and faded that this morning. All right, still looking for a potential rush higher. We've got lower highs. Anticipate that's going to continue. Lower highs. Okay. We've been oversold 3 times already. RSI. MACD's trying to turn. So I would anticipate this is going to continue unless you're buying right here at the low and looking for pennies. Okay, so that'd be a 20-point move there from 67.12 back up to 67.33. All right, so far so good, S&P. Anticipating we'll get a rejection. S&P rising.
It's a time where Jonathan and I, our faces are fading fast. So we're like, get as much as all as possible. Yeah. We've done over 1,000 renovations. We've done 600, 650 episodes of our shows. But Property Guys Under Pressure is a whole other level because it's so relatable the housing crisis and the pressure everyone's under when it comes to finding a home that actually works for your family.
And we're kind of showing it almost doc style, where a lot of the stuff that used to happen off camera, behind the scenes, we're just showing it. You see everything. You see the crew. You see like last minute, butting of heads. You see everything.
And the stories as well. See, I get emotional. I see it. The stories are so impactful as well and emotionally connected to the audience because there are a lot of things.
All right, you can see these bounces don't last very long. Okay, they don't last very long. They get back to 50% and they roll over again. Let's see if this is different this time.
Every story is very, very unique, but I love it because it's so relatable.
I'm glad you mentioned the housing affordability. I live in Long Island, and we're in a house, a tiny house that just sold for $330,000. It has no roof. It is, as you walk in, it's just this blob of a thing. I mean, that's what we're looking at. That's a real crisis. I wish people.
Take a look at shares of Honeywell, down about more than 2% right now after the CEO spoke at an industry conference in London this morning. Honeywell clarifying earlier reports that full-year revenue would take a hit from the Iran war. The company says a high single-digit percentage of sales comes from the Middle East, but it does not anticipate a meaningful impact to revenue. So clearing up some of the questions there about whether
Futures hesitating.
Executives weighing in on the recent software sell-off. Our Leslie Picker is at the Thoma Bravo investor meeting in Miami. Morning, Leslie.
Hey, good morning, Carl. Yeah, software companies here are going on the defensive. You can see each one has a booth with a desktop, and they're using that to show Thoma Bravo investors exactly how they're pivoting in the world of AI. We actually sat down with the Proofpoint CEO a short while ago, who today launched a new cybersecurity product.
Google looking for a higher high. Apple. All of these are showing ABCD patterns right now.
From an investor's perspective, it's a confusing time because there's this sort of broad brush that everything has been painted with, where all software is all of a sudden being put into a question mark due to AI. Yeah, it's confusing because not every software can be put into the same bucket. The need for cybersecurity in the world of AI goes up because now all of a sudden, it's not just humans and other traditional systems you have to protect. You have to protect yet another thing. And the risks of compromising AI are extremely high.
We also spoke with a Thoma Bravo investor, the head of PE for CalPERS, about how he's thinking about software buyouts.
All right, what VIX looks like.
There was underwriting done in the software sector.
VIX continues to trail off. VIX continues to trail off. We got expiration tomorrow.
And the market is trying to process that. Now,
Crude oil
I think our firms are
consolidating in the recent range right here. Crude oil.
as a result to be able to reposition them, perhaps turn it into a strength.
And he actually said he'd rather have software companies reposition as private companies versus be pressured with quarterly numbers as public companies. And he said he sees their venture book comprised of AI companies as a, quote, natural hedge. Now, guys, I'll be sitting down with Thoma Bravo founder and managing partner Orlando Bravo in about an hour from now. There's, of course, so much to discuss with him in terms of
Energy still pushing higher.
what's going on in private credit and, of course, how he's navigating all of this volatility, guys.
All right, Leslie, that's a key interview. Look forward to it. Our Leslie Picker in Miami today. Meantime, Delta is one of the top gainers on the S&P this morning. We'll get into what CEO Ed Bastian told our Phil LeBeau about why the company is raising guidance, at least on the revenue side, on the other side of this break.
All right, trade desk finally turning the corner. Trade desk, TTD. Trade desk finally bouncing. Trade desk finally catching a bid. Energy, very strong. ExxonMobil, S&P 500, still drifting lower in the descending pattern. VWAP pointing down. We need a catalyst. So far, the catalysts have all been bearish for the markets. Similar to what we had last week, we had a bounce on Monday, Tuesday. We faded Wednesday, Thursday, Friday. This week, Monday, Tuesday, we bounce. We're still in a descending pattern, lower highs, lower lows. So we're looking for a catalyst. Institutions do appear to be buying down here. So that's one thing that's good.
Watching over the last couple of weeks, and all of our NATO allies were very much in favor of what we did. They thought it was very important. We were just discussing it actually. Very important that we take out the nuclear threat from Iran, and we've done that very strongly, very powerfully. We've wiped out their navy, wiped out their military in every aspect. Their air force is now
Okay, we're hearing the same thing.
It may help you sell. People really like it. It looks pretty, but you're not getting any more money. Yeah, I would say don't over leverage. There's still a lot of people that they're putting themselves a bit too thin. If you're looking at getting a place, you know, a lot of people are going from a house into a condo because they can't afford a house. But in reality, if you can get a house with a rental suite, the money generated from the rental suite should be able to offset more than what you'll end up paying with your condo along with your HOA fees and everything else. So look for a creative solution like that. Or is there somebody that you could live with? Is there somebody that you can get into a place where you each have your own?
I'm not moving back in with my mom. I can't do it, guys. Like, it has not come to that. Oh my God, Jesus, no way. No. So what, you know, if you look at forward here, like, what are the biggest trends you're seeing in the renovation market? Well, the last time we were talking,
Apple.
We're gonna have to remodel.
Apple looking a little better here. Changing direction, perhaps. The last time we did this on the 10th, 9th, 10th, it looked like we're going to follow through and we rolled back over. Looking for this kind of situation over here, like in January, the end of January, where we had this move above the 20 EMA. Just feels more hesitant because we've been making new lower lows. So we're looking for Apple to turn the corner.
What else would you squeeze in your house? I like the Zen room. Yeah, I like the Zen room. Ideally, I walk in.
All right, Apple looks like it could keep going here. Apple.
Since we last spoke, I think you are now on a Canadian hockey team. How is that like different than what you do?
Microsoft at the low of the day trying to turn as well. Same with NVIDIA.
They're one level below pro. I mean, some of them, they're two of our kids are probably going to go top 10 in the NHL draft this year. And they're all teenagers. It's just crazy to me to see the talent level that is at that.
I saw a post on X recently, lastly, that they might want to bring back the Expos. Who doesn't love to watch them?
I mean, come on, why not?
Maybe you get involved with them.
You know what I want? I want to bring back we won't be bringing back the Grizzlies, but I want an NBA team in Vancouver.
Yes.
So that's I'll rally for that. We'll get basketball back.
All right, well, good to see you guys as always. Thanks for always making time for me. Good luck on the new show. Love the name. Love what you guys are doing. I love that you're not like renovating homes. You're taking people through the buying process.
You know what I love?
This stuff is hard, man.
Yeah, I love Mom. Say hi to Mom. She got hit hard in this interview. I think Mom's great.
She always likes you guys. You don't have to do that, right? It's good to see you guys. Thank you.
Is there anyone you like?
Like anyone here?
Oh my gosh, let's do Home Cold Explorer.
Yes, helps you shop, quote, and buy the right coverage for you, even if it's not with us.
What do you think of this option? These look so good together.
Don't hate me, I just told him that you're interested.
You did not.
Oh, I know. Let's prank call each other.
That's not how that works, Amy.
All right, we continue to turn back over again.
Maybe later?
No follow through. S&P.
Because
No S&P follow through yet.
How about now? Here's a short-term treatment for lasting relief. Okay, let's talk. It's called Xifaxan. Xifaxan with an X. It's a 2-week treatment for adults with IBS-D that provided lasting relief from both abdominal pain and diarrhea and helped relieve bloating and urgency. Think of it like a short-term treatment for lasting.
Baker Hughes, BKR. All right, that's finally turned back up. Baker Hughes. Baker Hughes, looking good.
Tell your doctor if you are pregnant or plan to be, have liver disease, or are taking other medications, as they may increase the amount of Xifaxan in your body. Most common side effects are nausea and increased liver enzymes.
The right time to talk to your doctor about Xifaxan is right now.
These are Hardee's Crisco breakfast sandwiches starting at just $3.99. This is the competition's breakfast sandwich.
All right.
With smoked bacon, savory sausage, 100% American Angus, crispy hash browns, and buttery toasted sauerkraut. The McNuggin speaks for itself. And this is where you head.
You can see energy stocks are the opposite of the FANG stocks right now. Everything is overbought. People are chasing the call side. Let's see what Baker Hughes looks like. BKR. Baker Hughes. BKR. Okay, that's a bit overbought. Even though it's turned back up, Baker Hughes. Baker Hughes back above the 50-day. All right, it's 12 o'clock. 12 o'clock.
If we didn't do the attack, or if I'll go a step further, if I didn't terminate the Iran nuclear deal given to us, one of the worst deals ever made by Barack Hussein Obama. Remember when they sent Boeing 757s over there, loaded with cash, hundreds of millions of dollars? You would have been very happy. This was a wonderful. They sent hundreds of millions. People forget that. Does anybody remember? Right? You remember. Hundreds of millions of dollars in a Boeing 757. I think they had two of them loaded. They took the seats out and they put cash. And it was so much that there wasn't a bank in Virginia, Maryland, or D.C. that had any money left. They stripped them of all their money, put it into place, sent it to Iran, almost as ransom. That's not going to happen with Trump. And nobody ever did anything about it. Nobody ever said anything. Can you imagine if I did that? So they've been a threat for a long time, but they've really been a threat. If I didn't terminate Obama's horrible deal that he made, the Iran nuclear deal, you would have had a nuclear war 4 years ago. You would have had nuclear holocaust, and you would have had it again if we didn't bomb the site. So when somebody is working with us that says they didn't think Iran was a threat, we don't want those people because, and there are some people, I guess I would say that, but they're not smart people or they're not savvy people. Iran was a tremendous threat. And virtually every NATO nation, and this is the thing, if they told me it wasn't a threat, and therefore they don't want to help.
Okay, there goes Google. Google on the move.
And it was a major threat. Every one of them, I think every one of them, I don't know if one that said they're not a threat, but when they say it was a threat, but we're not going to help, I think they're very foolish. You know, it's interesting. It's interesting because I could say this, that what's happening in Ukraine, we're probably in there for $400 billion. We don't spend any money anymore. They buy it from us and they pay full price. But Biden gave them between $350 and $400 billion of equipment and cash. Someday they'll have to find out about the cash. And you could say that wasn't a threat, you know, we're helping them. So we helped them and they didn't help us. And I think that's a very bad thing for NATO.
Mr. President,
Are there any repercussions for NATO and are you still going to China? Well, yeah, on China, it's a little different story. We're resetting the meeting and it looks like it'll take place in about 5 weeks. We're working with China. They were fine with it. We're going to say, I look forward to seeing President Xi. He looks forward to seeing me, I think. But I do look forward to seeing him. We have a good relationship with China. China actually has become economically for us very good, as you know. It's much different than it was in the past. And we have a very good working relationship with China. So we're making it in about 5 or 6 weeks.
S&P still moving a bit lower.
Well, no, I just think that it's not good for a partnership when they say what you're doing is a great thing, but we're not going to help.
Okay, same thing over and over and over. I can't listen to
Pushing back against those
politics.
Hey, we don't need your help. We'll take care of this ourselves. And that came out of the administration this morning also. So maybe they're seeing an end game.
We'll say I'm looking at NVIDIA with increasing interest. NVIDIA down here for a longer term position. It's been in this base forever, NVIDIA. It's been in this sideways range forever. Let's look at the weekly time frame. Hasn't gone anywhere. NVIDIA.
S&P 500 up too much. It's up 20 basis points. So it shows that it's broad, but it's not necessarily being led by some of the larger market cap names. You know, we'll talk about NVIDIA. That's not really doing
Apple.
So you're not getting participation with.
Yeah, it doesn't feel like there's any energy in the market. There was this morning.
Pick your poison, I guess, if you're looking at that. A couple things I'm looking at as well too. I think Tom mentioned the pullback in 10-year yields, but there's also been a pullback in the VIX. The VIX is now sub 23. And then here's one for you guys. I don't know if you ever look at this one, but the OPEX, the oil VIX, that started to pull back as well too. We're now at the lowest level of oil volatility that we've seen in a week. And I just think that kind of goes to show that the market, well, it's not kind of happy with what's happening in Iran. It's coming to terms with it to a certain extent.
There's no momentum following through on many of these. Google looks okay.
We know this happens all the time. You get that big reaction right away, and then
Okay, Google looks all right. Google. Okay, that looks good. Google looks good on the 60-minute. Google to 20 EMA looks like it could turn the corner.
Aren't necessarily going to be affected by oil prices, but it does kind of go lend towards discretionary income and consumer credit, and is the higher oil prices going to affect consumers' abilities to pay back credit card fees and loans, and so I think to a certain extent there's some cyclical dynamics there, but I also wonder how much of the financial sector was probably overdone in this sell-off, and maybe that's why we're seeing some of the movement there today.
That copper is still going to be important, right? And those are more optical components providers. Do you think it's going to be sort of an all of the above approach, though, that the demand is so great that like everything in the supply chain is going to win? Or do you think that investors need to be focused on certain areas?
So we like both copper and electrical. As you look forward into
Baker Hughes, BKR.
Copper will really lead in the next 2 to 3 years, and optical
Trade desk.
Further out.
Trade desk falling off now. S&P falling off.
So we have exposure to both, and we're positioned to benefit from both of those.
Another day of disappointing price action, just fading from the high. S&P 500, just fading, no follow through, descending pattern, descending highs, descending lows. We're about to fill a gap now, 6,700, It's where we closed at yesterday.
LPUs, language processing units, is again this maybe quest, whether it's probably I was going to say implicit or explicit. It is explicit to try and get its clients very reliant on its full system, right? And so I'm curious what you think of that strategy and how much what we heard yesterday sort of again contributes to that.
Yeah, I think that's exactly right. Up until now, really, NVIDIA's had a very GPU.
Market institutional index still shaky. Needs to break to the upside. You got this rounding top situation sitting on the 200-day moving average. Number of stocks above the 20-day is pushing higher still. Day 2. Actually, day 3. It started on Friday. More stocks above the 50-day also turning.
Extending its range to say we're not just GPUs that are very good for training. We can do inference better than anybody, and Grok was really critical to that. And that's what they introduced yesterday was
Descending highs, lower highs, lower lows. S&P is still drifting lower. There's no lack of there's a lack of momentum at the moment. All right, Apple looks like it wants to go buck the trend. Apple trying to change direction.
Especially as we are in the aggressive part of the build out.
Ivana, I want to go back to something that Gil was talking about this belief by the market that we're at peak spend in terms of CapEx. And
probably wasn't appreciated. I do look for
and whether you agree that like we still need or the
18
market
years. I can say that Waymo had some pretty good penetration in the San Francisco area, and so I need to have a competition that they can provide.
ARM Holdings fading from the high of the day back into the Bollinger Bands.
It kind of goes a little bit beyond that because we need to see that there's adoption outside of the West Coast. I think that the West Coast has been there for a while, as I mentioned, Waymo's been here for a while, but it needs to be broader.
Every time the markets look like they're going to rally, we get knocked back down. There's just no follow through at the moment. Okay, no follow through at the moment. You can see RSI is turning back up. This is the 4th time we've gotten oversold. Lower highs, lower lows.
Yeah, good luck navigating Chicago traffic with those Ubers and Waymos here because it's a nightmare. And it's not just maybe the road layouts, it's the bad drivers that we've got here in the Midwest. But if you think about this, the rollout into 28 cities by the end of
Okay, it's starting to bounce now. Shorts covering.
Their autonomous package that they have that they're going to partnership with Uber, Lyft, and others in this space is better than everybody's. Their safety record is going to be better than everybody's. Now, we all know that the promises that are made in this space take longer than initially anticipated at this point. And you look at maybe the competitive advantage that Tesla might have against maybe a build out with help from NVIDIA for Uber and Lyft at this point is the fact that, hey, if Elon Musk can create a low cost entry level vehicle,
Even in these bounces are pretty lame. There's no follow through. Google looking pretty good though. Google is doing the exact opposite. Google's making higher highs and higher lows. RSI is staying in the upper 50%. RSI stays in the upper 50%. Google's still pushing. Looks good on the daily. Google looks like it could get, it's still consolidating, but it looks like it could get it up into the 315 zone. Palantir back down to the 155 zone, so it can't get through this 160 resistance level for now.
Well, I think the easy answer is everybody's booking in advance of the prices going up, but I think it's more than that. Delta not only announced that they've seen increase in first quarter revenue growth, they're forecasting high single digits. Initially, I think it was 5 to 7%. They pushed it up to 7 to 9% year over year. But they also
So we got a month till potential IRS checks go out to people. There might be a catalyst there. Okay, Broadcom's still fading. Google looking pretty good. Google keeps going. Can't buy it at the high, obviously. S&P pulling back, no follow through. If you remove the weight of the New York FANG components, this looks okay. We're starting to bounce day 2. We still got sellers at the high of the day. Notice Friday, yesterday, today. We push up to the highs and sellers come in. Number of stocks above the 20-day and 50-day still looking pretty good. Just not feeling any kind of follow through. Apple just hit the high of the day there. Apple. I thought we might have some relief today, but no. Seeing some resistance overhead. Money forecasting 660 on SPY by Friday, given the options he's seeing.
Crude oil prices above $90 a barrel are really going to negatively impact these moving forward. But I think it goes more to the fact that the K-shaped economy that Ed Bastian talked
Hedge flows trying to turn back up. Got a lot of people long here. All of this red, all of these red bars are the market makers are short. The markets are long. Market makers are short. Traders are long in this area. We got support and resistance overhead and below, respectively. Support below, resistance overhead, respectively. All right, so we'll just watch this for now. See what the dealers are doing.
For the next quarter as we thought we were. So maybe front loaded a little bit, but we typically get those mid-quarter updates from the airlines. This is a positive one. And for a sector that's been beaten down pretty good, this is a good. And think about it, guys. Crude oil is up over 2% today. So typically we would see airlines down pretty significantly. If crude was flat or even down a little.
Palantir is holding up very well, all things considered. Palantir is holding up really well. It's above the 10 EMA weekly. It's above the 50-day and the 20 EMA on the daily. 60-minute looks good. It's struggling to push through this area. We got to get through 160. That's the upper call wall. If we can get through 160, dealers will have to cover.
Schwab.
Welcome back to Fast Market here on Schwab Network. NVIDIA is doubling down on the AI arms race, telling investors demand to drive as much as $1 trillion in orders through 2027. CEO Jensen Huang unveiling a new generation of chips and technologies at the annual GTC conference, highlighting surging demand for computing power. The company is pushing beyond traditional data centers, outlining plans for space-based AI infrastructure that could power geospatial analysis and autonomous operations in orbit. NVIDIA also striking a multi-billion-dollar deal with startup Grok to accelerate its move into inference chips. Self shares a little change in response today to all of the news, even with a stronger demand picture. Time now for the tug of war on NVIDIA. For that, let's welcome back in our co-host Tom White and Joe Mazzola. It's bull versus bear time. So before we jump into your example trades, we got to talk about your thoughts on NVIDIA, Joe, especially, in the context of how the shares have just really not done a lot recently or some time now. Your thoughts?
My question is, what does this company have to do? Forecasting $1 trillion in sales from its AI processors through 2027. Whether it's the Blackwell and the Rubin chip platforms, and now I think he just came out a couple minutes ago and said, hey, Jensen Huang came out a couple minutes ago and said that doesn't even include our new products, so that forecast. But yet the stock is kind of mired in this money pit, if you will, where it's just not moving. You mentioned their inference push with Grok and kind of how they're introducing the semiconductors for that. I mean, look, they're pressing all the right buttons and they're doing everything that they need. They're just not being rewarded, and I wonder how much of that is just maybe an overall market malaise when it comes to kind of AI, because if anything, they continue to beat and raise. They just announced another $2 billion that they're going to be investing with the Nebius Group to deploy more than 5 gigawatts of NVIDIA systems by the end of 2030. I guess I'm confused. I don't know what the market is looking for, because even if you look at the stock in terms of like a PEG ratio, you look at the price divided by earnings divided by expected growth, this thing is like sub 0.7 in terms of a PEG ratio. So from a valuation standpoint, it looks relatively cheap. From a growth standpoint, you can still see that they're forecasting massive growth. But for some reason, the market doesn't want to reward it. That kind of affects the way that I set up my trade. I'll talk about that in a minute. I'll let Tom speak for a second. But I'm just wondering what it takes.
Yeah, it's like the market's like, yeah, you're great. So what? Tom, your thoughts?
Yeah, Joe's obviously been listening to me, because this has been a head scratcher for me also, is the fact that, hey, what does NVIDIA have to do after their last blowout earnings? And then he comes and ups basically what they're going to make, maybe basically double, right? Added another year through 2027 because their projections were $500 billion through 2026. And then the partnerships that they announced also with IBM, Hewlett-Packard, Adobe, strengthening those ties with Uber and others in this space. And then, Joe mentioned the amount of money that they're expecting in sales just from their AI side of their business. That's not even including everything else. They're getting into the CPU side. They're getting into their standalone computers. They're still in gaming. They're still massive there. They're the leader in that space also. They're getting more into inference at this point. Their Grok partnership that they just signed a licensing is supposed to be explosive. I mean, Jensen Huang, he basically talks the talk. It just doesn't seem like Wall Street and maybe some of these analysts are buying it at this point. You really traded up to 180 today, during his, and then immediately fell, but now down again today. So these reactions are kind of puzzling.
Okay, looking a little better. Palantir. Looks like it might go again. Try to take out 160. Yeah, Palantir looking good.
Not just us, you've got analysts as well who are, reiterating their views on it, still bullish conviction around it. B of A's got a $300 price target on it, named it as a top AI pick. Wells Fargo
All right, Bitcoin turning back up, BITX, Coinbase. All right, S&P is starting to rally a bit more.
It's basically been sideways, and the market it doesn't rally on good news, and you just wonder, right? Like, why would I look at a bullish trade here? Well, if you sell a cash secured put, and this is what I'm looking at, it's about a 2-week trade. It's the April 1st expiration, selling the 175 strike. When I priced it up, you could do it around 280. I think you can probably get around $3 now that the stock's pulled back. But the idea is that
Okay, Apple going here. Apple's going. Apple going for new highs.
but it's just interesting, like, an RSI at 48, not really bullish, not really bearish, kind of in the middle.
Apple's going. Looks like it's trending right now.
Another indicator that I look at that's down around 15. So it's basically showing you a trendless stock that's not doing much. And a lot of times when you find a trendless stock that you're selling premium, even though the current IV percentile is still fairly low, I don't think it's because if it's a stock that you want to own, I think probably 170.
Apple looks good on the 60-minute. Turning the corner. Apple. What's IBM look like? IBM earlier, we identified a potential trade on IBM. Looking for that to follow through. Might need another couple of days, but for now, it looks okay. Hedge flows trying to turn up. Resistance is up here at the highs. You can see a lot of these trades have come off already. A lot of these trades have come off above 670, 6770, 6775. Looks like they sold some 6700s. That's getting pretty significant here. So we're just in between these levels, 6700 and 6770. Tesla, maybe a bounce here on Tesla. All right, let's see what these look like. Tesla almost overbought now on the 1 minute. Apple, same thing. Apple at the highs. Nvidia might be a trade here. Nvidia came off the low. Nvidia disappointing. I thought it was going to do very well yesterday. S&P pulling back now. S&P not getting any kind of follow through. Still in this descending pattern. S&P 500.
Break even on that position. I went a little bit more direct on this one, Joe, because it seems like there's just not a lot of option premium in NVIDIA. It's a $182 stock, but there's not a lot of maybe built-in skew here. The current IV percentile rank only about 17%, so pretty low, but we've already had earnings. We've already had the GTC keynote. So I looked out in the April monthly options here, Joe. I've got basically 31 days to expiration. You got a month in this position where I'm going to buy the in-the-money 185 strike put, and then that's bearish, right? You're buying that put that's in the money by a couple bucks, and then against that, sell the 170 strike put. So a bearish $15 wide put vertical. You're going to pay roughly about a $5.30 debit for that. The debit you pay is going to be your risk. So $15 wide, you're paying about a third the width of this bearish put vertical. It takes your break even down to 179.70 to the downside. So you've got a little bit of movement to the downside on a percentage basis, not that big of a move. But the debit you pay is your risk on this one. It can expand to $15 if we go below 170. But Joe, when I look at a trade like this, and yeah, I'm only paying 1/3 the width of it. Yeah, I do need a move to the downside, but I got a little bit of flexibility. I don't have to wait for expiration if I get a move ahead of that April 17th expiration. And Joe?
Okay, looking for Bitcoin to maybe give us some catalysts as well. We have some risk-on signals, junk bonds. Let's see what it looks like right now. Junk bonds off the highs of the day. Same thing that happened last Monday, Tuesday. We had a pop and we fell Wednesday, Thursday, Friday. This time we got a pop. Do we fall Wednesday, Thursday, Friday again and drop down? S&P drop down to the 200-day? That's the concern. That's the concern. Selling into strength. I'd like to see this turn the corner. The one good thing we've got going, well, there's several, but one of the good things we have going is that breadth continues to improve, telling us that they're buying the dip. Number of stocks above the 20-day have turned for a third day. Started on Friday, a little hook upward on Friday, giving us an indication that we could start off Monday with improving breadth. That was the case. Today we got improving breadth again, but we can't seem to make higher highs. So it's kind of a conundrum here. Looking at the New York Stock Exchange. Okay. McClellan volume oscillator at extremes. This could turn up, reverse this downtrend. Nothing yet. New York Stock Exchange, new highs minus new lows, giving us indication that we're seeing the same thing here. Above the zero line. Blue elder sticks need to get back above 22.5. S&P just won't cooperate. IWM, let's see what IWM looks like. IWM, no follow through. Same thing here. Last week, Monday, Tuesday, we bounced. Wednesday, Thursday, Friday, we dropped. Qs, 100 stocks, still in a very tight range, basically. 592 up to 615 or so. If we do get a Zweig breadth thrust indicator, it's probably going to come 2 or 3 days from now. We continue to rise. But just not enough energy. All we see is potentially institutions buying the dip. All right, Palantir looks like it wants to go here. Watch Palantir. Palantir showing some strength. There goes Palantir. Palantir again, trying to take out the high.
No politics, no spin, just the market from open to close and beyond. Streaming 24/7, any screen, anywhere at schwabnetwork.com.
Palantir, can we get a follow through? Palantir with the follow through. Aqua has earnings tonight.
measuring from a very low bar. I mean, this is a company that, with our data and the stock, has been in decline for quite some time. Even if, on the last earnings report, they beat. They had a good report. The stock went from 184 to 203, and now it's sold off since then. 61. So there's really no conviction from Wall Street, and no one really believes that Lulu's worth what it used to be. And I think that really comes from this narrative shift where it was this very fast grower with high margins, pretty much the main player in luxury athletic wear, and now that's not the case pretty much on all accounts. I mean, they don't have the fast growth anymore. Their margins have been slipping significantly. I mean, I think gross margins are down almost 3%. Operating margins are down 3.5% to 17%. So these are big shifts, and we're not talking about 20 or 30 basis points. These are big number moves, and they're not the only one in the game now. So now, as an investor, you're looking at a company that's, it's still premium, but it's growing much, much more slowly. It's got a lot of competition. They talk about rising costs and tariffs taking a piece, currency volatility, threatening some of their margins. But when we look at the story right now, as you can see, Lulu has a significant increase on a year-over-year basis. But again, it's very important to understand that last year they really stunk. I mean, they were very, very low. So the denominator in this is very small, which is going to boost the entire fraction. That's why they're a plus 46. Some of these other names have been doing well. And they continue to do well, like OnCloud, for example. So this is, put an asterisk next to this one. But it is a sign of hope for investors that maybe the bleeding has stopped. Maybe we've got a bit of a turnaround and the bottom is in. And that case can especially be made when you look at just the holiday data over the last, 2 or 3 months. It was very much up. On a year-over-year basis, as you can see, plus 46% here. And it's just kind of like, if you look at that chart, it's like Lulu was on this slow and steady decline. Then all of a sudden, last holiday quarter was a massive spike. And it's a bit of a signal, at least to us, that the bleeding has stopped. This valuation may be starting to get a little bit low. Again, it's not what it used to be, but it's being oversold quite a bit at this point.
That you mentioned the competitive nature.
No follow through.
We've seen it, right? Whether it's Glory, Aloe,
S&P, no follow through. Palantir, still having an issue with this 155 area, 160. S&P drifting lower. S&P. So it seems like everyone's on the same page. Just like last week, bounce, pop Monday, Tuesday, sell into strength, down Wednesday, Thursday, Friday. That's what it looks like we're setting up for again, despite the improving breadth.
Yeah, it has been. And it's kind of a bummer because for a while, it was a portfolio darling. I mean, every time we came out with data on it, it was positive, it was strong. And then there was a shift, and it's kind of been the opposite story for a long time.
All right, Bitcoin did look like it was going to get back above VWAP. Just got rejected at VWAP.
On the data side, and we'll see if it carries over to the stock. But it's happening from that holiday shopping quarter that we've seen so much strength in retail on. And you can see last holiday quarter was just a little blip there. And compared to this one, a huge run up. I think they even talked about it on the last earnings report. They had some insight into that, saying it's starting to look strong. I think it's going to come out stronger than they expected. But still, you've got a pretty sour narrative where it used to be this fast-growing, high-growth, high-margin premium brand, and now it's got tons of competition, slower growth, lower margin, and mostly focused on China and international when it comes to growth. And so it's a tough, it's a tough spot to be in as an investor. But I'm here to say that there's hope. There's hope on this last earnings report, the one that's going to come out here. I think that we're going to see a nice move to the upside on the revenue and sales data. Obviously we don't have insights into expenses or what margins may be, but I think that top line number is going to be strong enough to at least make the bears start questioning, saying, you know what, maybe 160 is kind of low at this point. Maybe we can see a little bit of a run up and they'll cover their shorts, and maybe some cash on the sidelines will start moving in. We'll see about that. But when we look at the Main Street score of 61 and the Wall Street score of 10 out of 100, it tells us that consumers are they kind of like the product. It's more positive than not, and investors hate.
If this trend changes in the afternoon session, it'll be very obvious. We'll break this uptrend, break this downtrend. Apple backing off at the high of the day. Apple. All right, we just got rejected at the high of the day again. Palantir. Okay, we could potentially get to 160 Palantir.
No, it's definitely not completely out of the woods. I mean, there's a lot of concerns, when it comes to competition, the costs, the tariffs, all, the margin concerns, that getting squeezed. None of that's attractive. However, ask any business owner, sales solves all problems. And, revenue is always helpful. And I think that we're going to see a strong Q4 coming out of them. Strong numbers out of the holiday and strong from the New Year's resolution cycle, which they do get a bump from as people start to decide to, work out more and buy these kind of clothes. And so I think they're going to get a bump on the top line. And it's not like the end of the bear market for Lulu. I just think that
Oracle just feels like no one's interested in Oracle. It just keeps fading from its earnings pop.
All right, thank you, Landon. That's Landon Swan, co-founder of Likefolio, with a look across Lululemon ahead of its earnings that come later today. Now, from the trading perspective, all things Lulu. Tom, you got some good insight from the Likefolio team. He mentioned, listen, like you said, it's a low bar. It's been a low bar for some.
And you can see here, it's not the top issue. Tied for number one, higher oil prices in terms of threats to the economy and the war in the Middle East, continued high inflation, policy uncertainty, and global economic weakness, which is something to think about in terms of what happens overseas to the economies from oil prices ricocheting back on the U.S. So private credit concern, not a leading.
All right, we had a few stocks that bounced back up to the highs. Apple, Google. That's about it. Amazon's off the high of the day.
Yeah, look, I think if you pull those 5 graphics off the board and 6 months goes by, we'll have 5 new ones that we can replace them with. And these concerns are, some of them are evergreen. Like you could throw out like budget deficit. I mean, it's actually very
ExxonMobil off the high of the day as well. ExxonMobil made a new high. If you took a long last week, I'd probably be scaling out a little bit because the calls are getting really expensive up here. So even if prices do move a bit higher, you can start losing some implied volatility. All right, Snowflake just dropped off. Snowflake. Microsoft dips.
people I know in real life, guys that install alarm systems, insurance salesmen, car dealers. You know what they do when the market's down 5% because oil's spiking, or when Trump says something out of pocket about tariffs? The first text to me is, all right, what should I buy? Until that flips, and it might, but until that mentality flips, I remain steadfast in what I was saying earlier.
Microsoft buyers at the low of the day. Microsoft. Palantir looks like it wants to keep going.
Change people's attitudes? Yeah, of course. But that's not the situation that we're in. So, that's the way I think you want to think about the market setup today.
No, I'm with you on that in general, because 5% down doesn't necessarily mean everybody should be screaming and running away. In fact, we had a 5% pullback in November, and I don't think on any of these metrics you saw the panic in the numbers, and we did recover. So it wasn't exactly like, a new bull market launching, but it was recovery back to new highs. So I guess that's just one way to contextualize all this. Just quickly on the financials, though, I do wonder if you're concerned that they haven't been able to make much of great earnings, obviously for the fourth quarter. The idea that they have this nice regulatory runway, they're going to get capital relief, and that they're kind of this sort of little bit of a problem child when you look at the leadership.
First and foremost, if we wait for certainty, Mike, you're going to miss a big, big move, right? I mean, if you sold on Liberation Day, you missed 35% growth for the next year. So to me, the market always climbs a wall of worry. To John whatever flavor of the month is in terms of what we're worrying about. That's okay. That's why I always focus on the fundamentals, and that's why I always focus on the economy and the data points that we're getting, not only from the government data, but also from the companies. They tell you an awful lot of stuff at these conferences, and that's why I felt really good about adding to Truist last week and adding to the financials down 10-15% on the year, because I'm not concerned about the private credit issues for them. In fact, I can make an argument that the big six banks have taken market share from the
All right, Palantir looking for a push higher. Palantir. S&P turning back up. Got to break this downtrend in the S&P.
Speaking of things companies tell us at conferences, we really got to get to NVIDIA and what Jensen Huang has been saying over the last day plus, and also how the stock has reacted to it. I do just want to have his take on what he was talking about when he threw out that $1 trillion backlog number. Let's listen to his comments.
We already have.
All right, S&P is starting to move.
Visibility of $1 trillion plus of Blackwell and Rubin. Not anything else, just Blackwell and Rubin. And so, we still have 21 more months of new orders coming in. We still have all of the other things that NVIDIA sells.
S&P trying to turn up here. Watch S&P.
The ecosystem needs to know directionally where NVIDIA is going. Now, of course, we plan with the supply chain. We help everybody with their capacity building. We prepare all the technology partners so that we can support $1 trillion worth of Blackwell and Rubin. And so it's an incredible thing.
All right, I got to take a couple of minute break. I'll be right back.
How well Darren Woods is doing at Exxon. You see how well the Generico Fruit is doing in Mayo because it was carefully planned. They were insiders. Everyone knew. You didn't have the risk of the outset. And I think boards need to focus far less on quarterly earnings, but they can't do anything about it, and really focus on strategy. Where's the company going, and how could external events like AI, like a war, interject and interrupt those impacts? And then I would say don't overreact to short-term changes. Your stock, like Adobe, was just way up record increases for 17 and a half years, and now it hits hard times, and boom, they want to change. We'll see if they can bring in somebody as good as Shantanu.
Dale, as always, great to have you on the show. Thank you, sir.
Thank you very much. Great questions.
Coming up, the war in Iran is complicating the Fed's rate cutting path. We'll talk about that next.
Everyone has free offers on the latest phones, but T-Mobile gives a lot more. T-Mobile families saved over $3,700 compared to the other big guys in the past 5 years. Our experience plans include amazing benefits like Netflix, free Dash Pass by DoorDash, and a bunch more. Oh yeah, and a 5-year price guarantee. So you keep saving. Save on a big scale. Switch to T-Mobile and even pay off your old phone up to $800. High electric bill? Get the monkey off your back and call Air Mechanical. We provide installation of Amana heating and cooling units, repairs, and 24-hour emergency service.
Let Air Mechanical help get the monkey off your back. Call us today.
Hey, brushing besties. Yet another toothpaste that does not wipe. Girl, this one works. Dr. Torres? Guys, you need to try Crest Bridgie Wipe Deep Stain Remover. Basic toothpaste stops at the top. Crest goes deeper to dissolve the bonds that hold stains and teeth, lifting them away. For whiter teeth in one day. Obsessed. Crest.
Whoa. Word on the street is you beat the big box stores on price.
Yes, sir. We're 100% employee owned and will beat any competitor's price by 10%.
I like it. We'll be needing a kitchen. Oh, with some soft closing cabinets. Keep things quiet.
Absolutely. Right this way.
A kitchen for everyone at family-friendly prices.
So you do the designs too?
Free of charge, and we'll walk you through every step.
Home Outlet. Kitchens, baths, floors, and more.
Monday, Tuesday, Wednesday, Thursday, Friday,
This game is free to download. If you're lucky, you could win up to $2,000 in 10 minutes. No ads, no withdrawal limits. Withdraw to your bank account quickly. Try it out. Players can't get enough of Tiki Solitaire. Try Peaks. Tap through tropical beaches, deep oceans, and icy peaks. Stack your streaks and rack up those shiny rewards. Win big and celebrate every card played right. Join the fun today. Download now and dive in.
The Federal Reserve begins its March meeting today as the ongoing war with Iran is throwing more uncertainty into its rate-cutting path. So let's talk about the rate picture, the economic picture with Andrew Sidorowski, Morgan Stanley Senior Fixed Income Portfolio Manager. He is here with me in the studio. So we're not looking for a cut tomorrow. We know this. However, what we do know is that maybe things are a lot more complicated now because of this war and because of higher oil prices. So how are you thinking about what all of this means?
Yeah, I think what the Iran war does for the Fed is it kind of delays, not denies, these rate cuts. So I think that obviously we know oil's been shooting up. We know that's going to feed into headline inflation. Ultimately, I think the Fed's going to look through that, but it's going to take them some time. They want to make sure that there's not kind of spill-on effects into the service sector, other parts of the goods sector. And I think a year from now, the Fed will be, the Fed will be cutting more than the market's pricing in. But I think in the short term, the Fed's just going to be sitting on their hands. Doesn't matter with the new Fed chair coming in, they're not going to be able to do anything about that.
What about the pressures on the growth side of the equation? In other words, oil prices, higher oil prices aren't just a risk for inflation, they're a risk for growth potentially also. So then, if that's the case, does the Fed get stuck in a very tricky position?
Yeah, I think the Fed's already in a tough position because you have a labor market that's continuing to weaken. We've had actually 5 of the last 9 labor reports have actually been negative. So if the Fed was just to look at the labor market, they'd want to be lower than they are today on the Fed funds rate. If they're looking at the inflation side, we know the headline and core just came out 2.5, 2.4% above the Fed's 2% objective, but they want to be higher than they are today. But I think what this does is it's going to put more pressure on the low-end consumer. I think, as you mentioned, what this is going to mean for growth, the longer oil prices stay elevated, what we've seen historically is it has a negative impact on growth. It could be 0.1, 0.2% of GDP. If this persists, yes, it could. And I think that's something that's just going to keep straining that low-end consumer. They're going to pull back on spending. And I think it's a little too soon to see that yet. But it's something, if we continue here at these oil prices, you're going to see that.
And then is there also a read-through we need to be thinking about for jobs as a result, right? If you get some economic weakness, is that we already are seeing what looks like a maybe weak but stable job market? So I don't know. How are you thinking about that part of them?
The longer uncertainty persists, what we've seen is historically is, look, companies don't want to hire. We already had a labor market, as I mentioned, that was kind of slowing. And I think we're entering a stall speed. We're in this kind of low hire, low fire environment, or actually no hire, low fire environment the last 6 months. And so I think that this is just going to put more stress on companies. They're not going to want to hire they're going to wait. They want to wait and see. And I think that what we've seen, as far as publicly traded companies is you're seeing them kind of do more with less. And that's not just the war. That's certainly kind of AI and other things starting to come into play here. And so I think for the labor market, this just puts more pressure on it, which just means the Fed goes more later. I think that the longer this persists, the Fed's going to end up cutting more, not less from this.
Interesting. Okay, so let's talk about how all of this is manifested in the rates market. We've seen treasuries kind of now go flat for the year because rates have come higher, yields have come higher. Does that make sense to you? And given your longer term outlook, does it present an opportunity?
Yeah, I think that in the short term, look, oil prices rising, that's kind of moving front end rates, and that's taking cuts off the table for 26. But I think the bond market, needs to be focused more than just the next 9 months, at the next kind of 18, 24 months. And I think this is creating opportunity. As you said, rates backed up 35, 40 basis points to start March. And I think that this is, if you have a long-term view and not just the next couple weeks, this is a great opportunity. We're getting more yield. We're also getting more spread too, because in addition to kind of base treasury yields rising, we've seen high yield spreads widen 50, 60 basis points. And so I think that's something that spreads were quite tight before, and they were getting kind of uncomfortable in a lot of markets. So I think this is a healthy resetting we've seen. And it's not just the war in Iran. Again, there was software. It was kind of bleeding into other sectors over the last couple of months too.
I'm going to zoom way out now because there was an interesting piece I saw in the New York Times earlier this week, late last week, by Kyla Scanlon, who is sort of consumer-facing economics writer, I guess you would call her. And she brought up the idea that it's been brought up many times before about foreign buying of U.S. treasuries, but through the prism of this war in Iran and the U.S. sort of as an unreliable partner, if you will. Again, not a new idea, but something that keeps flaring up. Is that something like over the long term you think is going to be more at risk?
Yeah, I think in the short term, the United States benefits from the fact that there really is no alternative that can handle this kind of size. We have 36, 37 trillion, and there's no one market that can replace us. Now, you don't want to kind of just sit on your hands and assume it's going to be that way forever. I think what we've seen is, though, that over the course of the last kind of year, 12, 18 months, some investors are looking to diversify a little more out of the dollar. They're looking to kind of put money to work in Europe, in emerging markets, and you're seeing kind of positive flows into emerging markets. So I think that's something that we don't want to assume we will be the reserve currency forever. Certainly we are today, and we benefit from that with lower treasury yields. But it's something that it's certainly, the more kind of adversaries we make over time, the more negative effects that's going to have. I think the other thing that's going on at the same time is that you have the austerity age in Europe is over, where they're issuing more debt. You have China that's issuing more debt, Japan. So these things are all coming together all at once, and it just means that what I think it means is there's going to be more term premium to go out 10, 30 years on our treasury because there's more supply and there's also more uncertainty.
And we talk on the show a lot about international equities. We talk less about international debt just because it's not something that a lot of retail investors are in. But of those markets you're talking about, there are alternatives. What's attractive to you there right now?
Yeah, look, I think that one of the places we like, just in general, just to kind of paint a broad brush, is emerging markets that for years you had these negative technicals. And really coming out of the pandemic, what we saw is central banks in most of these emerging markets didn't have the same leeway that the Fed did, where they couldn't just say inflation is transitory, we're going to wait and let inflation kind of fizzle out. And so they led this hiking cycle, and they've been kind of leading this cutting cycle. And I think that's something that you're now on the kind of tail end of that, and you're seeing that things go the other way, where you're seeing kind of positive bond fund flows, like going back to our last, where people are looking to diversify. We've seen kind of 9+ months straight of positive flows into just general emerging market bond funds, and I think that's a nice catalyst.
All right, looking for the S&P to turn back up. Still having a lot of difficulty. Palantir at the highs. Palantir near the highs. 155 is the call wall. Looking for prices to gradually grind up towards 160, perhaps. The upper call wall. All right, Microsoft starting to turn the corner. Short covering on Microsoft. Okay, looked really good this morning, only to see sellers come in. So you know that there's still an appetite to sell into strength. Microsoft. Okay, we're still seeing potentially a bid in Bitcoin. It's pretty dead as far as momentum across the board. There are some stocks that are working. Baker Hughes coming off the low, back above the 50-day. Baker Hughes pretty strong today. Chevron pretty strong. The problem is all of these are overbought in terms of calls. Calls are very expensive. So you run the risk of being of your options prices contracting. So if you're trading, I'd hate to say buy shares, but better off. Chevron, all of these are coming off the highs, but calls are very expensive. When this is over on the right side, you can see all of these energy names. Calls are very expensive. We got risk reversals here, 83% risk reversal on something like ExxonMobil. Okay, so if you're buying up here at the highs, the risk is very high that this is going to reverse or at least pull back in a little bit. Okay, Palantir still hanging in there. Microsoft coming off the low. Microsoft coming off the low. All right, so let's take a look at Microsoft on the 1-minute chart. If you're day trading, you want to use the 1-minute chart. Enable RSI. Okay, enable RSI. You can see Microsoft coming off the low. RSI has been making higher lows, higher highs. Looks like Microsoft wants to go here. We need to get back above 420. For now, though, 400. Looks like we're going to pop above 400. Microsoft turning back up. Microsoft looking good. Netflix. All right, QQQ. Okay, let's take a look at the QQQ. QQQ, PQQ, QQQ. QQQ. Okay, watching RSI. It's kind of flat right now. Microsoft looking pretty good, though. Microsoft, let's see what Netflix looks like. Check the RSI. Netflix. Palantir. Excuse me. Wow, that snuck up on me. Palantir. Palantir kind of flat right now. RSI. S&P trying to turn up. S&P 500 trying to turn back up. That time of year, spring, got a lot of pollen in the air. There goes the S&P. S&P is starting to move. All right, S&P is on the move. Long way to go. Long way to go, though. S&P is looking like it might follow through. ExxonMobil squeezing at the high of the day. Energy stocks. Okay, Dow Jones. IBM. Looking for IBM to follow through. The 1-minute chart on IBM. IBM looking for a follow through. Kind of dead. Momentum is clearly dropped off from about 11 o'clock. Momentum on a lot of stocks look very similar. So the edge right now, lack of momentum. Here goes the S&P. S&P starting to move now. S&P on the move. A little bit more upside. Let's see what the hedge flows say. Hedge flows on the S&P. Higher highs, higher lows. If I go to the 15-minute, it'll look more like a cup. Looks more like a cup pattern on a 15-minute. Resistance overhead at 67.55. There is about $40 between futures and S&P cash. There's about 35 to 40 points differential. $45, about 45 points difference between futures and the S&P cash. S&P futures are at 67.82, 67.83. About 55, 60 points now. Now we need to get through VWAP. I'm trying to break this downtrend on the S&P. RSI is rising, S&P. RSI rising, S&P 500. It's a little bit after 1 o'clock on the East Coast. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It's Tuesday, March the 17th. Apple trailing off from the high of the day. Apple.
Details and the nitty-gritty of what this all means. Expanded partnership with NVIDIA. This is what's been announced here. They plan to launch a global fleet of entirely NVIDIA software-driven autonomous cars here. So they're going to be rolled out in phases. So the start is on the West Coast in LA and San Francisco in the first half of 2027. Then we will see an expansion across 28 cities globally, in fact, by 2028. So this technology apparently can handle some complex scenarios here. So you're talking about unpredictable construction zones and pedestrian behavior as well. So what is really key for the market is that they have been so focused very much on the physical AI side of the GTC announcements. And I think this is a really good example of that. To Uber and your point, I mean, this could be viewed as potentially a challenge, in fact, for the Waymos, the Teslas of the world who are trying to do this at scale as well. Uber, as far as the stock is concerned, is up over the last 12 months. It's been under a little bit of pressure going into 2026 along with the broader market. The reaction today up 6% perhaps reflects the enthusiasm going into this trading day, obviously, with this announcement, because people have been pointing out that anything related to NVIDIA and AI, is giving you a little bit of a lift here and a boost. But the market has been very much eyeing Uber's autonomous ambitions for a while now. Investors have been waiting for these companies like Uber to really come out and convince the market how they're playing the long game here. I've been talking to some analysts, and I spoke to Wedbush a few weeks ago about this. Investors have been very much toggling with the short-term operational setup of some of these companies that are doing quite well. I mean, the dynamics seem to be quite favorable for some of these companies as to their overall performance operationally, but the long-term risks also with some of the autonomous driving. There has been a view that the scale dynamic where Waymo and Tesla may
Apple's still trailing off. Microsoft turning back up now.
in 17 locations by the end of 2026. So
ARM Holdings trying to push higher. S&P looking a little better. S&P, RSI rising. VWAP overhead. MACD still rising. Okay, Tesla just popped up. Tesla pop. Tesla with a little pop there. Might be getting something going here. Tesla. Qs. All right, watch Tesla here. Tesla coming off a VWAP. Okay. Note RSI. It's above 50, starting to rise now. Tesla.
This continues to be a space that's facing ripe disruption from the likes of some of these, new prediction exchange.
Bitcoin, looking for that to push higher. Amazon pushing back up. Let's see what Amazon looks like. Amazon trying to get back up to the high of the day. Looked really good this morning. Looked like it was going to break higher. Amazon. All right, getting a little excited about the S&P. Now it's starting to get rejected, of course, as you would expect. Okay, looks like it wanted to do something, S&P. Reversing right back down before you even get the VWAP. The most important part about this week, Monday, Tuesday, we bounced. We got sellers into the highs. They keep selling into strength. Same thing happened last week at a higher level. We pushed up on Monday, Tuesday. They sold into strength on Tuesday and then reversed on Wednesday, Thursday, Friday. So we're alert for that kind of condition to show up again. I'm sure the bears are probably looking at it too. With the underlying breadth improving, it's kind of mixed signals, I guess you could say. We got mixed signals. So if you look at this, the equal weight is still making higher lows, higher highs on the daily charts, higher highs, higher lows. Pushing back up. If we go to the 60-minute chart, you can see we've changed the corner, rounded the corner rather. Okay, watching for S&P. Who's going to confirm? We started off the week with 2 bullish indicators, 8 neutral. The majority were neutral or bearish to start the week. So still trying to get this to turn the corner, S&P. With breadth improving, it might actually flip over into the bull camp. That's what I'm anticipating. Bitcoin trying to continue. Bitcoin has made an important turn. Bitcoin has made an important turn that we need to consider, in that it moved back above 76,000 last night after hours. We're above 75,000 as of this morning. We're moving through the 50-day. The 9 EMA is crossing up. 21-day will cross up through the 50-day, starting a bullish trend. Let's take a look at Zweig's, Gerald Appel's MACD. All 3 are bullish. You can see Bitcoin, all 3 are bullish since the beginning of February. We haven't made much progress, but now we're starting to see price action motor higher. Look at the volume. Bitcoin looking good. MicroStrategy, same thing. MicroStrategy clearing the 50-day moving average for the past 2 days. All 3 MACDs are bullish. Let's see what Microsoft looks like. Microsoft, Apple, Amazon. Amazon looks like it could follow through. Google. Booking.com, BKNG, the top of the NASDAQ 100. Booking.com is looking very bullish. All three time frames are bullish. Volume is starting to pick up as price action makes a higher high, higher low. IBM, we talked about this morning. Okay, all three time frames are bullish. In MACD, that's a function of price. Higher lows, higher highs. Looking for a move above 260 on IBM. Everything's pointing to a potential move. It's just that we got too many sellers into strength. Every time we get a strong move, sellers come in. We saw that on Microsoft this morning. Trade Desk did manage a turn, higher low. MACD on all three time frames are bullish. Volume doesn't look that great. So we're bouncing off the 20-day. Try to get above the 50-day. RSI is rising. S&P still no follow through. S&P. Okay, you can see the short-term MACD is trying to cross over. Currently showing a cross. MACD. So we still need the intermediate time frame 1226 and the longer time frame 1939 to turn. Beginning stages, knowing that the last couple of last Monday we saw a bounce and then it sold off Wednesday, Thursday, Friday. So we're very aware that that could be the case with the backdrop of breadth improving. So who's going to win? Who's going to win this struggle? Breadth says they're buying the dip. All right, so that looks good. S&P watching.
Really appreciate you helping us kick off the show here today. As always, make sure to check out Sam later on this afternoon for Market on Close. Coming up next, we got our Chartmaster segment. We're going to be looking at a couple earnings names ahead of those reports tomorrow. Rick Ducat will help us with the technicals and previews on both Macy's as well as General Mills right after this short break.
Stay connected to what moves markets. Download the Schwab Network app and stream live coverage wherever you are.
Intern, this place is incredible. It's where I get all your office supplies. Your golf balls, your fancy coffee, your giant TV. It's everything in one place. It's like Schwab. Everything investors need, all in one place. Come again? Yeah, Schwab, they can do everything. Invest, trade, get full service wealth management, and anything in between. I think I'm gonna be sick. We have to buy that now.
Invest your way with Schwab. Whether you're a bull or a bear, you'll want to catch the latest market action on Morning Movers with me, Diane King Hall, live from the floor of the New York Stock Exchange, only on Schwab Network.
Chartmaster. I'm Alex Coff. You're watching Next Gen Investing here on the Schwab Network. I'm joined now by our lead market technician, Mr. Rick Ducat, for a look at a couple names ahead of earnings slated for late tomorrow morning. The case of Macy's as well as General Mills. Let's start with Macy's. Kind of a fall off a cliff as of late, but perhaps running into some supportive zones. Talk us through what you're looking at.
Yes, a bit of a decline here from those highs that we saw. 24.41 is where we topped out. From there, down about 30%. So we can see that the general trajectory, we had this kind of breakdown here where we saw a more gradual downward sloping trend line with our blue line here. But then things kind of got punctuated here with a much sharper decline here that took us below those relative lows near about 20. From there, we also took out 19, which was an old high and a subsequent low. 1650 stands out to the downside as a double bottom type shape. We also have our gap beginning and opening, or excuse me, our pre-gap high and our post-gap low at a 1350 and 1525. So those are some other areas that would stand out to the downside in this theme that, as we said, has seen some pretty severe declines heading into this earnings event. So our moving averages that we follow, our 5-day EMA has crossed below all of its counterparts very quickly here during the past month or so. Now we see that price is quite close to our dark blue 5-day EMA, near about 1726. Meanwhile, our orange 251-day EMA, the longest term and thus most significant, comes in at 1809. So price has failed to retake that key level here, so that now becomes a potential resistance point to watch out for. Meanwhile, RSI not painting a very positive picture either. Oversold heading into earnings here, reading below 30 in a trending market, typically interpreted as more of a sign of weakness here. So now when we look at our volume profile study, we can see that the node in which we are now between about 17 to 18, kind of the last stand before we break downward here. Not a lot of trading activity here due to this gap to the upside we saw. From there, the point of control comes in near 12, but things start to pick up again in terms of trading activity. Once you start to get around 14, that would be quite a drop off there if we start to test those levels once again, though.
Yeah, and you can see this stock can move quite substantially in short periods of time. And so using that as sort of the, I guess, reason behind this example trade going into earnings as a potential catalyst, extending duration going out to the April monthly cycle. What I looked at here was buying a strangle. So not a strategy we often discuss on this particular program, but this is buying an out of the money call, buying an out of the money put, looking for a large move over whatever the stated amount of time is based off that option's expiration. So in this case for Macy's, going out to the April 17th expiration, exactly a month away from today, and looking at a 13 put, 22 call. Those are big moves that would be required for this to get into that profitability zone and beyond those particular break-even points, but you're only spending 40 cents. So the idea here is limited risk exposure, big profit potential if you get the move. So maybe not the highest probability of success, but one that can, when it works, really work and work in a big way. So unlimited profit potential reason is it's no capped upside. If it goes to 30, 40, 50 or beyond, low probability again, this would participate penny for penny beyond 22. But 22.40 the break even, 12.60 the break even to the downside. That's if you hold it to expiration. This is a trade that if you got a big move, perhaps if there were open profits, many traders would look to offset that trade, close it out early, and capture those gains if it fits their particular investment goals. But that'll do it for our Macy's trade. Let's bring back in Rick, and we'll take a look at General Mills here ahead of its earnings release. And this one, not the biggest mover. And unfortunately for bulls, it's been very consistent like it often is, just consistent in the wrong direction.
Yeah, a pretty steady downward price activity that we've seen during this past year, mostly taking place between these two blue lines that are parallel to give us our channel.
You'd be surprised how often, if you were to draw a line going across notable highs here, connecting here, etc. If you were to just duplicate it, the parallel line often matches up with the lows in a noticeable way. Certainly not going to happen every time, but an easy, quick way to kind of project where you might find potential support or resistance based on this repeated kind of price boundary here. But more recently, though, we did see a breakdown here. We established some lows around this area near 43. Actually, kind of almost a head and shoulders type shape here with our neckline coming in at that 43 level. From there, we've had our breakdown, though, bottoming out at 38.59 so far. Short-term white steep trend line still in play here as we approach earnings. Our moving averages paint a picture of decline here as well. They're continuing to diverge from each other. There's not really any signs that the trend is starting to improve. Our short-term 5-day EMA lines up with our trend line. Our teal 21-day monthly EMA comes in at 42.74, a bit to the upside here. That could be another resistance boundary. RSI, much like our last chart, oversold, actually a bit worse even, a reading of 23 as we approach earnings. So volume in this case here, we have long ago given up the point of control. That heavy trading activity area comes in up here around 50. So that was quite a ways ago, but 46 to 47 here, 44 to 45 were the noticeable pockets to the upside. Starting to see a small amount of accumulation here between about 39 and 40. So once again, even more precarious perhaps than our last chart is this one.
Yeah, you can really see that breakdown, and you can see how those two critical levels coincide, both the break of that channel with that recent low, leading to a little bit more downside. So it doesn't always work that way, but as Rick pointed out, it can. You certainly saw the play out of that pattern. Quick look at example trades. We say goodbye to Rick and appreciate his insights as always. Taking a look at General Mills. Now, this is kind of, almost awkward given the information that we just looked at, but it's a neutral to bullish strategy. The stock's been a consistent downtrend. But if you're looking for a risk-defined way to catch that falling stock and perhaps add a bullish exposure into earnings, looking for this to be that bottoming point, this would be a way to think about doing that. And so going again out to that April 17th expiration, a little bit of cushion to the downside, not a ton, selling the 37.5 put, buying the 35 put, looking for at least 50 cents. If you're able to do that, it'll create a 4-to-1 risk reward, which you see here, risk 200, chance to make 50, and your break even at 37. So looking for a stabilization in a stock that's really been steady, but certainly not stable and continue to work down. So looking for a change of pace, perhaps earnings being the catalyst on this one. Thanks again to Rick. We're going to take a short break. When we get back, we'll be joined by Kevin Green. We'll be talking one of the stocks that is most important to the direction of the overall market, that of course being NVIDIA and all the headlines surrounding it. That'll be our topic of discussion for FOMO. We'll be right back.
For instant reactions, earnings breakdowns, and hot takes that teach you about stocks and markets, follow me on X at @NPetalides. And connect with me, Nicole Petalides, on LinkedIn, Facebook, and Instagram.
Trading at Schwab is powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization. And track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Live from Chicago, this is Trading 360. I'm Marley Caden. We track macro forces, market trends, and company news that shape investor decisions, all with expert analysis and actionable context, from inflation data to sector rotations, earnings to policy. It's a comprehensive view of the market every trading day. Trading 360, in-depth market coverage straight from Chicago. Weekdays at 11 a.m. Eastern on Schwab Network.
Stay connected to what moves markets. Download the Schwab Network app and get live coverage wherever you are.
Hey, Dad, I have a question for you.
Sure.
When did Granddad first start investing?
The torch has been passed to me, and my advisor Jennifer, she was with me with the journey, helping with the estate distribution. The two grandchildren, planning for their college educations. Someday it'll be their turn.
Welcome back to Next Year Investing. I'm Alex Coffey. It's time for FOMO. We're going to be joined now by Kevin Green, Senior Markets Correspondent for the Schwab Network, to discuss NVIDIA. And, you know, boy, there's always headlines with this particular stock. And actually quite interesting for what the second half and beyond may look like from an investment profile for those who are actually choosing to put dollars to work in a stock like NVIDIA. KG, what do you make of it?
Yeah, I would agree. I mean, we saw the headline, speech by Jensen Huang yesterday, and he kind of talked about the high-level overview of the company, the direction that it is trying to move forward and really trying to focus on it. It's going to be more than just the GPU space here. Jensen Huang actually projected around $1 trillion in cumulative AI chip sales.
S&P just doesn't have any momentum.
What's also very interesting is the fact that they're actually looking at trying to expand into the CPU space. Now, this is something that they're not really known for, but they are able to try to capture a lot of this market share and really try to eat into some of the other major players like an AMD as well as an Intel. And so they actually did announce several different key products with their CPU offering that also is going to be integrated within their overall data center type of suite, from GPUs to CPUs as well as software. And that's going to be a key driver for them moving forward. Now, they have announced deals with companies like IBM, Adobe, as well as HPE. But for today, some of the interesting announcements that have actually come out of this conference is actually Comcast. They're actually looking at utilizing NVIDIA to deploy their AI infrastructure on the edge rather than actually in the data center itself in order to improve latency. And they're going to focus on three main areas within their product offering centered around what NVIDIA is going to offer. The first thing is going to be personalized also looking at small business concierge agents, and then last but not least, gaming latency reduction, which I'm really looking forward to if that does get actually implemented here. And you also have other partnerships like Supermicro announcing a new rack for their CPUs as well. So a lot coming out of this conference, a lot of enthusiasm. If you kind of look at a lot of the stock reactions, though, Alex, what I do find very interesting, not a lot of big moves to the upside post these announcements. Comcast, not really a big mover. I think it's up about 0.5% today. Supermicro, barely in the green so far. So it seems like the market's already kind of priced in a lot of this enthusiasm. And if you're looking at the announcements itself, there's a runway for NVIDIA over the next 5 to 10 years to really gain a lot more market share outside of just the GPU space.
Okay, KG, and so there's one more piece here that I'm going to add to this. I know you got an example trade, so we'll get to that in a sec. But they also said that once they fund their investment commitments, perhaps as early as the second half of the year, up to 50%, they actually say planning to use 50% of their free cash for investor returns. So think buybacks, think dividends. So my question to you, when we get there, seeing that NVIDIA's sort of price appreciation component has sort of stalled, is this NVIDIA trying to appeal to the investor base, particularly institutional investors that have had tremendous performance being investors for a growth reason, and also find a reason for them to stay as this company matures and becomes just more of a kind of blue chip, mega cap tech stock?
Well, at the current market cap, it's really hard to deploy capital in an efficient manner. And I think they have to look to see where that capital is going to be best fit. And if they're not going to look at reinvesting it back into the company and trying to expand their R&D, they could look at dividends and or stock buybacks. Now, if you kind of look at maybe the trajectory of the company, stock buybacks might be a little bit more likely rather than a dividend increase or a massive dividend increase. But that could be the case. Maybe they do want to kind of institutional investors that really do focus on the dividend portion of their portfolio. That might be the case. It just seems like it's they're looking at cash flow right now that they have to figure out where they're going to put dollars to work, similar to what we saw for Apple over 15, 20 years ago. And Apple still has been able to climb higher at the end of the day. It doesn't mean that it's going to slow down aggressively. It just means that they're just going to look at other options for the cash that they're generating.
Yeah, and I know in many ways NVIDIA has surpassed Apple, but if you think about the kind of trajectory that Apple took as a company, sort of the visionary company, the forward-thinking company under Steve Jobs, and then sort of this financial powerhouse when it came to just generating cash flow and managing a massive pile of cash under Tim Cook, do you see potentially a similar trajectory for NVIDIA, or is it so far ahead of where any company's ever been at this stage that it's really hard to project?
No, I think they're going to diversify. I think they're still going to be on the leading edge of tech, but they also need to be mindful as well. The ascension when it comes to stock valuation is also something that's unprecedented, and I think they know that, and they want to be able to make sure that they can keep their market share and expand it at a healthy growth rate, and that's how I don't think that you're going to see them completely fall off. And we've heard that same type of argument when it comes to Apple. There's a lot of people that talk about how Tim Cook isn't really that new visionary or doesn't really provide a lot of innovation within their company. But at the end of the day, he's a steward of capital, and he's been doing a phenomenal job over the years in order to deploy that capital in the right businesses in the right areas of the market. I think Jensen Huang probably is going to do the same, and this strategy, I wouldn't shy away from it. I think this is actually a welcoming adjustment for this company once they get to that step.
And obviously no way to know for sure, but he's 63. One could envision, at some point, Jensen may step aside and the Tim Cook-like figure that replaces him, whoever that may be, will perhaps take a company like NVIDIA to new heights, but only time will tell. I know you got an example trade, so let's jump to that. Talk us through how you're looking at trading NVIDIA given its price performance as of late.
Yeah, I mean, if you're looking at the last 6 to 8 months, the stock has been trading between a range of $170 to the downside, major area of support, and around $190 to the upside. We've seen it break 190, but it has not been able to sustain. So knowing that we have that very strong support, this is actually still a neutral to bullish trade. They're looking to actually sell a put vertical spread, selling the 170, buying the 165. This is for the April monthly expiration. Doing this for $8. So the max gain on the trade is going to be that credit received, $100. Max loss potential is going to be up to $400. And that's if the stock is below 165 at the time of expiration with a break-even point of 169. So kind of leveraging the technicals a little bit. If you look at the yesterday's candle, Alex, obviously we saw a very wide range, but it was more of a shooting star pattern, which did indicate a little bit of a reversal, which is why I'm kind of looking at this example trade near that area of support of 170 as your main area to try to sell premium against.
Thank you very much, Mr. Kevin Green, with the example on NVIDIA. We're going to take a short break. When we get back, it's going to be time for a discussion building on our just discussion with KG, the trends in AI. We'll see what consumers are working.
S&P getting a little bit of traction here. Watch the S&P. S&P catching a little bid here. S&P 500. NVIDIA catching a bid.
Your smile, Carl. Yep, your #1 broker's here to welcome your new little dependent. Actually, we invest with Schwab now.
They have everything we need all in one place.
I can set up for college fund.
I've been learning about trading strategies. Schwab helps me generate retirement income. All this Schwab is everything you need is making me cranky.
Does somebody need a nap?
Invest your way with Schwab.
Stay connected to what moves markets. Download the Schwab Network app and stream live coverage wherever you are.
S&P is starting to drive higher. S&P.
Biggest headlines to start the day, from volatile overnight swings to the earliest analyst calls.
NVIDIA looking good.
Ready, 8 a.m. Eastern, morning movers only on
S&P trying to go.
Welcome back to Extra Investing. We're now joined by Diane King Hall, the host of Morning Movers, Fast Market here on the Schwab Network, to discuss Lemonade after an upgrade, I believe, from Morgan Stanley, Diane, and doing a lot of heavy lifting, a stock that needed some help and getting it in a big way today. Huge move, 16.5%. What were the details?
All right, we need to get through VWAP. Otherwise, I'm thinking resistance for now.
Developments and deployment of self-driving and autonomy, right? We heard the latest about Uber and NVIDIA. We've seen all the, kind of plans for Tesla and others as well. This is insurance meeting autonomy. You already know that Lemonade is in the AI space when it comes to insurance. The questions about, how do you insure these vehicles? What does the data look like?
S&P still driving a bit higher. Trying to change trend.
Approach that Lemonade is offering that behavior-based pricing model. It does remind me of, things like what a Progressive does, or maybe what a Geico would do, where they, kind of track some of the data in your vehicle. So Morgan Stanley sees this as a first mover advantage when you think about autonomous vehicle data and real-world use cases of this. So huge move that you're seeing here in shares. Again, it's certainly helping the shares, as you mentioned, year to date, because they have been under pressure so far this year. So this is a big catalyst today. Analysts paying attention to this clearly based on the better risk modeling over time that they see. And then this early exposure giving Lemonade a head start here, Alex.
Good stuff. Diane King Hall will watch this name as it makes a big move today. We'll see if it can build on that into the near future. As we say goodbye to Diane, we welcome in Cam Harvey, a finance professor at Duke University, and also the host of Cam Harvey Through the Noise, which is a short, unscripted podcast series on a lot of these, really timely market topics. I was scrolling through them, Cam. First off, welcome and thanks for joining us. You cover a lot of different things, and AI is certainly one of them. I know you got one coming out soon. What are some things that are really standing out in the world of AI to you right now?
Yeah, just a link to the previous mention of Lemonade and Tesla. So think about the history of innovation in terms of transportation. So we had horse and carriage, and that was completely disrupted by a gasoline-powered car. And in terms of human disruption, it was no big deal, because the horse and carriage drivers were the taxi drivers of the gasoline-powered cars. The farm attendants or the stable attendants moved on to pump gas. And then fast forward to another disruption where Uber enters the market and disrupts the taxi industry. And again, there was just a relocation of people. So it went from taxi drivers to Uber drivers or Lyft drivers.
Yeah, and Cam, I think what you're
The current innovation is completely different.
Right.
Completely different.
That's what I was going to say, because what you're describing was an improvement in efficiency, but one key distinction throughout that process, which is we were needed still.
And so what makes this unique as potentially we see where this is progressing, there's no longer the need, potentially in some of these cases, for the human kind of steward driving the car, literally driving the car. We just had that NVIDIA Uber partnership, I believe, announced this morning, where, you know, autonomous driving. We know Tesla's working on that with robo-taxis. You got Waymo. So, Cam, are some of the worries that are bubbling around, you know, mass job displacement a little bit premature or merited?
Again, historically, this is very interesting because many people have made the case that through history, technological disruption leads to potentially mass layoffs, unemployment. Indeed, it's the whole idea in Karl Marx's Das Kapital that this would be the seed of revolution. And it didn't happen. So technology just created new jobs. So new innovation created new opportunities. But I think that this time is fundamentally different. So again, this is a very substantial displacement of human capital. It is not clear where the displaced human capital goes. And it's not just the self-driving cars. So think about, and let me just pick two industries. Number one, those that do tax.
All right, rejected again.
So the current models.
Bulls just don't have any kind of follow through. Microsoft just rolled over. So did Netflix. It's boring.
Able to prepare your taxes for whatever $20 a month you're paying for your AI subscription. So those that are doing that sort of job and those that are providing software to do that sort of job, well, that is at high risk. And the other industry that's at risk is kind of similar in a way, and that is the legal industry. We have 900,000 lawyers in the U.S. We have more than 300,000 paralegals, and every year 36,000 new lawyers graduate from universities. And I'm thinking, given that the current AI tools are very high quality when it comes to law.
Bitcoin's still rising while S&P can't make up its mind. S&P just feels like there's no momentum. Bitcoin, on the other hand, Bitcoin. Oh, shut up. Shut up. Shut up. Okay, Bitcoin, moving higher, Bitcoin. Bitcoin's got a little bit of an edge now that it's back above 74,000 this week. Okay, we hit 76,000 last night, I believe. Bitcoin, did it hit 76,000 last night? Last night, right here, what was that high there? 76,000. Okay, 76,000. Bitcoin feels like it's changing direction. 9 EMA crossing up through the 50 day.
We're getting new details today from an OpenAI all-hands meeting where leadership doubled down on the push toward their enterprise business and an IPO. Kate Ruby has more in today's Tech Check. Kate? Hi, Kelly. So that was the message from
All right, so Bitcoin is changing trend.
somebody who was in the room at her employee all-hands last week. The source says that she really emphasized why their enterprise business is so important. This was to employees. She really tried to rally employees around that message. According to this person, Simo, said that the opportunity is to now take ChatGPT's 900 million users users, turn them into high compute users, and transform ChatGPT into a productivity tool. As part of that, OpenAI has been shifting its focus from some of the less profitable projects within the business. The Journal was first to report some of these details. Someone close to Sam Altman also tells me it does fit within his broader strategy for OpenAI enterprise.
Bitcoin.
Had the most material impact on revenue ahead of an IPO, and OpenAI is going to need to prove more discipline, not just talk about it. And that is where CFO Sarah Fryer is coming in. I'm told by sources she's been getting OpenAI ready to list as early as the fourth quarter of this year, discussing which GAAP metrics to use. We have reported she has been putting out a more defined infrastructure spend, $600 billion versus more than $1 trillion to investors. And then Fryer also, I'm told, is beefing up the IR team. She hired Cynthia Gaylor, that's Morgan Stanley's former banker. She was the CFO of Dropbox, to really help get that message out to Wall Street, Kelly. All right, Kate Fernell, thanks. Want them to go public. Kate Rooney. Coming up, U.S. markets are under pressure this month. The S&P lower by about 2%, while the Dow's down about 4%. But international investors, boy, are they having a tougher time. Europe faring a little better than Asia. The Euro stock's down 4%, while the Kospi is down 10%. But do those dips represent buying opportunities? That's next on the exchange.
The mail's here early today. Mail. You got mail. All right, looking good. Bitcoin. Looking good. All right, Bitcoin. Show us the money. Show me the money, Jerry. I have it on because you're. All right, so we're getting Bitcoin looking better. Bitcoin.
Welcome back to the exchange. Stocks are drifting higher, building on yesterday's gains, but the S&P is still down 2% this month amid the Iran war, and the damage is worse overseas. France and Switzerland's markets are down more than 7%. In Asia, the Hang Seng has fallen 3%, the Nikkei is down 9%, and the Kospi nearly 10%. So does this weakness abroad represent an opportunity for investors who have missed the international trade? Let's ask Tim Seymour, the CIO of Seymour Management and a CNBC contributor. Hi to you, Tim. And I think the larger question is this just a moment to get into a secular kind of alpha generation story, or did the Iran war fundamentally change things because of energy prices?
First of all, happy St. Patrick's Day. Second of all, I think as we extend oil past $110,
issues for Europe. I would just note that in terms of the opportunity, there's no question sentiment. Bank of America's Fund Manager Survey notes this. I've noted, the price is noted. You've gone from basically 3/4 of the market saying Europe was going to have growth, relative growth that was going to be significant, and something that was at least quickly dialed down. There's no question that we see back to Ukraine and what that meant for European pricing on energy and what that meant for the European economy. I just
Bitcoin moving higher above 74,000 doesn't mean just go hog wild long. We still got a lot of proving to do. Risk on wise, junk bonds, breath needs to continue. We need to see more bullish signals. We started off the week with only 2 bullish signals out of 20. That's pathetic. So we need to see that confirmation kick into the market. So I wouldn't be getting too crazy on the long side. Maybe dabbling here and there. Keep some of your cash ready.
Every day are about how in short supply it is and the price increases and so forth. So, it's highly leveraged to those two companies, but as long as that's the story, I don't see why it can't continue to outperform, even with the energy headwind. But it's more that it seems like everybody agrees that these are still
Google high of the day.
longer-term growth stories.
Yeah, and if anything, so banks which have a higher beta sold off more, but tech is the overweight. And so Taiwan, Korea, and even Japan are places where
Apple turning back up. Tesla.
very comfortable. And I do think they're part of the tech trade that's less in question. They tend to be more on picks and shovels on hardware.
Tesla trying to turn back up. ABCD pattern. Here's A over here, B, C, D. ABCD pattern showing up on Tesla.
I know Peter Bookbar has been a fan of some of the Hang Seng listed stocks, and you don't have to comment on that per se, but it's India where I wonder, do they face kind of a double challenge here with energy prices? And also, I don't know to what extent AI really presents any kind of existential threat to their economy, but that stock market's down more like 6%.
Well, I think India came into this being a more expensive market, a universally known to be energy reliant. By the way, I believe I'm in agreement with Peter. We tend to see the world.
Okay, we got a cup shape on the hedge flows. All of this red over here on the left, that's long. Markets are long. Dealers are short. There's hardly any resistance overhead if we get any kind of pop. That's 0-day. Non-zero day options that are further out in time. 6770 is still an area where people are selling premium. Let's see what's squeezing today. These are the squeeze candidates today. Albemarle, Novavax, Delta Airlines. Delta had a pretty big move today. Delta. The transportation stocks were pretty active this morning. Delta, big move on Delta. Transports. Okay, that looks pretty good. Squeeze candidates. Delta. Looking good, Delta. I have some United Airlines. Hopefully that will continue. United, looking for that to follow through. Big reversal day. let's see what Novavax is doing. Novavax, I have a position in Novavax. I've had that for a while. All right, so that's squirting back up, Novavax. Let me see here, Novavax. Yeah, what do I have? I have the July 15 calls, July 15s, Novavax. Okay, Bitcoin, trying to continue. Bitcoin, S&P is just begrudgingly abstinent right now, not going anywhere. S&P is not going anywhere. Bitcoin looking better. Bitcoin does look better. We do have a 9 50-day cross, a 9 EMA 50-day cross. That's a swing time frame starting to set up. Okay, so Bitcoin, you should be paying attention to Bitcoin. You see this Kirby over on the left, Kirby, all the way up to 83,000. Okay.
Stocks are building on Monday's rally despite volatile oil prices and turmoil in the Middle East. Welcome to Power Lunch. I'm Kelly Evans. Brian Sullivan is out on assignment and will be joined for the hour by CNBC contributor and fast money trader extraordinaire. Success. Steve Grasso.
Wow.
Welcome.
That's great. That's great.
It's great to have
Is it
you.
all fast money? I saw Tim.
I know. That.
Okay. All right.
Yeah. Stocks are in the green once again today. All three major averages are higher and shrugging off the turmoil in the Middle East. And it's not just stocks on the rise either. They have to contend with climbing oil prices. Brent is back above the $100 a barrel mark at 103 as President Trump suggests the creation of an international coalition to help protect shipping in the Strait of Hormuz. We'll drill down on all of that this hour. Plus, NVIDIA's trillion-dollar ambitions, the chip giant kicking off its day 2 of its GTC Developers Conference in California. It's not over yet, folks. They're still going strong. CEO Jensen Huang forecasts revenues hitting the 13-figure mark by 2027. A live report from San Jose in just a moment, and an NVIDIA investor's take on where the shares will go from here. Plus, cleared for takeoff, several airline stocks are rallying after raising revenue guidance for Q1 and shrugging off concerns about rising jet fuel prices.
All right, S&P coming back down. No follow through S&P. They're just not letting us go.
NVIDIA, which built the AI era and now has to prove it can keep owning the next chapter.
Bitcoin back up to resistance highs of the day. They've been running after hours, so maybe we'll get this after hours move. Bitcoin, NVIDIA looking good. NVIDIA about to go green on the day. Bitcoin rising.
Yeah, it's actually a big event that's happening right behind me. The analysts stepped down. The journalists are stepping in right now. And to your point,
Bitcoin.
just look at the share price. It's barely moving. What, up not even just over 1% since this financial Q&A has ended. And even up 1.5% since Monday, since GTC actually started. This is more about product headlines, though. It's about whether NVIDIA can actually defend its dominance as rivals push harder on cost, speed, and the next generation of AI, which is inference. That is a huge topic of conversation. So on the demand front, Jensen Huang, the CEO, making clear the $1 trillion revenue figure, which caused the stock to jump yesterday through 2027, is just starting. And he said, quote, "We still have about 21 months to go." In other words, he's implying that that number can go much higher than $1 trillion. And the number doesn't even include the new Grok inference chip specifically for memory or CPU-only racks that he announced just this week in terms of how demand is really ramping up for those CPUs. On capital returns, you got the CFO, Colette Kress, signaling NVIDIA will return.
All right, S&P is starting to get a bid here. S&P.
Cash flow through the end of, or next year, we should say, through buybacks and dividends.
All right, breath still looks good. Breath looking good. S&P is trying to bounce off of this level. It has definitely changed trends. It's been moving sideways. Looking for a follow through now. Back to Bitcoin though. Bitcoin 60-minute. Bitcoin 60-minute looking strong.
takes a lot to really move this company higher. Isn't that true? Christina, thank you very much for everything the past couple of days. Christina Partsinevelis. Our next guest has a big position in NVIDIA. In fact, it's currently her single largest holding. She also has some Mag 7 names like Microsoft, Apple, and Alphabet among her top 5. Let's bring in Ellen Hazen, the Chief Market Strategist and Portfolio Manager at FL Platinum. Great to have you back. And that's a high conviction, high stakes position in NVIDIA. And a stock, I'm sure you're probably a little frustrated at this point, 9 months of kind of treading water.
NVIDIA was such a great stock over the last 3 years. And it's true that in training, NVIDIA had 90% market share, right? It was the dominant player. Now, as we're moving into inferencing, there are more competitors. They're still looking at 65 or 70% market share, but you have AMD, you have some of the hyperscalers developing their own chips. So I think it makes sense that investors are diversifying their bets because NVIDIA might not be as dominant in this next generation as it was.
You sound like one of the bears talk. You're supposed to be like, but I'm so excited to hold on to it here.
But the thing is that the spending is growing so quickly. Look at how fast the hyperscaler spending is growing, up 65%, up another 60%. And as you look at that, the pie is growing so quickly that even if they lose some market share, and that's not a done deal, by the way, they could continue to dominate. Certainly the vision that Jensen laid out yesterday was very much the whole ecosystem, right? From the chips to the applications, to the infrastructure, to the energy, everything, right? And so maybe they will dominate. But even if they don't.
Looking for Bitcoin to continue. S&P still having difficulty as well. Google looking good. It's above its 60-minute 20 EMA. All right, so this is a starter positioning. Put a stop underneath either the 10 EMA or the 20 EMA. I just started overlaying the 10 EMA, so it's easier to see which crossovers a little bit quicker. You can have a stop a little bit closer to the start of the day. That's helpful as well. So looking for a follow through in Google. Google, looking for that follow through. 60-minute. Okay, S&P is trying to do something here. Tesla, ABCD pattern. Okay, S&P 500. Trying to get through VWAP now. It's at VWAP.
Certainly the concentration that we're seeing in the index right now is fairly unprecedented, certainly over the last 50 years. And does that mean that it has to revert to the mean, or can it continue to be more concentrated given the network economics of AI and the returns to that? I think it remains to be seen, but certainly you could see it grow. But again, to your point, I think that there are other companies that are smaller that have more runway ahead of them. But again, all of the above, we like TSMC, right? They play with all of them.
I don't know if you have a tech mandate. I mean, we're
generalists.
Here's one thing that I wouldn't say keeps me up at night. I don't do your job, but I wonder about, and it's a framing that Jeff Curry has used, which is that technology and energy rotate kind of inside.
All right, we're looking for a follow through here. S&P trying to get through VWAP. NVIDIA's turned the corner. NVIDIA looks like it's turning the corner. NVIDIA through VWAP now.
Could something similar happen now where we go from having the Mag 7 to the rise of, I don't know if it's Exxon per se, but do you think history might rhyme? Is it possible that there's going to be kind of like a rebound in market cap going to more of the energy materials, the physical
Okay, looking good. Google taking off to the upside. Google blasting off.
The gating factor is not going to be NVIDIA GPU chips. The gating factor is going to be energy. And so looking out a couple of years, I think that those prices will rise and supply will have to come online in order to meet that demand that the higher prices are reflecting. So I do think energy,
Google on the move.
Hand and fist, included in how NVIDIA and the whole ecosystem are going to grow. It's inextricably linked.
Steve, typically you need a strong. You look at Exxon, hasn't done for me what a Meta has done, historically. So I think
Tesla's good too.
I think to your point,
Apple turning back up. All right, we're starting to see a lot more bullish activity now. So it looks like they took out Larijani, right? The Iranian leader. Was that the third or the fourth leader? Larijani is out of the picture now.
Framed it properly. I think if you look at the Fortune 500 companies, the 493, their earnings estimates, growth was around low single digits. That's going to be double. And the Mag 7 was at 35 or 40% growth. That's going to be around 15%. So I think it's time to start changing.
Still rather be with the Mag 7. I mean, I feel like that's my.
Doesn't mean everyone's right.
Ellen, any parting words on this whole thing?
I think both can be true. I think that earnings can be broadening and you can get multiple expansion in some of those other areas. But the Mag 7 and tech more broadly still have higher growth rates, even if the gap is.
When are you getting out of NVIDIA or trimming it? I mean, if you're not doing it now, I know.
I think if we see the revenue growth begin to really slow down and or if we see a big product pickup that looks like they're going to lose share pretty quickly, that would make me concerned.
All right. Ellen, really appreciate it. Ellen Hazen joining us from FL Putnam today. We'll take a quick break, then coming up, crude above $100, diesel spiking above 5.
All right, can we get a follow through, or are we just going to get excited all over again? Bitcoin looking really strong here. Bitcoin, all right, 60-minute looks really good. I like the 60-minute, what I'm seeing. Short time frames are also very bullish. Okay, we're trending. Bitcoin is trending. Okay, so if you haven't started a position in Bitcoin, I would suggest maybe dabbling in some BITX. It's fairly inexpensive, BITX. Okay, you can pick up some BITX for what, about 18 bucks, 18, 14. Okay, that's trending. Looks good. Bitcoin. Consider some BITX, BITX. All right, market's seeing a bid in the evening session. Whenever it happens after 2 o'clock, you know it's institutions for the most part that are active.
Is showing very positive trend analyses for Archer Daniels Midland. It was interesting, as we just heard, as you were looking at Walmart here, and I was just talking with Kevin Green about what we're seeing from Delta Airlines.
All right, nice little trend. I'd like to see it follow through. Futures, as expected, higher highs, higher lows, but getting into some resistance overhead. Okay, so S&P not quite there yet. Bitcoin, watching Bitcoin to continue. I'd like to see it close above 75,000.
Walmart is not a consumer discretionary company. It is a consumer staples company because more of its revenues come from food than from apparel, etc. And as I think think about the big picture here, overall and how the markets are faring, the Fed is meeting, right? We have the Federal Open Market Committee. It starts today. We'll hear tomorrow at 2 p.m. Are they missing the boat? Should they be cutting this meeting, next meeting, or not necessarily?
No, I think there's still a relatively high wall of worry. Oil prices is the keystone right now in that wall. And if we find that oil prices remain stubbornly high, then that would adversely affect inflation because it will trickle its way through the economy in terms of transportation, petrochemical packaging, etc. And right now, inflation remains fairly stubborn anyway at elevated levels, and that would end up causing the Fed to postpone or maybe even end the prospects of further easing. So I think we're going to be listening very, very closely to the press conference tomorrow to see which way the Fed happens to be leaning. And our concern is they might be leaning a bit hawkishly, at least during the press conference.
But no recession, no bear market in sight. Is that right?
That's our expectation at this point. But we do have an asterisk saying that could change if we find that oil prices do continue to creep higher and remain elevated. There's an old saying that for every $10 increase in the price of oil, that takes off anywhere from 10 to 20 basis points of real GDP.
Wow, that's a lot. That is a lot.
See you, Sam Stovall, always Chief Investment Strategist at CFRA. Thank you so much, and I appreciate all the historical data too. So watch for that, right? $10 equals 10 to 20 basis points in real GDP. That could shave that off if oil continues to move higher. Thank you, Sam Stovall. Options Corner is next.
Netflix, no follow through. Netflix is still consolidating. Or the recent upgrades. All right, so if it builds a base up here, that's great. Fine, we can look for a break above 100. Once we get above 100, then we can start to look for stepping higher highs, higher lows. We'll come back to Netflix probably in a week or so and see how that's faring. All right, Google's still going. Google looking pretty good. Google looks pretty good. Okay, coming off the low, Google. Okay, nice rally. Google, RSI rising. Google looks very strong here. Google looking really good. All right.
Real-time access, data-driven analysis from U.S. equities to global macro matters. Schwab Network connects the dots. Watch live, subscribe free at schwabnetwork.com. And we're off. We're in the green, second day in a row. Haven't seen back-to-back gains like this since early February after 3 weeks of selling. I know we haven't seen that for a year. So take it as you wish. Tom White, host of Best Market here on Schwab Network, is with us. We're taking a look at a few names. It's funny, two of the names here were actually two picks that Sam Stovall just gave us. So let's start off here with Adobe. You're looking at real trades in real time. What's going on?
Yeah, if you look at their recent earnings report, Nicole, they beat on EPS, they beat on revenue. Revenue grew 12%, year over year, and that was just above expectations. And then they raised guidance also, but the stock still sold off. This stock's been in the penalty box for the last couple of years. 27% so far this year, off 36% over the last 12 months. Having a decent day today with the rebound that we've seen in the equity markets so far this week. But, there have been downgrades.
Continue to push higher. Google looking very strong. Bitcoin needs some more upside.
Very low valuations on a historical basis. Remaining performance obligations were at $22.2 billion last quarter. The current remaining performance obligations, the CRPOs, those were up pretty significantly also. So good news on the report, but it didn't seem to help the stock. But we did see some bullish activity in here, and this is in the March 20th monthly options that expire in just 3 days here. We saw a trader buy over 20,000 of the March 260 strike calls paid an average debit of about $2.50 for those, so that break even at 260.50 over the next 3 days. That's about 3% above the current share price. On a percentage basis, you don't need that big of a move, but at the same time, it's really short-term positioning. There's a lot of open interest built up on this strike, so either adding to that or a new trader getting into a position where we could see some more gains in Adobe, and it might be overdue for some more gains because it was a pretty good report that the company gave, but I still think that there's that overhang that AI is going to take a lot of their growth away.
Google looking strong. Need more upside. Google. 60-minute 20 EMA. This is your reference point. Watch that 10 EMA. As long as prices are rising, you're going to get the occasional dip. That's not your stop. If you drop out below the 20 EMA, that's your stop. For now, this is looking very strong. Google, Apple, just trying to turn the corner. Apple. Apple's just trying to turn the corner. Sitting on top of 20 EMA. If this can launch tomorrow, I'm expecting that to happen. That would be a nice follow-through signal. Put a stop underneath the 20 EMA. Google. Very nice look to Google. Looking really nice here. Google.
Most valuable company out there, $4 trillion in market cap. It's hard to move this stock, and that's probably part of the problem also in this one. But I did see some unusual option activity in here also out in the April 10th weekly cycle. So 24 days to expiration. I mentioned that 190 level that the stock continues to fail at. Well, traders sold over 40,000 of the April 10th weekly options, the 190 strike calls. Collected an average credit of about $4.50 on these calls that they sold. So the break even where this trader starts to lose money is about 194.50 over the next 3.5 weeks. That's about 6% above the current share price. So this could be somebody that's speculating that we're going to continue to fail at that 190 level, and they just want to collect some option premium, or it might be a big shareholder that says, "Hey, I got to turn my position into a covered call where I'm going to sell some on-the-money calls to the upside to create some yield on this position that's been stagnant for the last 9 months." So, yeah, big call seller here in the April 10th weekly option series for NVIDIA.
It's funny because you're right. It hasn't really been budging. It's been sort of in this range, but folks will take it because it's only 13% off the high and still has had such an incredible run. So let's see what happens next. Last but not least, Palo Alto Networks.
Yeah, stocks having a decent day today as the market's up, but it's still up about 13% this month, but still in bear market territory. 23%.
All right, futures coming back down again.
From October, so bear market territory for this one. On the 11th,
Bitcoin at the high, starting to get rejected. Google at the high, getting rejected. Amazon pulling back. Bitcoin.
Along with, it got a little bit of a pullback from that SaaS apocalypse that we talked about. A lot of software names got dragged down pretty significantly. Well, that went over into the cybersecurity stocks like Palo Alto and CrowdSpace too. So maybe that's putting some pressure.
Bitcoin.
They've been on a buying spree.
High of the day was over there around 74,905.
what they offer to all their subscribers and their customers at this point. So
Low ticker at -800.
All right, low tick alert. All right, they're going to drop this back down now. All right, just got our hopes up. S&P dropping off.
of the April 180 strike calls, paid an average debit of about $3.10 for these calls. So the break even where this trader starts to profits above 183, $183.10 over the next month. That's about 8% above the current share price in there. So maybe trying to take advantage of this bear market pullback that we've seen in Palo Alto. But I think the key is they've given themselves plenty of duration. You know, you've got basically a month in this position for the stock to recover some more.
All right, Tom White, thank you so much. Really appreciate it. Good look there. Options Corner, real trades that Tom comes through and finds them for us. Palo Alto, NVIDIA, and also Adobe. Now, coming up, Tom and everybody, I know you're going to want to speak to the CEO of Swarmer. Check it out. The stock's up over 600% since the IPO. We're talking drone technology software. It went public. It's soaring right now. Let's check it out. The CEO is standing by. We'll be right back. Kick off the morning with the data and the decision.
S&P 500, no follow through.
That breaks down the macro moves that's driving the price action, from Fed policy to global growth to inflation prints and geopolitical risk. Smart, fast, and always live from Wall Street to your screen. Morning Trade Live, where the markets meet the macro, weekdays at 10 a.m. Eastern on Schwab Network.
Okay, hedge flows turning back down. A lot of chop on the hedge flow line is pretty cyclical. Whenever you see this cyclical price action, even though this has a little bit of an upward slope, look for price action to stay in a range. You can also confirm that with up-down volume. Up-down volume at present is 2-to-1 on the SPY, 1-to-1 on the Qs, 3-to-1 on the NYSE. All right, let's go take a look at the NYSE. New York Stock Exchange, NYA. Okay, trying to bounce. We bounced last week too, on Monday, Tuesday, and then rolled over on Wednesday, Thursday, Friday. So we want to be attuned to that possibility again. We need to see a follow through tomorrow that would break the trend. Seen a lot of selling into strength over the last week or two, so we want to be careful there. All right, so that's a disappointment. I was hoping that we would get some kind of follow through at 2:30 in the evening. I'm your host, Cousin Benny, coming to you from the closingprint.com. It is Tuesday, March the 17th. Got about an hour and a half to go. Google. Google hanging in there despite the pullback in the S&P. Google's still hanging in there.
The timing is incredible. I mean, there's no doubt that defense stocks have been in favor, particularly because we've had, as you mentioned, Ukraine and that political wars in the Middle East with Iran, the timing for defense stocks was right on for you, was it not?
It was, but we are obviously just focused on building technologies that help the warfighter. And we've had great demand from Ukraine, specifically with smaller FPV type drones, small quadcopters. Those today account for more than 70% of all the casualties on both sides on the battlefield. Now we're also seeing a lot of demand for interceptors for obvious reasons. And there's additional demand for surface vessels, basically small boats that are operated remotely, for ground vehicles, for launchers, and from our perspective, anything that has a processor, is unmanned, and has a radio is a drone that has to operate.
So do you need to work on
Bitcoin just off the high of the day.
items, more things in the pipeline?
Nvidia pulling back to the VWAP.
What else do you need to work on in the years ahead, or maybe even months ahead? Is there something sort of pending for you?
There's a lot of stuff pending, and we are trying to expand the team as fast as we can
Bitcoin.
to integrate with as much hardware as possible. So we're making software that can run on essentially any hardware from any manufacturer and can be the glue that binds multiple platforms from multiple manufacturers together. But obviously, to get there, we need to work with every single one of these vendors and with every single one of these platforms. And that requires manpower and time. But we're hard at work. We're trying to move as fast as we can to become essentially the standard for making a large number of systems work and be operated by a single operator.
Yeah, it's pretty incredible. Software on any hardware system to have that compatibility, so you can work with multiple vendors. And I mean, will you also be using not only drones, but maybe interceptors and things like that? Will that software be used for things like that?
Of course, an interceptor today in Ukraine is primarily a drone that just hits a target that is moving in 3D space. Otherwise, there's not much difference in design or in the basic principles. So just as we can help regular attack drones operate by themselves without a pilot and coordinate among themselves in large groups, we can do the same thing with interceptors. And with interceptors specifically, since typically you need to launch more than one to intercept a target, then it really helps to have a group that coordinates and reassigns targets among itself in real time, as opposed to having the human need to make the decision of which
All right, Bitcoin looking for a bounce. S&P, it's proven it's not going to follow through today. NASDAQ 100. Top of the NASDAQ 100. ARM Holdings, Baker Hughes, Micron, Booking.com, Axon, Body Cams, Diamondback Energy, Airbnb, Charter Communications, Dexcom, MicroStrategy, Mondelez, MChip, Clack, Marriott, On Semiconductors, Shop, rounding out the top 20. So we got stocks advancing. The S&P is just reluctant to do anything. Bitcoin is trying to break out. Google is at the high of the day. Netflix just dropped off again, down to 94.50. Still basing above the gap.
We brought Eric Prince on board as our non-executive chairman, and now we're the first company from this Ukrainian ecosystem that is going public, and we hope to serve as an example to many more to follow.
It's unbelievable. You know, when I think about how this, you know, you have the computer background, you have someone from Ring Camera, you have Eric Schmidt come on from Google, and you formulate this company, license it, and move forward and sort of really help Ukraine. And do you hope to have government contracts from many countries? I mean, it's not a Ukraine story, right?
Yeah, we have sales teams in Ukraine, in Europe, and the U.S. We're seeing demand throughout the world. Obviously, we will only sell to the Western democratic nations, essentially NATO and NATO alliance. But we're definitely going to be active in
Looking for Bitcoin to follow through. S&P, no follow through on the S&P at the moment. Still a decent amount of up volume.
We are making the software itself, right? We're not making the hardware. So to the extent that anybody needs more chips, it's our customers. We make software that we sell to hardware manufacturers or integrators or primes, and they then sell to governments. So our only bottleneck is our own capacity to integrate and test various types of hardware, which is why we're raising more funds to hire more engineers, to integrate faster and be able to support to onboard new platforms in parallel as fast as possible. But definitely right now, our only bottleneck is ourselves, and we just need to execute.
How many engineers do you have now, and how many do you think you'll have in the future so that you don't have a bottleneck? Because you're raising more funds, you want to have the capital to basically give the supply that's needed for all these NATO countries, Ukraine, Europe, USA, etc. How many engineers do you plan to have compared to what you have now?
Right now, we're only 100 people total across multiple locations: Ukraine, Poland, Estonia, and the U.S. And the U.S. is the headquarters. We're going to hire as fast as we can find good people. I don't think that the numbers are the bottleneck to hiring. It's finding the best of the best, and that screening process takes time. So we're not going to expand the team too quickly, but we will expand it as quickly as possible.
That's right. Okay. Well, it's great to speak with you and meet you, Alex, and congratulations to you and the team there. SWMR looking at Swarmer, which really is taking off today, up over 600% on this IPO. U.S. CEO and co-founder of Swarmer, Alex Fink. Thank you. Think about this technology; it's pretty incredible, and the demand is obviously well surpassing the shares that were available. Coming up next, Technical Tuesday. Kevin Horner is standing by, and he'll highlight the key levels on the S&P 500, CrowdStrike, and Coinbase. Be right back.
All right. Bitcoin still rising. Trying to take out this high from this morning. Bitcoin looking to take out the high of the day. BITX is a pretty inexpensive way to play a bullish thesis in Bitcoin. Let's see what junk bonds are saying. We got Oklo tonight, right? Oklo's earnings tonight.
Real-time market moves, earnings breakdowns, and trade-ready insights. Follow me on X at @Sam_Vardis and connect with me on LinkedIn or Instagram for more.
Trading at Schwab is powered by Ameritrade, unlocking the power of thinkorswim.
What's IBM doing? IBM from this morning. All right, IBM following through.
Including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization. And track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Welcome back to the Watch List. I'm Nicole Pedalides. It's Technical Tuesday, and that means Kevin Horner is on board, Senior Manager of Trading Services here at Charles Schwab. Taking a look at the market, I was saying how we had 3 weeks of selling, and we hadn't seen that for the S&P in about a year. But these last 2 days, yesterday and today, got a surge in up arrows, and we haven't seen that since the beginning of February. So tell me what you're thinking about and the levels that jump out at you when you look at the S&P 500, Kevin.
Yeah, happy to do so, Nicole. It's great to see you even on a St. Patty's Day like today. It's interesting. We tend as traders to get a little overdone as it relates to short-term action. And that means to me that the bounce we've seen over the last 3 days is a little dubious. Looking at today's intraday high, pushed through 67.4.
IBM looking good.
The gap we created last Wednesday into this last Thursday open. And that gap, we shouldn't be surprised to see that we got there, Nicole, but we want to get through it. We want to see some price action above it. We'd love to see it.
IBM looking good.
On a closing basis. If we could start to do that, then we can start talking about that 20-day moving average, which we've been below for 21 of the last 23 sessions. So we've got some trend situation that has not played out bullishly. We've been largely neutral. We should at least make note of the fact that the 200-day moving average resides beneath us, 66.12 currently, but ultimately anywhere between those last lows, let's call it 65.40 up to the 200-day moving average at 6,600 or so, that's going to be a potential zone of horizontal support that we really need to make sure we maintain. So if what we see today here, Nicole, is a bit of a rejection into the downtrend line and basically the continuation of what we've seen over the last few weeks here, then we should be prepared for more choppiness and volatility.
All right, we have to prepare. I mean, especially since oil's up over 40% this month and still around $96 right now.
Yes.
What about a name like CrowdStrike? Why does this stand out to you?
Mainly because this one is at a make or break level. Much like software aggregately, CrowdStrike has struggled this year. It's down 10% year to date, but 24% from the highs it achieved in November. Now, after having sold off into February's lows, I saw that there was a bullish divergence in price versus that of the RSI down below, and we've had a nice rally. In fact, it's been a quick 30% pop off of those lows into what could be resistance. And I say could be because it still could play out as resistance as we got into it last week over the last 5 or 6 sessions, and we've pulled back. And so we are trading below the low of our high move in this rally back, and that could spell deeper retreat. And that's why the 20-day moving average around 406 calls out to us. If we can't hold the 50-day, we're battling it out at the 50-day as we speak, but if it doesn't hold, then bulls should look for opportunity around the potential of the 20-day moving average between 400 and 406 or so. That could allow us to see a higher low in the short term. And even if we do see this as a rejection in the short run, that could be the opportunity that some short-term bulls are looking for. It should not be lost on us as traders. That is, that long-range uptrend, the white line I've got in there, that is completely coincident with that 450 level of resistance. So kind of former support for us on CrowdStrike could very likely become new resistance, and that's the importance of that 450 level that resides above us here.
Okay, very important. And then last but not least, we've really seen a bid for Bitcoin and what's happening with Coinbase.
Yeah, certainly happening as a result of recent bullishness associated with Bitcoin, but the ride here has been rough, to say the least. You got a stock that's off 68% from its peaks to its trough that was just achieved in early February. We are up 50% from those lows, Nicole, and yet the stock is down 52% off of those highs even still. Now, only 10% year to date, but you're seeing something shift here. Notice that rounding off of the 20-day moving average, it's quickly cruising up toward the 50-day. I've got the 187 level as the 20-day, and it might be a level under which bulls might set their risk, and a potential short-term target becomes that red level above us at 230. That's still about 19 to 20 points away from us here. So there may still be opportunity for bulls who are looking for something a little bit on the short run here, but it is an improving chart. But just remember that it doesn't trade on necessarily all by itself. It is absolutely going to move as crypto moves with it.
Yeah, I mean, it went from 139 up to 211 already. And then let's see where Bitcoin is at this moment, just for fun. 74,850. That's among the higher levels that we have seen, getting closer to 75, right? Haven't seen that really since early February, really. All right, Kevin Horner, it's great to see you. Thank you for that. Every Tuesday, Technical Tuesday with Kevin Horner. Appreciate it. Coming up, our panel is standing by. I want to discuss the housing market. Got today's pending home sales data. We're watching rates closely. The watch list. We'll be right back. The final 90 minutes of the trading day. That's when markets make headlines and traders make decisions. From earnings shocks to sector rotations, we're tracking.
All right, IBM looking really strong.
Right into the close. Here on the
All right, IBM looking really good from earlier this morning.
traders driving the action. And in Chicago, we break down the data, technicals, and trades you need to see before the bell rings. Live coverage of the close every single day. This is Market on Close, live weekdays 3 p.m. Eastern, only on Schwab Network.
Opportunities don't stop when the market day ends, so neither do we. Schwab gives you round-the-clock access to over 1,100 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading.
Mike, IBM looking really strong here. Most likely get a follow through tomorrow.
Hey, investors, you know the market moves. Schwab is here to help you move with it. So, whether you're buying, selling, holding, or planning, whether you're ETFing or 401k, saving, spending, or even retiring, you can count on Schwab for market insights, live support, powerful trading platforms, and 400 branches, all at your service, all so you can invest your.
It's amazing. The airport is about 15 minutes away from my house, but you can hear when the jets take off when they're in a certain direction, pointing towards our house. 15 minutes away. It's crazy how sound travels that far. Anyway, I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It is Tuesday, March the 17th. We got about an hour and 13 minutes to go. IBM looking pretty good for the follow through tomorrow. IBM looking good.
Yeah, Nicole, happy St. Patrick's Day. Looking to keep everything green here as we speak. But look, when I look at pending home sales and what I get from talking to a lot of my real estate agents across the country is that people really feel like demand is coming back into the market. I think we saw pending home sales. That takes us through February. I'm going to give you a little bit more real-time data. Right now, from last year, this time, same week, we're up from a pending contract perspective by 4%. And quite honestly, we are up every single week versus 2025 in contracts that are going into signing. That's around 82,000 new contracts every single week, except for those big snowstorm weeks that we saw across, the Northeast.
IBM looking good.
At the end of January and February. And I think that's being driven, and I bet Odetta can, affirm this, but really by the rate environment that we're seeing right now. And yes, there's been some
IBM looking good for the follow through. All right, IBM pushing a bit higher. Looks good, IBM.
It's the highest we've seen all year. However, it's still considerably lower than it was last year at this time. And honestly, when you compound that with inventory, which we've seen creeping up year after year, right now we're up about 5.7%.
IBM looking for a follow through. Bitcoin still moving. Bitcoin. If you bought IBM this morning on that post from earlier, I'd move your stop up.
I'm seeing fragile green shoots in this year's spring home buying season. On the demand side, the weekly data is showing higher pending home sales activity, higher purchase application activity, which is all positive. On the affordability so across the nation. And that's not just a function of lower mortgage rates, though certainly lower mortgage rates help. It's also a function of wage growth outpacing nominal house prices. House prices nationally are essentially flat on a year-over-year basis. And then when we look at the regional variations, there are markets where prices are actually down on a year-over-year basis. And so that's helping push affordability higher as well. So I think the conditions are better heading into the spring.
IBM looking strong.
And what are your thoughts on affordability, Mike? Obviously, it doesn't seem to be that much of a problem at this moment. You're still making the sales. Is it that people are willing to spend more and they've become more accustomed to the six handle on the mortgage rates? Is it the spring season? Are they feeling more optimistic? I mean, what is it?
The six handle positive. Again, we're down a lot more than where we
IBM, you can see. IBM, fairly inexpensive.
We have 33% of the homes right now taking a price cut that come onto the marketplace. Days on market has kind of increased a little bit to about 111 days on market. So it's really bringing this equilibrium into play where buyers have a little bit more room to think and negotiate, and sellers are kind of getting more realistic than what we saw during the big COVID run-ups in sales price. But I do think, again, our biggest sensitivity is around mortgage rates. I love the fact that there's wage growth as well, as Odetta mentioned. But for me, in the buyer category right now, this is the time to be ready to act, to really understand your budget. Have a real lock-in strategy related to rates. We're going to see the Fed meet again tomorrow. Who knows what's going to happen? But you control those three things and be ready to act. And I think the spring season will be a good one for you if you're in the marketplace.
Who knows what's going to happen? You know what's going to happen. Nothing. They're not lowering rates tomorrow. Not likely, but they may. Right? A lot of folks are hoping to do rate cuts this year. We'll see. Again, where do you think the rate environment will be? I mean, for 30-year mortgages, and what will move the market in housing?
I think there are a lot of push and pull factors. Market expectations are that the Fed's going to keep rates the same tomorrow. We might see some downward pressure later in the year, but it really will depend on incoming inflation and labor market data. But I think when it comes to housing, it's really about the fundamentals, which of course rates are important, but about the health of the labor market, consumer confidence, and of course inventory measures. Right now, we're starting the year with higher for sale inventory than a year ago, but we still have a lot of existing homeowners who are rate locked into their homes. And so that's preventing even more inventory from hitting the market. So that's really my question mark for this year is where do we see inventory trends heading for the rest of the year, because you can't buy what's not for sale.
Yeah, and I think about, what's going on in Washington. Mike, that's something you're focusing on too, pertaining to regulation. What's working or not working?
I mean, I think it's exciting that the government is actually trying to get more involved in creating the inventory that we all know we need. I mean, depending on who you talk to, we're about 4 million units short for the amount of household formations. The fact that you got this bipartisan support just last week in the Senate, it's already been through the House in February. They have to do a couple rewrites, but they're really focused on some of the key elements that I think will get more supply into the market around, how do we get quicker through some of these environmental regulations? How do we, increase limits on FHA loans? How do we do things that are going to make it easy for developers to develop in the local market? All those things won't play out immediately, and they won't have an immediate impact on price. But over time, this is a good thing. The fact that the federal government is probably working on what I would call the most substantial bill around housing in a very long time is exciting for me, and I'm glad we're focused on it as a country.
I love how you talked about staging the places, making presentation matters, pricing matters. Mike, just quickly, I mean, right? That's still good old school, good tactics, right? If you're trying to sell a home, tell me quickly.
Nicole, it's all location, location, location. Have a great real estate professional on your side. Know the market data down to the zip code, down to the street, down to the development. As Odetta said earlier, it is all location-based. What happens in Florida is way different than Arizona or California. Have a great real estate professional on your side. Again, be able to move quickly and know your budget. And if you handle those three things, I think you can make a quick, good, well-informed move.
Odetta, you get the last word. Quickly.
Yeah, I think it's all about following the general trend. It's very difficult to time the market. And so I always say if you find a home that you like, that fits your budget and you feel comfortable about your job and your ability to repay that mortgage, then it's a good time to buy.
All right.
Okay, Bitcoin's still going.
Thank you. Good to see you both. Odetta Kushi. Thank you. Mike Meadler, CEO of Century 21, and Odetta Kushi of American Financial. Thank you both so much for being with us. That's going to do it for us here on the watch list. I'm Nicole Petalides. I'm so glad you're with me every single day here on Wall Street, on the corner of Wall and Broad at the New York Stock Exchange. 9 a.m. I see you for the opening bell, 2 p.m. for the watch list. Tomorrow we have a special watch list for Fed Day. So we'll hear from Jay Powell and what happens there. Right now, stocks are still well in the green, but off the highs, okay? So keep watching between now and the closing bell for sure. Market on closes next.
Google's still pushing. S&P still no follow through. An hour and 4 minutes to go.
Schwab Bank Investor Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power for 7 years in a row. With our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get checking account built for investors.
Welcome to Schwab Network, where real-time market coverage meets expert strategy.
From the opening bell to the closing bell, we've got you covered.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com.
Mom, when my grandparents moved here, did they know what our family would become?
I don't even know if they could envision it, to leave everything behind, literally come across the entire world. I think that we totally met what their wishes were. Schwab has
Okay, Bitcoin trying to take out the high of the day. Maybe we get a little rally off the low. Not expecting much from S&P for the last few weeks. We haven't really had much of a follow through. They keep selling into strength, so until that changes, expect more of the same. That said, we do have stocks that are showing relative strength, like Amazon's popping up right now, Google popping up, Amazon and Google popping. Amazon and Google are popping. Oh boy. Bitcoin high of the day. Bitcoin's high of the day.
Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
data-driven analysis from U.S. equities to global macro matters. Schwab Network connects the dots. Watch live, subscribe free at schwabnetwork.com.
Robinhood back to the high of the day. Bitcoin still pushing a bit higher. Bitcoin.
Let's take a look at what is coming up on today's show. We will focus on the volatility in the energy sector and how you could be investing in the space. Later, we'll recap everything you need to know from NVIDIA after CEO Jensen Huang's keynote speech at NVIDIA's GTC conference yesterday. And we have earnings coming up after the close. We'll react live to reports from Lululemon, Oppo, and DocuSign. So now let's take a look at where markets stand as we approach, of course, the final hour of trade here.
All right, who's on CNBC? Who's on first? All right, S&P, no follow through.
We're also tracking some notable movers in the transport today as Delta raises revenue guidance for the year and Uber teams up with NVIDIA to expand autonomous rides in 28 cities worldwide by 2028. We're going to have more on both of those movers coming up.
All right, what's United Airlines doing? The transports look pretty good today. UAL.
How should you be positioned heading into tomorrow? Let's ask our panel. Lori Calvasina, iCapital's Shonali Basic, and Schwab's Kevin Gordon. Guys, wonderful. Great to have you. Excited about consumer staples or consumer discretionary, I think, for quite a while. We got all this pressure building.
Transports look pretty good today.
Right now, especially with the oil shock not helping.
Amazon. Amazon going here. Amazon's starting to go. Watch Amazon. Bitcoin's trying to push. Look at Amazon here. Amazon starting to go. Amazon.
Two of the main sectors that were seen at risk from knock-on effects, while as much of the S&P 500 was seen as relatively insulated from the conflict. I would say tomorrow heading into the Fed, I have a little screen I pull up on Fed Day, after Powell starts speaking every time, and one of the main things we look at is the Russell 2000. And I would say my salespeople, my traders, whenever they're sort of, noodling over trades to do around the Fed, if you think Fed dovishness is going up, you want to buy small caps. If you think Fed, kind of hawkishness is coming back or the dovishness is getting dialed down, you tend to see small caps, kind of be the area that gets hit a bit on that. And so our team, frankly, doesn't think the Fed is going to do much tomorrow. We're always watching the commentary, but I would say, depending on where you're leaning, small caps are always in the center of that storm.
Oh, interesting. Shonali Basic, while the consumer is feeling pressure, small caps are too, and I know you've been sort of on the small caps this year. It could be a bit longer before President Trump's pick, Warsh, gets into that Fed chair seat, and so rates might be higher for longer. How do you think that affects the rotation into small caps and how investors should treat it?
We did feel that for the first half of the year, you would see.
Okay, looks good. I wish we'd get the S&P out of the doldrums. Can't have everything, I guess. But yeah, a lot of stocks look okay. Could be a lot worse. Everything could be selling off like it was last week. We got extremes. When we get extremes, that's when we start to look for opportunities. All right, so this is the descending channel for now. Okay, it looks like stochastics could turn up soon. Okay, so do we get a signal tomorrow? Hard to say, but it's looking a lot better. It is looking better. I do like IBM though. IBM really sweet.
And Lori, as you work through your models, how much of a wild card is energy and that input cost flowing across everything? How much is it changing what you have to factor in?
So look, I mean, it's an important question. I don't want to minimize the importance of what's going on. You know,
Okay, S&P dropping off. Bastards, bastards. Okay, so S&P doing its thing. Okay, look at RSI. RSI is telling you it's spending most of the day down, most of the last couple hours underneath 50. They're not going to let this up yet. I'm trying to keep this underwater.
I gave them 5 choices, and 3 of them would be in sort of the low to no impact categories. 72% were in that low to no impact category on the earnings question. 77% were in the low to no impact category on the Middle East revenue exposure question. It was a little bit different on knock-on effects. That was only 66% were saying it was low to no impact. And so the reality is that, you know, while there are certain sectors that it will matter a lot, our analysts flagged, again, staples and materials across all 3 questions as having significant impact. But the reality is we know a lot of companies hedge. We know that it will take time for some of those energy costs to work through. I also ran a separate study where I looked at earnings revisions against oil prices by sector. I didn't find a single one that was inversely correlated. So the ability of companies to manage through, again, we're not trying to dismiss the impact, but it's something we shouldn't underestimate.
I guess it depends also how long this drags on. Everybody stick with me. Let's get some more on energy from our Pippa Stevens for a check on that gas.
Hey, John, we are watching international gas prices with Qatar's Ras Laffan still offline. Roughly 20% of global LNG supply comes from the Persian Gulf, and virtually all of it is exported from that one facility. The longer it sits idle, the harder it will be to restore operations. Nearly 90% of that LNG heads to Asia, where prices are now rising. JKM at $20 per MMBTU, with Europe right around 17. That means that some cargoes initially heading to Europe are now U-turning and heading to Asia instead. Here in the U.S., Henry Hub trading around the $3 level given abundant domestic shale. Meantime, Brent is holding at 103 with WTI at 96 amid reluctance from other nations to escort tankers through the Strait of Hormuz. Product markets increasingly getting squeezed here with gasoline and diesel.
Why can't everything work? Huh? Why can't everything work? Oh man. It's like it feels like juggling. It feels like juggling at times, right? You drop one of the pins. That's the S&P 500. You know, you got 2 in the air, IBM, Google, Amazon, maybe 3 in the air. and you drop one. S&P is just the one we're dropping for now. Bitcoin looking okay. Bitcoin's at the high of the day. It just cracks me up sometimes that, why can't everything just work together? I guess that's the gist of it, right? That you got to figure out what's working, what's not. IBM does look good though. I got to say, IBM, I'm very happy with what I'm seeing here on IBM. For a swing time frame, I don't want to get in love with it, but this looks good. I always look for that second day after a pivot, the second day, bullish day.
Mortgage rates also higher too. So you are seeing that real economy feed through. And the longer this goes on, then that's when, to Lori's point, we start to worry about whether you're actually going to see a greater feed through into input prices, broader inflation outside of headline. But I do think on the ground, it's a midterm year, John. The feeling on the ground matters.
And it matters, Kevin, too, because even if it does just go on for 2 or 3 months, which I think might be a better case scenario on the pricing side, those feelings carry through into the fall when people have their balance. I don't know how much you are factoring the longer-term political impacts in, but how does all of that frame up what we incorporate in from the Fed tomorrow and how you expect things to play out for the rest of the year?
Well, I think that, to the extent that you want to separate consumer sentiment and attitudes versus actual consumer spending, this has sort of been a post-pandemic phenomenon where, I've sort of called it, what I've described it as, is this depression. You've sort of been in this persistent depression of consumer sentiment, yet none of that has really been reflected in any of the spending data. It's been this really large wedge, whether you want to think about it as consumer spending versus sentiment or large cap corporate America versus the average person and how they feel about things.
Is that because of unusually strong employment and the low price of gas?
I wouldn't call it unusually strong. I would just call it resilient employment in the face of what have been numerous supply shocks over the past few years. I think that has been kind of the perplexing nature of this, because when you slow down as much as we have in the past year for non-farm payroll growth, it's rare and almost you've never seen it in history. Very rare to kind of get to that zero line in terms of growth and then bounce back off of it. Typically, you get to that zero and then you go into a recession. Even in the increase we've seen in the unemployment rate over the past 3 years, if I showed you a bar chart just showing how long the unemployment rate's been going up, you would say definitively we've been in a recession. But if I showed you the magnitude of the increase and then plotted that against the number of years it's been rising, it puts you in a totally different category relative to history. So it's been this grind higher for unemployment, but that's also just sort of the rolling recession nature of the economy over the past several years.
Boy. All right. Amazon looking pretty sharp here. Amazon continuation. Okay, let's take a look at Amazon on the daily. Amazon. Okay, this is kind of like IBM. All right. Not exactly the same, but you have these higher low pivots. Okay. Here's Amazon. You get these higher low pivots. Looking for a higher high now, which would coincide with a test of the 50 and the 200 day. So we got another 7-8 points to go. Can it do it? It's got an ATR of $5. So yes, it can do it, and definitely can do it by Friday at this rate. So looking for Amazon to continue. Okay, so it's a little different. It's a little further spaced out. It's a little more compressed, really. Very similar to Amazon.
NVIDIA's GTC Day 2 is underway. CEO Jensen Huang is holding a press Q&A right now. So let's send it over to our Christina Martinello. She's live in San Jose with the highlights. Christina?
I was actually in the room and I literally just ran out, tried not to make a distraction, but of course CEO Jensen Huang still on stage. And there are several highlights that I want to focus on. So first, on circular financing concerns, the CEO addressing criticism that NVIDIA is funding its own customers, saying, quote, "We finance companies we believe will succeed. CoreWeave, Nebius, Nscale. The reasons we know they will be home runs is that we already see the pipelines. We have the information." On demand, I asked Jensen Huang himself whether NVIDIA would break out individual product revenue so investors can better understand how that $1 trillion figure grows with Grok and storage, et cetera. He didn't actually give specifics, but was clear the number will, of course, be much higher than $1 trillion. Listen in.
It does not include Grok. It does not include storage, Bluefield. It does not include Vera Rubin Ultra. It does not include Feynman. It does not include Feynman Next. Okay? It does not include any of them. Only Blackwell Plus. And it's standing right here with 21 more months to go, which means it is likely to be larger than 1 trillion.
They're setting a floor right now. And on capital returns, that's a number that I think might get lost right now in all of this event. The CFO, Colette Kress, speaking to analysts just a few hours ago, saying NVIDIA will return roughly 50% of free cash flow through buybacks and dividends, up from just 40% last year. If you look at sell-side estimates, putting free cash flow to roughly, let's say, $190 billion this year, that could mean roughly $95 billion returned to shareholders. Double what we saw last year. So even if you're not super bullish on this stock, I thought that was a pretty incredible number. John?
These are some very big numbers that we have to get used to and digest from NVIDIA. $1 trillion is a very high floor. Christina, thank you. For more on that, let's bring in CNBC contributor, Big Technologies, Alex Kantrowitz. Alex, good to see you. Saw you here at the exchange yesterday off camera, but let's talk about NVIDIA. It's weird. NVIDIA sort of has to make the case at this point. It's been doing so well that it continues to do well and maybe can do even better. What have you found to be the most notable points out of GTC?
Well, first of all, it just highlights the expectations on this company. Only NVIDIA could tell you that it's going to make $1 trillion on 2 products or thereabouts over the next 2 years, and people view that as a disappointment. But you have to think about the environment that we're operating in. We're in a world right now where the capex among big tech companies is expected to be about $700 billion this year, up from $400 billion or so last year. And so who knows where it will go in 2027? Maybe it'll be $1 trillion if it keeps up on this pace. So if you're looking at maybe $1.5, $2 trillion are being spent over the next couple of years for NVIDIA to say we're going to walk away with it.
Okay, nice little pop. God, this is a psycho market, huh? Freaking market is psychotic.
They are going to capture the lion's share of that capex. And as AI continues to accelerate, we were talking yesterday about all the different product uses that are available today that weren't available just a couple of months ago. I think NVIDIA is going to be poised to capitalize there.
For a while, a few months ago, people were excited bidding up NVIDIA stock because of how much folks were buying it. And people were excited about the hyperscalers, Google, Amazon, Microsoft, about was for them to grow in AI, even though they were spending a lot. Now there seems to be some lukewarm sense on both. How do you balance the opportunity for the infrastructure makers like NVIDIA, even though NVIDIA is kind of like a singular name there, and the margins against what it means for these big companies that are spending all that money on the infrastructure?
Well, first of all, there was a frenzy in the stock buying over the past couple of years where people just saw the growth that NVIDIA was turning in and they wanted to be a part of it. So they ran to it. But right now we do know that there's a lot of revenue forecasted for NVIDIA, and it has sort of stagnated a little bit over, at least in 2026. So I think there is room to grow there. But as far as where the margins are going to be found, I would argue that even those who are deep within this, whether they're the chip makers, the application builders, the hyperscalers, they're not quite sure. And
Okay.
Every single one of these categories, that they could be the one that capitalizes the most, or they get nothing. Think about model building, for instance. If you're building something as powerful as maybe artificial general intelligence, that should be economically valuable. But if somebody else builds it, can you hoard it? Can you charge a premium over it, or does it commoditize? Same with chips. We're seeing this with the inference conversation around NVIDIA right now. You would think that NVIDIA, as AI gets adopted more, would be in the best position. I think it probably is. But as we move from training to inference, it's going to have much more competition. So my perspective here is that it is dynamic, it's volatile, it's changing rapidly, and investors are just going to have to hold on to their seats for the time being as we see this shake out.
One of the areas we perhaps don't talk enough about is the software for data management that sits in between.
Okay. All right. So a few things lifting. There goes Amazon. Amazon. Beautiful look on Amazon. There goes Amazon.
Thinking about the likes of Snowflake, Datadog, etc. How do you think about their place in this ecosystem and maybe their valuations or the amount of conversation there is about them relative to the rest?
Well, I think they're going to be very important, and it goes to this broader conversation around: will software be worth something, or will it be worthless as AI takes off? Well, even if you go into an era where you're doing much of your computing within the chatbot, you're still going to need good data to be able to work off of. It's not like all that's just going to be stored in the memory of ChatGPT, no matter how good it gets. So I think these middle layer companies do play a very important role, and they're not going to be replaced anytime soon. So even though we might see some hysteria like, oh, AI can build an app, which it can, and it's impressive, I think it's very important for investors to sort of separate that functionality out from the core infrastructure that a company like a Snowflake or a Datadog is providing.
And when Databricks comes public, we'll be talking a lot about that too, I'm sure. Alex, thank you.
All right. So we had to wait all day long for S&P to bounce a little bit. Such a drag. And it's still in the middle of the range. That's okay. A lot of other things are moving. Okay, so eventually the S&P will gonna surface. You can see Bitcoin had a nice trend. The 100 period moving average on the 1 minute chart is almost a straight line. That's a nice trend. Amazon looking good. IBM looking good. Google looking good. Tesla trying to turn. Tesla turning back up. So all is well. Looking a little better. All right. We just talked about Google, Amazon. All right. Tesla trying to turn back up. Tesla. So not bad. Not bad. Notice Tesla. Notice where RSI was. How that worked out. RSI. RSI buy. Yeah, that looks good. Tesla. Still not feeling it for Tesla. Still not feeling it. Looking for it to get something going here. It's sit on top the 200-day moving average for the last 2.5 weeks. Amazon off the high. Should follow through tomorrow. Going to have some people take profits, no doubt. Still very nervous about the markets. Traders still nervous about the markets are going to take profits most likely. So don't be surprised to see prices move back a little bit. Google's still going though. Google's still going. Okay, Amazon, a little profit taking there. Google looks good. Google. All right. Nio, Mio, Mio. Okay. We got 36 minutes to go. 36 minutes to go. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. Tuesday, March 17th. Remember, we got VIX expiration tomorrow. Don't forget, VIX expiration tomorrow. All right, so that's what we're thinking. VIX. S&P. S&P. Okay.
Welcome back to Closing Bell. Our Leslie Picker just caught up with Orlando Bravo. He's founder of private equity firm Thoma Bravo. Joins me now with the big takeaways. Leslie, I've got real questions about private credit and his outlook on what's happening there, not just with his exposure, but everybody else's.
Yeah, so Keith, Thoma Bravo has about $25 billion in private credit exposure, and he said the book, at least from his purview, looks okay. Thoma Bravo, as you mentioned, though, is the largest software-focused investment firm spanning private equity and private credit. So it's really at the intersection of the market volatility.
IGV. There's a lot of calls this morning noted. Okay, big fade today. Same thing with Microsoft. Okay.
Now, there was a lot of excess in the business in general, private equity, private credit, and software in general since 2020, 2021. Some of the issues now in those sectors that relate to software are due to those excesses. And some of those issues are also due to the interest that generalists had in buying software companies. There are so many cases that we've seen where generalist investors that are good in general have entered the space and have bought software companies that really lack the franchise value, even though their gross retention and net retention metrics look good. And those companies now have a bit of a more uncertain future with AI.
Tesla, a little bounce here on Tesla. Watch Tesla. Okay, higher lows. ABCD pattern, pretty obvious. I noted that earlier. All right, ABCD pattern. Tesla, looking for a follow through. Higher low. Okay, ABCD pattern. Look, MACD is crossing. Looking good. Looking good. Okay, ABCD pattern on Tesla, perhaps. I got TSLL shares, so I'm looking for a follow through. Okay. All right, Bitcoin, show us the money, huh? Bitcoin, a little bit of profit taking in the day. You shouldn't be surprised to see profit taking. Markets are very fidgety. People are quick to take profits. Not really a swing set up yet, except for a few names like Amazon, Google, perhaps, IBM. Maybe Tesla can get something going. We're looking for stocks that'll start trending like the energy stocks did since January. That was a fun trade. Chevron, ExxonMobil, those are starting to back off a little bit. Let's see what those look like. ExxonMobil, we figured we were hitting the highs. We saw calls were very expensive. Okay. And around 12 o'clock, we started to fade. Chevron, Same thing. Okay, these are getting a little bit overexposed. People have very expensive calls. If they don't take profits, they're even though the price action is higher, they're going to lose a lot of implied volatility in those calls. It'll start to compress. Okay. Let's see what else is working here. Baker Hughes, BKR, that popped above the 50-day. That faded throughout the day as well. Okay, it looks like we're starting to see a little bit of a change in direction. Now let's see what the New York Fang looks like. New York Fang starting to get a bounce. Okay. Higher low. Higher low. Remember IBM. IBM. It's not a New York Fang, but IBM. Higher low. Amazon. Higher lows, plural. Higher highs, plural. Google. Okay. Higher low right there. Okay. This needs to follow through to get another higher low, higher high tomorrow. 60-minute time frame looks good on Google for the follow through. If you're swinging this, I like the idea. Very solid price action. Even into the end of the day, no profit taking yet. Google's still going. People are chasing it. Shorts are covering. Shorts are covering. Western Digital looks good. All right. Looking forward to some trend days in S&P 500. Hopefully, when we turn the corner, not there yet. We still have the possibility of a fade Wednesday, Thursday, Friday, like we did last week. We popped on Monday, Tuesday. They sold into strength. And Wednesday, we did the same thing, sold into strength, and then dropped off, faded into Thursday and Friday. So a lot of these stocks are turning the corner. Hopefully, that'll help. So far, it looks pretty good. But be aware that that's a possibility for tomorrow. Bitcoin, watching that come back in a little bit. Bitcoin, a little profit taking in Bitcoin. This one's just turning the corner now. Bitcoin's just turning the corner. Okay, so the daily showing a 9 EMA crossing up. The 21 day is probably going to cross, I would say Thursday or Friday at the earliest. Once the 20-day crosses up, the new trend, obviously bullish, RSI rising, MACD stochastics climbing. You can see the volume. So looks pretty bullish. We're into the Kirby over here on the left. The ceiling's at around 83,000. So we could see about a 7-point move, maybe 7 to 8 points from here. That would be a good trade. All right. Hope everyone's having a good day. Coming into the closing bell. We've got 26 minutes to go.
Rising oil prices every day. We also see it at the pump. But if you take a step back, the top 10% of earners now account for nearly half of all U.S. consumer spending, and Delta has positioned itself accordingly to capture that segment. Their premier revenue, first class, business class, upgraded cabins, has more than doubled in the last decade. American Express pays Delta $9 billion a year for their co-branded credit card partnership because Delta's customers are spenders who use those cards frequently. Meanwhile, discount carriers serving budget-conscious travelers, they are struggling. They cannot raise prices.
Bitcoin off the high.
Customers. So when you hear the consumer is strong,
IBM. Okay, a little profit taking in IBM.
lower middle income households are pulling back.
It's the top of the K, isn't it? And we often talk about that with this particular name as well. How much of this, speaks to the fact that this
I think that the commentary from
IBM. All right. So these same profit taking, not surprising.
severely rising fuel costs, and they have been making adjustments in a couple of ways. It really airlines can add fuel surcharges directly to the ticket. Those went into effect within days of the oil spike. Domestically, airlines have to raise base fares. We've seen 2 rounds of fare increases in just the last 2 weeks. Historically, the industry recovers fuel costs on a 2 to 3 month lag, but only airlines with strong brands can execute that successfully. As I said, the discount carriers operating at break even, they cannot raise prices without losing customers to Delta and American. And as you said, Delta also has the advantage of owning the refinery called Monroe Energy. It helps them to hedge against spikes in refining costs, which are called crack spreads. That benefit starts showing up in their numbers in Q2.
You mentioned the lower cost airlines perhaps are not as well positioned, but if this is a pricing power test, this Middle East conflict, who do you believe is well positioned to have the pricing power to pass on to the customers or pick up the tab in this environment?
It was interesting. I think Delta CEO Ed Bastian recently said very clearly that carriers at the lower end will have to significantly alter their business plans. That typically means route cuts, capacity reductions, or restructuring. I think here's the context. Delta generates 55% of the entire airlines industry's profits with only 20% of market share. It's that concentration that tells you how uneven this industry has become. When your largest cost item doubles and you have no margin to absorb it, your options are limited. I expect consolidation to accelerate. Weaker carriers will either shrink significantly or need to be acquired.
It's certainly an interesting read and a window into the Q1 earnings season, which of course will kick off next month. I'm just wondering, across all the names.
Micron, what are you doing, Micron? Up 4% on the day, Micron. Big move on Micron's part.
In a situation like this, and who might be getting those margins squeezed? Because we heard from Honeywell, I mentioned this at the top of the show earlier today as well, which seemed to suggest that it could take a revenue hit, although I know it came out at some point during the day and retracted that or said it wasn't going to take as big of a financial hit from that. But just talk us through what you're seeing as far as any other sort of corporate industry.
Yeah, I think that, as you mentioned, the K-shaped economy is really going to come into play here. There's so many moving variables at this moment with the war, with oil prices, with Fed policy. Will the Fed be able to lower interest rates? They seem to be quite
BITX, Bitcoin, still going.
Prices up already, so I think that maybe their options are limited. I think everybody's going to be watching earnings season very closely because it's going to come down to corporate earnings. And the big question, as you said, which companies are going to be exceeding expectations, which are going to be struggling. I think whether it's retail, whether it's consumer staples, whether it is, I think across all industries.
Lulu, I got a question of whether I am taking anything. Not really. I'm not going to take a Lulu trade for earnings. That said, if you're thinking about Lulu, let's go check out. Let's check out what Lulu is saying here. Lulu. Okay, puts are pretty expensive as it trades near the low. Think about selling put spreads. Lulu. Okay, what kind of expected move are they looking for, Lulu?
Kick off the morning with the data and the decisions moving markets. Morning Trade Live breaks down the macro moves driving the price action, from Fed policy to global growth to inflation prints and geopolitical risk. Smart, fast, and always live from Wall
Morning Trade Live, where the markets meet the macro, weekdays at 10 a.m. Eastern on Schwab Network.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Do you like using charts when analyzing your stocks? Our technical analysis webcast series breaks down different charting techniques like trend analysis, price patterns, moving averages, oscillators, and much more. Best of all, you can ask questions directly to an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
I'm Kevin Green, and I track options flow daily, identifying who's buying, who's selling, and how it's going to impact the markets. Watch live on Schwab Network at schwabnetwork.com.
Trading at Schwab is powered by Ameritrade, giving traders skills with tailored education. Get an expanding library.
All right, what are they looking for on Tesla? I mean, on Lulu?
All crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals. You can spend
10%.
searching and more time learning.
10% on Lulu. All right, so let's take a look at Lulu. 10% would be about $15, about 145, I guess. 145, 140.
Sure, yeah. This company is part of the utility sector, not really known for its high-flying volatility. Typically, are more stable companies here. But as you can see, up 118% this year, which is actually significantly down from the highs that we saw earlier, over 500% at one point. But we can see as well, the S&P during that point, or during that time frame, only up about 18%. These are some of the companies that are in this kind of nuclear energy space as well. What makes Oklo a little different is that they're, for one thing, they're commercializing nuclear fuel recycling, and they're trying to convert nuclear waste into usable reactor fuel. But the other thing is that, kind of obviously, a major investment is OpenAI CEO Sam Altman. So OpenAI is very aggressively pursuing this kind of vertical integration strategy where they would own the means of producing the massive amounts of power that their AI uses here. So kind of to take that one step further, keep in mind that this vertical integration idea means that they also want to reduce their reliance on chips like the likes of NVIDIA and kind of develop their own systems. They had this very large agreement with Broadcom recently. So just kind of some food for thought about this space.
Yeah, it's interesting, isn't it? It's got this sort of partnership with Meta as well. But I mean, that chart really says it all that you're standing next to, Rick. I mean, this stock has had an enormous amount of capital pumped into it on the thinking here that this is going to be this reliable base load power that's going to promise to really power everything with respect to artificial intelligence. So just walk us through the technicals specifically for Oklo.
Right. So here was kind of this big run-up that we were pointing out earlier here. You can see it did sort of materialize into a head and shoulders type pattern here with our neckline coming in around 115 or so. From there, we have moderated somewhat. That level near 120, 115 did come back into focus once more. That was a high point after our recent attempt to rally once more. From there, though, we've declined once again. Now our shape is a falling wedge type shape here. Our two downward sloping trend lines are converging toward each other here. It's a rather narrow and kind of tight range here, but it's also coincided with a supportive area. If you were
Okay, what's ARM Holdings doing? ARM.
Level represents some old highs, a low point there. These green lines here also represent some low points after our gap. So between about 44 to 58.
Okay, let's go. Let's see. Lulu. Put credits make sense, or you could do an iron condor. Put credits. Got 15 minutes to go. 15 minutes to go.
So our two longer-term moving averages that we follow are gold 63-day quarterly, our orange 251-day yearly exponential moving averages both come together around 73 to 75 roughly. So that provides us with a convenient potential tipping point to keep an eye on in terms of resistance for a breakout possibility here. So when we also look at our volume profile study, we can see that the notable trading areas, one is down here, but that's kind of the first phase of this chart. This area from 22 to 30 has been left in the dust more or less here. Now 50 to about 80, once again, a rather broad range. That's kind of the general trading area here, is punctuated by our point of control, this thick red line at 66. That's the head.
Okay, 145. I guess Lulu 145 is a 20 delta, is it? Lulu 145 is about a 23 delta. Google's still pushing higher. Google. Just less than 14 minutes to go. Google looking pretty good here. Google looking very strong. Google. All right, note the Bollinger Bands are pretty tight. So once Google decides on what it's going to do next, those Bollinger Bands are going to open up. Implied volatility will pick up too. That's going to increase the value of your calls. Okay, the value of those calls are going to increase. Google call spreads, risk reversal 7.2%. So puts are very expensive. Buy some call spreads. Calls are cheap. Google looking for a follow through. Bollinger Bands are tight.
Shaping the markets in real time. This is Schwab Network. Subscribe at schwabnetwork.com.
How's it going? First day, so sometimes, next, try it again. You could have done better. Please. Same goes for where you invest. Level up and invest smarter with Schwab. Intern, this place is incredible. It's where I get
Okay, so we can see right here, Google buying call spreads makes a lot of sense. They're very cheap. So once implied volatility picks up and Bollinger Bands open up, the value of your calls are going to explode. Okay, Bitcoin did pull back in a little bit from the high.
Stay connected to the markets with Schwab Network. Tune in 24 hours a day, 7 days a week on schwabnetwork.com and on all your favorite streaming services. Schwab Network.
Okay, looks like Microsoft a little short covering at the end of the day. Tesla looking pretty good. Here's Tesla. Microsoft with a little short covering right here. Microsoft a little short covering.
Well, we have seen Venture Global actually catching a little bit of a bid here over the last couple of weeks because of the war in Iran, as well as the potential optimism for LNG demand to actually increase here in the United States. This is only one of the few producers that could actually export LNG at scale. It's around a $32 billion market cap, and it does have some headwinds when you're looking at the debt to equity ratio.
Google and Amazon at the high of the day. Nvidia pulling back some more. Nvidia is just not exciting people enough to buy. I think that'll probably change in the short term, but for now, Nvidia not that interesting. Microsoft trying to turn the corner, a little short covering there.
Over in the Middle East, which we are seeing around 20% of the global supply actually being disrupted at this point in time. Now, we have to also be mindful there is still a very big legal dispute for this company. It's actually with some of the bigger players within this space, like Shell, as well as others, where there's a dispute about delivering LNG at a certain time that they fail to deliver. That's the accusation at this point. Some of these legal cases have been resolved. Others are still a little bit more outstanding, which has really put some pressure to the downside on the shares. But this is one of those ones that actually could be a long-term beneficiary because of the readjustment and realignment of supply chains and LNG supplies on the global stage.
Yeah, I mean, it's up like 90% or so year to date. So over the course of the year, it's outperformed as well, up about 20% or so. I'm just looking across some of the analyst consensus. I mean, it's a bit mixed across the sell side. I'm just wondering, what the analysts have been saying around this one, how it stacks up against some of the others as far as its peers are concerned, KG?
Well, the biggest peer and well-known peer right now is going to be Cheniere Energy, which is obviously a little bit of a bigger company, around a 51.
Okay, Microsoft, a little pop there off the low, just shorts covering. Coming into the closing bell, 7 minutes to go. Bitcoin coming off the high. Bitcoin will trade after hours, of course, 24/7.
So it is a little bit more mixed, higher beta trade as well. The stock's up around 6% today. It's not out of the ordinary.
Lulu, I just posted some information in the spreads channel if you want to take it. Oh, Vonage, VG. We were looking at that one for, it's on the watch list, VG. VG. Vonage got an upgrade to what, 13, they said? VG from the watch list. Just caught an upgrade.
Opportunities don't stop when the market day ends. So neither do we. Schwab gives you round-the-clock access to over 1,100 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour, you can trade brilliantly with Schwab.
I'm Alex Coffey.
And I'm Jenny Horn. This is Next Gen Investing, where we track the trends shaping tomorrow's market.
From tech to energy, crypto to consumer, we focus on what's driving investor sentiment right now.
Clear analysis and forward-looking market coverage every trading day.
This is a make or break level for this stock.
All right, Tesla moving up. Tesla moving up end of day. ABCD pattern on Tesla, looking good. Amazon at the high of the day going into the close. There goes Microsoft. Microsoft coming off the low. Microsoft short covering.
Same goes for where you invest. Level up and invest smarter with Schwab.
Morning movers brings traders the biggest headlines to start
Apple
the day.
bouncing.
Volatile overnight swings.
Futures, a little pop there.
Analyst calls. Get your watch list ready. 8 a.m.
Selling into strength. All right, anticipating there's going to be more of the same until we get a reversal in this trend. We got to see the 60-minute turn up on a lot of these stocks. The usual suspects that were higher today, all doing well. Going into the close with 5 minutes to go. ARM Holdings at the top of the list. Micron, Axon, Booking.com, Baker Hughes, LRCX, Clack, Diamondback Energy, Airbnb, Charter Communications, CrowdStrike, On Semiconductor, Datadog, Mondelez, MicroStrategy, Marriott, Google, Applied Materials, Qualcomm, all of those filling out the top 25. So the markets are doing well. Breadth looks good. Advancing stocks beating out declining stocks. Okay, we're finishing up with 318 stocks on the S&P 500 advancing. The Q's 66 advancing out of 100. Looking good. S&P still no follow through. All right, so Amazon seeing a little profit taking now into the close. Same thing with Google. Amazon and Google, a little profit taking. Both of those. 3 minutes to go, a little profit taking end of day. Looking for a follow through tomorrow. IBM, same thing. IBM looking for a follow through. Okay, so IBM at the high of the day. IBM high of the day. Okay, Vonage caught an upgrade. T-Mobile, Nokia, all of those. All right, there goes IBM. Nice finish. IBM, nice finish. IBM looking good. Okay, 1 minute to go. A minute to go.
Exposed in a positive way to AI or a negative way. Is there anything that AI is driving in the data yet from your perspective, other than sentiment?
Well, I do think there's a lot of anecdotes. Now, anecdotes ultimately bubble through to hard data. But right now, what we have are companies really aggressively trying to figure out ways to implement AI, to gain efficiencies through AI, and those concerted efforts are going to pay off. We're very confident about that. We actually think the tech sector here is well positioned. We think once we get to the other side of the geopolitical chasm that we have right now, the tech sector, which has been outperforming, is going to continue to outperform the rest of the year. And a lot of those key concerns in technology are behind us now.
One more quick one before we get to Bell. Is Powell for longer, which could happen if they can't get Washington because of the telephone?
Okay, nice finish.
I think the Fed is on the back burner, and the reality
reality is it's going to be a while before the Fed is I think it's not a huge difference right now. Yeah, I doubt that he will tip his hand too much.
All right, folks, that's a wrap. Have a great evening. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. We're looking for a follow-through tomorrow, hopefully, in some of these names, IBM, Amazon, Google, Tesla, maybe even Microsoft and Apple. Have a good evening. Take care. We'll see you tomorrow. Ciao. We got Lulu earnings coming up as well.